Welspun Enterprises, they are L1. They have not bagged the order of 500 million, but L1 is as good as bagging, and which is why I think you're seeing some action on that stock, 6.5% higher. Do you track these on the chart, Srikanth? Welspun Enterprises, Inox Wind, or for that matter, Star Cement?
Yeah, for Inox Wind, yes, technically the stock is very strong. Yeah, it is very strong based on its technical formation. And whenever there is a trending activity and the stock is like crossing its previous high, most of the time we track these particular stocks. And if the sector is in particular performance, then I think this particular stock is definitely going to do well. Based on its technical formation, the stock has completed its correction in the near term, and now again it is trading above its previous high. So one thing is very clear, that it is heading for at least 600 in the near term, but eventually, based on its complete wave structure, it is heading for at least 800. So Inox Wind is definitely a buy. Currently, it is far away from its recent lowest level of 400 rupees. So the strategy should be to look for adding position if there is any correction close to 540, 545. But at these levels, if there is any spike up to 600 rupees, then there one can take some profit.
Right, that is the word coming in on some of these names that Neeraj mentioned. Power Grid as well in pre-open is looking pretty good. They've managed to record a 10.5% YOY growth in net profit to come in at 4,028 crores, despite a higher tax cost driven by healthy operating numbers. Revenue from ops has also grown 2.6% year on year. Pankaj, do you track Power Grid? It's, of course, eased off a little bit, but still indicating to a gap up in trade. Some of these state-owned electric companies look good to you?
So Power Grid, I think overall top line, bottom line performance look muted to us. I think numbers are definitely not that inspiring. But yes, it's in an interesting space. So entire power as a pack looks quite interesting. So from that perspective, this company also looks good to us. I think the only positive was there was a decline in the interest cost. Otherwise, like I said, within the overall PSU power pack, I think NTPC looks a lot more better. Power Grid numbers, I mean, we are not looking to sort of chase the stock post numbers as of now.
Pankaj, earnings from the consumption space. Tata Consumers posted a pretty good set of numbers. Britannia as well was a little bit of a mixed bag. Nestle was also on the same lines, but out of the three, the outperformer has been Tata Consumers. Amongst these names, would you be looking to add anything to your portfolio, recommending this? Surprisingly, the stock is actually not looking good in in pre-open trade this morning.
So I think Tata Consumer has already sort of done well in terms of price performance, and we like the perspective that on the food side there are a good number of launches, so it's a fairly large segment, and they're going to sort of launch a number of products like poha or a lot of other kitchen items. But I think this entire FMCG as a space, I think our sense is that one thing is clearly coming out is that the rural segment is still not really great for most of them. Volume growth has been sort of tepid. The margin profile is already one of the highest, and our sense is that they're getting decent competition from the local brands. So this space, our sense is that is going to do more of a time correction. Really not been recommending these entire pack, and don't even suggest also. So while we may not see price correction, but time correction definitely is on the cards for most of them.
Pankaj, sorry, Srikanth, you want to come in on trend, and then I'll come to Pankaj on those earnings as well. Phenomenal stock performance in yesterday's trade, hit upper circuit. Today, you think there will be an entry point at some stage, and if another 3.5% pre-open is what we are picking up on. At 3,735, is this still a buy?
Yeah, it looks like the way there was like volume, and after a very long time, we are seeing volume in the FMCG space. So I'm going to say volume growth in the FMCG space. So I'm of the view that yes, if there are any investments, then just hold on to it, because it is heading for the levels of at least 4,500 in next couple of months. It will take time, but I think eventually it is heading for those levels. But with a trading point of view, I think it is better to stay away because now the stop loss is far away from its immediate support levels. But in case if it comes back to the levels of, let's say, 3,500 or 3,550, then it's a best pick to buy and hold.
Pankaj, what did you make of those earnings? Spectacular, I would have said, and not just this quarter, but in the last few quarters, Trent has, over-delivered on its earnings front.
Absolutely. I think, forget quarters. If you look at last 4 years, this company has delivered about 35% CAGR kind of a growth, which is very impressive. I think the new format Zudio is contributing quite significantly. I think, so this company has been a sort of a standout outperformer. The only challenge is that valuations are definitely rich for this stock. But like I said, this is one company, if there is a correction, one should really look to sort of add it more, because I think they have really cracked the value fashion retail segment, and one of the best companies to sort of look at.
That's the beauty about some of these businesses. I mean, we've seen how people waited. I mean, there's been a time correction in D-Mart, yes, Avenue Supermarts. Not as much of a price correction. Trent is a completely different beast with what Zudio has managed to do. And it's quite stunning, really, the kind of gains that the stock has made in the last 12 months and before that in the preceding 12 months as well. So it's just been, I mean, if you pull up a 5-year chart for Trent, you'll just see that almost at any point of time that you would have bought into Trent, you would have made money. Just that's an expensive stock, and look at the kind of gains that it has had in the last year and a half. Quite spectacular, really, what Trent has done. Quite stunning.
Sorry. Neeraj and I was talking about this to Rick outside, and we've talked about how Trent has delivered, not just on the stock, but in terms of earnings as well. And this is a Tata Group stable. You've seen that with Tata Motors going all the way from 67 to 1,000 rupees. We talked about that yesterday. Numbers of Tata consumers, Tata Tech. Now, this explains why Tata was the first Indian conglomerate to cross the 30 lakh crore market cap in yesterday's trade. So, I think as a group entity, every company of theirs, if not turning around, is putting out their best foot forward and doing exceptionally well.
Yeah, and to be fair, TCS has largely, I mean, that's the heaviest weight, and that's largely played the cards well. I mean, 1 or 2 quarters notwithstanding, it still trades at a premium to the others. So, yeah, the market certainly gives them that credence for sure.
So it is one group that is been a street favorite, and for good enough reason. Shrikant, we've talked about a bunch of stocks, and I want to get your quick view on what are you doing at this stage with some of those real estate names? We had disappointing numbers from Sobha this morning. Of course, we will try and connect with the management to understand why the numbers haven't looked as good as as good as the brokerages would have liked. But Brigade, on the other hand, reported well. Prestige has been doing quite well in terms of stock market performance, at least. In the real estate pack, if I had to ask you to pick your favorite, which one would it be?
Yeah, these stocks did really well, but in this particular space, we like LoRa developers, Macrotech developers, which is currently trading around 1130, 1150. The formation is quite constructive, and whenever there is a rally, the stock is not participating into euphoric mode. So I think the stock is consolidating and going up, which is positive for the stock. So based on its technical formation and based on even fundamentals also, we are expecting stock to move towards 1220, 1250 in the near term. But in the long run, we are expecting stock to move towards 1500. I think a lot to come from this particular stock. Again, the strategy should be to buy on dips.
Gentlemen, actually, Shrikant, can I ask you if you had to bet on one stock for this morning? You've seen the pre-open rates. Lupin is already 6% higher, so you probably can't buy that. Or maybe you can. So post the pre-open rates, with the rates having settled, what is that one stock that you will buy? Quick 30 seconds.
Yeah, I would like to go with Indus Tower, which is around 220, 225. I think the stock can move to the levels of 240, 245 in the near term. So Indus Tower looks really good to buy.
Okay, it's 226. Shrikant Chauhan says stock to buy is Indus Towers. There's some action that we've seen in Vodafone yesterday as well. Samina had marked it on the closing show, and Indus Tower kind of, at times derives that strength, if you will. Let's see. Shrikant believes that there is more in store there. We'll talk about Pankaj Pandey's one top fundamental idea after the open rates are done. Mind you, stocks like Lupin, Stocks like Kalyan Jewelers, stocks like Inox are all slated to have some very strong gains on open. But here come the first trades. This Thursday morning, ahead of policy, we are showing a spurt of green above 22,000 for the Nifty yet again. So good start to the trading day. The mid caps, actually first the banks, 200 points higher, so not doing bad, which suggests that IT is probably yet having another down day. Cognizant numbers didn't help either. Mid caps 0.67%, small caps maybe even better. No, 0.6%, so in line. One would have expected banks to be quiet. Maybe 0.5% is quiet. Let's pull up the heat map and see what's moving and what's not. Well, any losers firstly? Tata Consumer down about 2%. In the FMCG space by and large, Nestle, ITC, Tata Consumer, all three looking wobbly. Now the gainers. Power Grid after 2 days of a fall, consistently falling. Post numbers 3% higher for Power Grid. BPCL continues its way higher. SBI 1.3% higher. That was one other Srikant Chauhan idea. That stock has done very well. There is some strength in NTPC, M&M, HCL Tech, Adani Ports. It's fairly widespread. We don't have a particular sector dominating, to be honest. Life insurance continues to do well with SBI Life participating, but frankly, I believe the action lies outside the index, because on the index, frankly, the two names which stand out are Tata Consumer and maybe Power Grid, or maybe, Samina, you could argue that PSUs are having yet another good day, because from a Power Grid to a BPCL to NTPC to SBI, it is the PSU names which are the top draw.
I'm very surprised Tata Consumers is reacting the way it is. Those numbers were good numbers. Brokerages seemed pleased. There was a one-off cost that we saw, but that was on back of the acquisition costs. But apart from that, the numbers were great actually. 2% lower. We'll see how the day plays out. It is off the day's low point, so I think that's what some investors could be taking heart from. But your Power Grid is your shining star, very good set of earnings, and the market is rewarding it. Well, a quick check on a whole lot of broader market stocks. Lupin on back of a strong set of earnings, and it's not just this quarter. Lupin quarter on quarter has impressed the street. Earnings are better than what they were expecting, or the street was expecting. Operational efficiency, North America sales, domestic sales, no observations, garners well for Lupin. The stock trades with a gain of 2.6%. Of stock Neeraj has been mentioning this morning is Indri Whiskey, which is Piccoli Agro. Very, very good earnings. The stock gets a thumbs up. Markets like the sound of that. Up 5% is what we get on the counter this morning. Star Cement, again, we've had a good quarter for the cement major. A lot of the cement companies, remember, have done quite well. We saw that with the likes of Shree Cement as well. Star Cement also reporting earnings, and the stock is reacting on back of those earnings. The counter trades the gain of 3%. JK Tyres yesterday, Apollo Tyres this morning. Again, strong earnings from Apollo Tyres. Auto Ants generally has been doing well. The stock, though, a little muted in trade despite the fact that it's been a good quarter for the company. Well, let's see the stocks that are reacting negatively to their numbers. So we had Soba Developers posted numbers below what the street was expecting. It's not done as well as its peers. There's been some delays in completion of the projects. On back of it, Soba sees a cut of 5% in trade. Gujarat Narmada, another fertilizer major, seeing weakness. It's a seasonally, or rather the last couple of quarters has been weak for fertilizer companies on back of the cut in subsidies and the fact that sales remain muted. GNFC sees a cut of 4%. Power Grid, of course, Neeraj has already mentioned that, is looking fantastic on back of very, very strong earnings. So that's largely the broader markets reacting to earnings. But Neeraj, beyond that, an SJVN on an order win, Welspun Enterprise on an order win, are all actually looking quite good this morning.
Yes, they are, Samina, and that's a set of other set of stocks that you should mark. And by the way, so pull up SJVN, pull up Welspun Ent as well, and let's see what that one is doing in the session. Welspun Ent is about 4.5%. Now, stocks which were locked on an upper circuit yesterday, TRF, because of the merger getting called off, was up 20%. I reckon it's up 20% yet again. So good, strong move there for TRF. Then the other one was PAKA, PAKKA. That one was up 20% on that. Releasing the plans for expansion. That stock is up another 7% today. So that is doing well for itself. There is strength in Yes Bank. That's the third one. 3 or 4 days on a trot now. Yes Bank has done very well, I must say. Someday, viewers, I promise you, sometime in the day today, whether on television or on our social handles, we'll put out some ideas about what is really happening with Yes Bank. Splendid showing the last 3 days. This week's chart would have been exceptional for Yes Bank. We'll ask Shrikant Chauhan about it, of course. But just a couple of other names. LIC, viewers, 3% higher, if I'm not wrong, 4.5% higher now for LIC. Life Insurance Corporation of India, PM Modi mentioned this yesterday in the parliament about the fundamental strength of this one, and that is doing really well. What is not doing well is IREDA, down about 5%, despite the management saying that the green energy opportunity is about 10 trillion or thereabouts, some large number that they spoke about. So that is interesting. And lastly, Inox Wind Energy, and CESC, three names which are newsmakers today. Inox Wind up 3%, Inox Wind Energy, the holding company, up 5%, and CESC up 2%, because that's the company for which they'll be doing this 1500 megawatt worth of work. So, all in all, newsmakers moving around.
Yeah. And talking about Yes Bank, Neeraj, I think the stock has been moving since the HDFC Group got the approval to, of course, increase their stake in Yes Bank to 10%. Now, that's a trigger or not is anybody's guess, but the market seem to believe so, and the counter gets a thumbs up in trade again. You talked about LIC. There's also earnings expected later on in the day, so that could also be one factor that the markets may be preempting a good quarter for LIC. LIC also takes all its other insurance players higher this morning. So across the board, insurance is seeming to be a good enough theme. And we've seen that sporadically for a large part of this week. Stocks like New India Assurance, General Insurance are all trading higher along with LIC. So that's a space or a pocket, if I may say, is actually trading positive.
Yes, indeed. In fact, can we take that question to Pankaj Pandey before we thank him? Pankaj, life insurance plays anything out there?
I think our sense is that SBI Life is a lot more better placed. I mean, they've got a very nicely distributed portfolio across non-par, par products. And they have been sort of relatively doing well compared to competition in the last 1.5 to 2 years. So I think that is the only stock what we would prefer in the life insurance space.
Right. Thank you, Pankaj. Great having you today on the show. Of course, we will catch you soon. That's the view coming in on insurance play. On the sell side, Sobha, like I said, had a disappointing quarter. The stock is one of your top losers, down 5%. Paytm, after recovering quite, I'm not sure if I can say quite well, but after seeing a recovery in yesterday and day before yesterday's day of trade, the stock is back down below 470, 5.5% lower this morning. JK Paper, weak earnings continues for the paper manufacturer. Another quarter where the disappointment is obvious. The stock sees a 4% cut. Fertilizers as well, not looking good. EIH, after a very strong up move yesterday, is seeing a little bit of profit taking. 3.5% cut on EIH is what we have. Shrikant, you want to come in on some of these insurance stocks? Constructive on them? Shrikant, you're on mute. I can't hear you.
Yeah, Samir, I'm extremely sorry. So, most of these stocks have fallen to their extreme levels in the past, but yes, there are few stocks which are really doing well, and in that LIC, the way it has crossed its IPO price and volumes are there and specific news flow, I think this stock is going to do much better in the near term. Based on its technical formation, I'm expecting stock is moving towards the levels of at least 1300 to 1400. It will take time, but if there is any correction close to 950, because 950 was the opening price when the IPO got listed. So 950 or maybe 1000 is the area where one should look for adding these stocks with a positional view. We also like SBI Life, where we are seeing some momentum. But I think it is better to be specific more and more on SBI Life.
Shrikant, sorry, before we thank you, quick 20-second view. Yes Bank, the 3 days on the trot, it's gone well. Can it do more?
Yeah, Neeraj, I think it was very difficult for the stock to cross the level of 32, which it has made during the year 2020. And the way it has broken this level and the volumes are there, I think this stock has further legs to move higher. It is heading for at least 45, 46 in the near term. That's the overall view on the stock.
Okay, Shrikant, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time. 2 stocks or 3 stocks or maybe more in focus today. Mangalore Chemicals, Paradeep Phosphates, and Zuari Agro. Varsha joins in with the details of this deal because there is more to it than just the swap between Paradeep and Mangalore. Varsha, take it away.
Good morning, Neeraj. So first, let's see what is the deal. So the deal is that Mangalore Chemicals and Fertilizers has announced merger with Paradeep Phosphates. Now, this merged entity will become one of the largest integrated private sector fertilizer companies. Now, if you see, shareholders of Mangalore Chemicals will get almost 187 equity shares of Paradeep for every 100 equity shares held. Now, let's see who are the entities involved and who will get benefit from. So first, Zuari Agrochemicals, which holds almost 54% stake in Mangalore Chemicals, is going to sell 33% stake of Mangalore Chemicals to Zuari Macro Private Limited. Now, if you see, Zuari Agro holds 50% stake in Zuari Maroc, which is a private limited company. Now, this 33% stake which Zuari is going to sell stands at 468 crore as per the current market price. Now, stake sale is going to happen at 565 crores. So, there is a premium of 20% involved. Then, Zuari Agro will continue to hold 21% in Mangalore Chemical and Fertilizers. Now, this 21% stands at 300 crore as of yesterday's closing price. So, in all, if you see, market cap of Zuari Agro Chemical stands at 943 crore and it's getting cash of almost 566 crore. So, Zuari Agro will actually be in focus as holding is getting converted into cash and the holding company discount of almost 40 to 50% will actually go away. Then let's see what it means for Mangalore Chemicals and Fertilizers. So shareholders will get 187 equity shares of Paradeep for every 100 shares held. Now the arbitrage on current market price, if you see, based on the swap ratio, Mangalore Chemicals shareholders will get return of around 18% when shares get converted to Paradeep Phosphates.
Right. So, Varsha, to break this down for our viewers who are just tuning in, what does this merger deal mean for investors or investors who are looking to buy these stocks? Zuari, for now, the stock trades slightly lower and Mangalore Chemicals is up 8%. So, in a nutshell, good, bad, ugly for the independent companies?
So I would say it's Zuari Agro Chemicals will be in focus today. So good for Zuari Agro and also Mangalore Chemicals, as the shareholders will get almost 18% growth in value terms.
I don't think the markets are recognizing that just yet, but that's the deal. Neeraj, do you want to comment on this one? Zuari is getting a thumbs down, interestingly, in terms of stock price performance.
Yeah, well, it'll be interesting to see what happens during the course of the day. But just the fact that despite, I mean, one more play, Samina, wherein, before we that break, but one more play, that there is a large arbitrage and still not getting extinguished. Talk about efficient market hypothesis. It doesn't quite work out all the time.
There is an opportunistic trade right there staring at us. We'll take a break. We'll come back. But on the other side, we put the focus on the economy. Indranil Sen Gupta and Jayesh Mehta join us to talk to us about their expectations from the RBI governor.
बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching India Market Open. We're all gearing up to hear what the RBI governor has to say at this very important meet. Well, we have with us Indraneel Sen Gupta, economist and head of research, CLSA India, and Jayesh Mehta of DSP Finance. Mr. Gupta, I'm going to come to you first. It's an important meeting of sorts. We've heard about fiscal consolidation, lowered market borrowing, growth seems to be holding up, core inflation has declined to sub 4%, and the US Fed has ruled out any rate cuts, at least in the foreseeable future. What are you expecting from this much anticipated RBI meet?
So we think that the environment is turning towards RBI easing. As you yourself said, that the fiscal consolidation process has begun. The Fed is looking to cut 75 basis points this year. And we are also seeing inflation come down maybe to 5.3% this in January. And of course, core inflation is actually in the threes. So against this backdrop, we think that the RBI cuts CRR by 0.5% of GDP this time to take care of the liquidity pressures and begins to cut rates from April. And overall, we are looking at a 100 basis point rate cut by June 2025.
Jayesh, good morning. I'm going to quickly talk to you about the liquidity piece because, we'd like a bird's eye view on what's actually happening in those markets. From September, liquidity has been tight in the system. What we did see very recently is call rates actually easing. Now, we also know that in the month of July and August, inflation also was much higher than the RBI's comfort zone. That is also now beginning to come off. A lot of people have been maintaining that commentary on liquidity is going to be very critical and that could be the next driver for the bond markets. Is that the opinion you have too?
There are two parts to it. Of course, as you say rightly, from November, the liquidity has been tight. And some people interpret this as like pseudo rate hike when US was touching 5% and the situation didn't look that great. So kind of looked like pseudo rate hike. Of course, the official reasoning was government spending and the time taken mismatch kind of situation. I think now it is back to hugging more. Actually, it went below the repo rate, and now they are trying to maintain it around repo rate, and that's what the stance would be because situation looks more benign, and that's what I believe they would kind of try to now target more. Uh, because if you really look at October, November, December, the situation globally didn't look that great. So I would say, though, of course, there is no official communication to that effect. I would say it was more like, wait and watch what's happening globally. And that's the reason maybe kind of without hiking rate, you manage it through liquidity by, making the repo rate go higher to almost like 675. So that's what I would put it around because if they want, they can always keep it at 6.5, which is quite possible. So that's one part of it. And in terms of bond market, I don't think quarter percent repo rate plus minus really matters except for the short end. Right now, it's all pricing in for the rate cut, not immediately, maybe June, but definitely no rate hikes for the rate cut. And of course, we have a huge flow coming in from the FPI inclusion. There's also very buoyant demand by FPIs because not only for inclusion, but also because our view on rupee is quite bullish. Buying bond is the best way to go long INR. So that's where we see very robust demand right now coming in from foreigners.
Jayesh, good morning. Neeraj here. Since we are on the topic, with the government having done what it has done in the budget and the guidance given, if the RBI does not do an action but sounds dovish, let's say, hypothetically, sounds dovish, maybe a change of stance, what have you, do you think that spurs movement in the bond markets?
Yes, you see, if you really look at it after the budget, it moved to a new range, 706 and like 711, 712 looks topish, right? We are moving towards 680. Now, it doesn't go in straight line, right? It may go to 711 again, 712 again, 708 again, but definitely the directionally is at 680. So both the things have happened. There is no reason for RBI also to be not optimistic about it. Only thing is, we may see that they may not really cut the rates immediately. Maybe they may want to see what's happening in US. So maybe that's what the general consensus is only after the US rate cuts post June. But I would still give 40 basis point, 40% chances for April rate cut.
Okay.
Maybe that.
Okay. Indranil, I've heard you say in your opening answer, good morning, Neeraj here, that you expect 100 basis points by June 2025. Do you concur with Jayesh that even if the Fed were not to make a move, and I think Jayesh mentioned that they will wait for the move to happen, but even if, let's assume they don't make a move, the Fed that is, can the RBI still do it? Because in some sense, the view post-budget was that the government has done what it has done. We're not satisfied with the growth rates that we may necessarily have, even if they're highest in the larger economies. And if we want more, it's also imperative upon the Reserve Bank of India to be a bit more benign.
So we have a 15 basis point rate cut in April.
Okay.
My view is that once the dollar is baked in, rate cut by the Fed, and it is baking that in, then there is no need to wait for the Fed. On the other hand, if you see, you are sitting at 6.5, core inflation is 3.3, which means your real policy rate is 3.2%, whereas the benchmark is about 1%. Even if you look at the overall inflation, which is 5.3, including the spike in inflation, you are beyond 1%. If you look at the RBI's own forecast of 4.9% inflation, 6 months, 9 months down the line, you are at a 1.9% real rate. So that's number one. And secondly, I think if you cut rates, given that equity flows are almost 20 times of debt flows in India, money will come in because equity markets chase growth. And once, as Jayesh also said, once you have the rupee appreciating and rates coming down, if debt FPIs will also come, because then you are sending, both capital and FX gains.
Oh yeah, I mean, this nuance missed me. We've two men who were earlier with the same company together on the show today. I just kind of missed that. Okay, Indranil, just wondering, in some sense, do you anticipate growth numbers to be strong second half calendar year 24 with the kind of numbers that have been put up in the interim budget? The government is not, pegged back on capex, just the pace of growth. But you could, some people argue that if you look at Achar Sahita and therefore 11 effective months of operations, then the per month capex number is not that bad either, per se. Do you expect growth numbers to be strong, or would we kind of pretty much do what we would do, and would that influence the RBI decision as well?
I think growth could come down to about 6% in the calendar year, number one. And number two, there is a joker in the pack, which is the US slowdown. Is it is it no landing? Is it soft landing? Is it a hard landing? We do not know yet. So the base case is that growth will settle around 6%. On the one hand, you have El Nino fading away, which means that there should be a good harvest, a Kharif harvest, in October. On the other hand, the Fed is up in the air. The US's growth numbers are up in the air.
Okay, fair point. Final point, and Jayesh, this question is to you. What about the rupee? Again, I'm maybe not as much from the Reserve Bank of India perspective, but the next 12 to 24 months, there's a lot of talk around how the 4% annual depreciation piece may not be a thing of the future. One, is that a fact? Is that something that you believe in? And two, any of the RBI actions now or April, if they do 15 basis points or later on, even if they go ahead, if the Fed doesn't, does it have an impact on what the currency does meaningfully?
I think, PLI plus the flow and all that, which will kind of pan out in next 2-3 years. That's very positive. And general view is rupee appreciation. I also am a big follower of rupee appreciation. But having said that, a couple of concerns. While gold always has been there, fuel, oil is fine. I think it's still manageable as long as it's below 80. One of the new thing which is picking up is education, right? That's becoming bigger than gold import. So I think that's something we need to really, really look at. While PLI would bring in additional, dollar inflow, or Make in India would bring in dollar inflow. But this kind of outflows needs to be really looked at, and that's a little bit worrisome. But having said that, very optimistically, very bullish on rupee. You're right. We are not looking at that traditional average 3.5-4% depreciation. So from that perspective, we should be looking at a different regime going forward.
Gentlemen, both of you, thank you so much for taking the time out and giving us a quick heads up into what to expect, maybe to expect in the next 17 minutes. We'll let you go on that note.
Thank you.
Well, that's the view from our guest ahead of the MPC announcements in about 16 minutes. We'll take a quick break. Before the MPC announcement comes in, we'll talk about earnings. The management of Minda joins in to decode their Q3 numbers.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये ज़रूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए, हम देने को तैयार है। ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Back with India Market Open right here on NDTV Profit. Minda came out with its numbers and the numbers on the face of it look okay. 20% uptick in revenue. Margins contracted a little bit, 10.8% versus 11.6% YOY. As a result of which the bottom line growth maybe slightly lagged the top line growth, but still about 18%, 205 odd crores versus 174. Sunil Bora, Executive Director, Group CFO of Minda, joins us right now on the show. Sunil, good having you. Thanks for joining in. Satisfactory quarter, or would you have hoped for a slightly better performance on the margin front?
No, I think it is satisfactory quarter, and this margin is in line with what we have guided at the beginning of the year. And we said clearly that our full year target is around 11% plus minus 0.5%, and we are in that range. And if everything goes well, 9-month margin is 10.9. Hopefully, full year we should be touching 11.
Okay. Were there one-offs in the quarter which led to this, and do you expect this recovery to come in quarter 4 itself? Does it kind of aggregate out your annual margins to 11% because Q4 needs to do something special, or does Q4 just need to be at par?
So that's the normal trend, Neeraj. If you see, first of all, there is nothing exceptional in the quarter. We knew at the beginning of the year there are a lot of new plants, a lot of new capacities which are getting in commission in the current year, because of which you have all the expenses, but you'll appreciate you don't get the revenues from the start itself. We are not a continuous process plant, so normally it takes 3 years for any new plant to get stabilized and get to the target revenue. So this was very much on the anticipated lines. And also, if you see historically, how Q4 tend to be the best quarter, because Q3 volumes are lower because of festive season. So Q2 you have better volumes because of the inventory build-up prior to festive season. Then in Q3, you have holidays because of the festive season, and then last week of the year is normally a maintenance shutdown. So you know that Q3 normally tend to be lower, and Q4, which is the start of the year, you would always see that the volumes are normally better than Q3. So we are expecting on same lines the trend, the historical trend to continue, and Q4 tend to be better. And if you see, as I said, last many years, we are expecting the same lines.
Okay, how confident are you of growth in light of for FY25? I mean, in light of the fact that yes, two-wheelers in India are strong, and you are probably deepening your wallet share, but the world growth at large seems to be there seems to be a strong possibility of slowdown. So in a slowing down world, one, global markets, if you will, and two, the impact that the slowing world has on growth in India as well.
So definitely, Neeraj, as far as the global part is concerned, our exports also have seen a little bit of softening, but we have been able to offset with the new business wins. And as far as the revenues or the projections for current year goes or the medium term, we are here in this business for a long haul. We are not looking at quarter to quarter or year to year because industry volumes, is not in our hands. Our 92% of the revenue goes to our customers, OEM, which is line fitment. So we never give any guidance in terms of the top line, be it next year or be it in future. So our endeavor always has been whatever industry grows, how do we grow at least 1.5x growth of the industry? And even if industry doesn't grow, how do we grow? I think that has been a consistent endeavor, and we have been working on multiple fronts to achieve that that objective, which we have been successfully been able to do for past many years. In fact, you see last 5 years for a two-wheeler segment, the industry volumes are still softer than what they were pre-COVID. PV is taking a little better, but our revenues are double. So I think that clearly shows our strategy of being aggressive in terms of growth, our ability to increase kit value, our ability to put better products, our ability to put new components to the market like the EV segment. We have been aggressively working on increasing our wallet share. We have been aggressively working on our exports. So we are working on all the fronts. And in fact, if anything you have to see as our confidence, we have just acquired 86 acres of land in Pune and around 37 acres in process in south and around 95 acres in north. So we are building a land bank for our future growth. Not that we want to get into any real estate thing, but we have realized in past there have been projects where the things have been delayed because of the land acquisition. One of the project which board approved on 1.5 years back for alloy wheel expansion, for 1.5 years, despite the land available next door, government land, we are not able to get that. So I think that has been one of the reasons why we thought that it's better we build the land bank. We intend to make them industrial parks for ourselves because a lot of our plants are already at the rated capacity, and we don't want to have another plant in the same region because then you don't get benefit of operating leverage, commonization, etc., etc. So we are working in a way that we have ready land available, and we are able to put a bigger plant and move the existing plant also to new locations. Plus, you also are able to get some incentives from the government because you are committing the large investment and fall into the mega investment category. There are a lot of advantages which are there because of this, and we are working very, very aggressively. FY25, globally, as you said, that things might be soft, but we are very, very confident in medium to long-term growth of the industry.
Got it. Sunilji, we are just minutes away from policy, so a quick answer. Four-wheelers, you expect over the next 5 to 7 years about 3 to 4x growth because penetration can be deepened. Overall, what's the CAGR outlook for the group, for the company at large? Could it be similar to the four-wheeler growth?
As I said, Neeraj, we don't comment on revenue or CAGR. Our endeavor is to outperform the industry. So I'm sorry, I'm not able to give you any number or a CAGR for future.
Okay, but you believe that you could still maintain the growth rates that you, say, for example, said for the four-wheeler space, while maintaining the margins at about 11% because you've done that now for a number of years. You think that can continue?
So that is our endeavor, Neeraj. That's our target, that how do we make sure that the growth trajectory we have built, we sort of work on that aggressively and we deliver in terms of the year-on-year growth and the outperformance which we have delivered. So we are working on all fronts, and hopefully we should be able to replicate, continue to deliver what we have been able to do in past.
Viewers, new greenfield capacity in four-wheeler alloy wheels in addition to Bawal and Pune two-wheeler alloy wheel and four-wheeler lightning in Vietnam and Pune. So lots happening in Uno Minda. They're guiding to 11% margins and 1.5 times industry growth. Sunil Bora, thank you so much for taking the time out and speaking to us today. Well, that's Uno Minda. We need to slip into a quick break. We'll be back with the RBI governor and the MPC policy.
बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Hello and welcome to this special coverage of the RBI policy. We are, well, less than 2 minutes away from RBI Governor Shaktikanta Das telling us about what the decision has been. The decision will be flashed on the screen. Our ticketing will be giving out to you as soon as we get to know about it. But as Samina has been saying, it's probably not as much about the decision, Samina, as it is about the commentary, about the stance on liquidity and about Paytm.
Indeed. I think Paytm is going to be the bigger question that reporters are going to be asking the governor. But let's not forget that apart from the rate cut, which I don't think anybody is expecting.
Change of stance?
Change of stance, maybe a withdrawal from from restrictive to more of a neutral stance is what the street is slightly divided on. But yeah, the bigger story is going to be liquidity. Let's not forget we had a very critical budget in terms of the macros of the country. So keeping in mind the path of fiscal consolidation, the fact that market borrowing is lower, US Fed is not going to move on this rate cut, on their rate cut anytime soon, and the fact that the liquidity will also ease in the system because of our inclusion in the JPM index, a couple of factors will play out. But I think if we had to put our bets on this, Neeraj, no rate cut, no change in stance, literally just, I don't think there could be much coming in, even though I know the House is divided and that is a little bit of an expectation out there, but unlikely, right? I just can't see why we need a change in stance at this stage. We've seen earnings. I understand there is a little bit of pressure, but you've anyway got the RBI controlling.
But you change the stance so that you set the stage for being able to take an action as and when you want to.
That's when you know Neeraj is an equity man, right? He's literally hoping that there's a change in tone, because a change in tone will fuel the market rally. Take a look. Let's quickly take a look at what Bank Nifty is doing, what some of your PSU banks are doing. I wouldn't imagine too much activity on any of those parameters. Oh, and Bank Nifty is not doing too badly. Maybe they think like Neeraj this morning.
No, just how they started, just how it started. But yeah, you know, bond yields have moved to a different range post-budget. So it'll be interesting to see what happens to yields today. And as Samina mentioned, maybe, who knows, maybe the currency too. Though it's kind of steady.
It's the fighter.
It's the fighter. It's the fighter. Yes. So yeah, all of those things in focus. Okay, I think it's 10. So we should be getting those flashes up on the screen any moment. Should be coming any moment. But I think this is something where we keep a keen eye out for. And as soon as Governor Das starts speaking, I think we cut to him and try and hear out what he has to say.
Also, on liquidity, I think it would be interesting to see how comfortable the RBI is with keeping call rates at 6.5%. Remember, the call rate is higher. Banks will have to raise money from depositors. So the whole equation really starts moving back to the other avenues of the market. They've maintained their liquidity stand. We've seen, various measures taken by the Reserve Bank of India in the form of VRR. In fact, that's going to be important to see if they talk about those measures. Could be FX swaps, could be VRR, but from the look of it, that is going to be the biggest talking point. At least it has been the biggest talking point amongst economists in the last couple of weeks. Core inflation is sub 4% at 3.8%. That is comfortable for the Reserve Bank of India. Be interesting to see what they are charting out for inflation. What sort of growth targets do they have in mind as well? While the NSO has predicted or estimated growth of 7.3% this year and 7% next year,
this is the first monetary policy statement of 2024, a momentous year for the Reserve Bank of India, which enters its 90th year of existence and operations on 1st April this year. Over the years, the Reserve Bank has established itself as a credible institution which stands for stability, trust, and economic progress. In recent years, it has become a pioneer in fostering innovation and technology in the financial system. Customer centricity and financial inclusion have always been its priorities. The Reserve Bank's tireless efforts towards maintaining a fine balance among price stability, financial stability, and external sector stability have paid rich dividends as the country embarks on a higher growth trajectory in the years to come. As India gains a pole position in the new global order, the contribution of the Reserve Bank is getting widely recognized both within and outside the country. The global economy continues to present a mixed picture. On the one hand, the odds of soft landing have increased, with inflation moving closer to the target and growth holding up better than expected in major advanced and emerging market economies. On the other hand, the ongoing wars and conflicts and the emergence of new flashpoints in different parts of the world, with disruptions in the Red Sea being the latest in the series, impart uncertainty to the global macroeconomic outlook. In this unsettled global environment, the Indian economy has performed remarkably well in the recent years. Growth is accelerating and outpacing most of the forecasts, while inflation is on a downward trajectory. At the current juncture, India's potential growth is propelled by structural drivers like improving physical infrastructure, development of world-class digital and payments technology, ease of doing business, enhanced labor force participation, and improved quality of fiscal spending. Our multi-pronged, proactive and calibrated policies on the monetary, regulatory and supervisory fronts have worked well to maintain and strengthen macroeconomic and financial stability. Let me now turn to the decisions and deliberations of the Monetary Policy Committee meeting, the Monetary Policy Committee, which met on 6th, 7th and 8th of February, that is culminating today. After a detailed assessment of the evolving macroeconomic and financial developments and the outlook, the Monetary Policy Committee, that is MPC, decided by a 5-1 majority to keep the policy rate unchanged at 6.5%. Consequently, the standing deposit facility rate remains at 6.25%, and the marginal standing facility, that is MSF rate, and the bank rate at 6.75%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns with the target while supporting growth. I shall now briefly set out the rationale for these decisions. The momentum in domestic economic activity continues to be strong. Headline inflation, after moderating to 4.9% in October, rose to 5.7% in December 2023. This was primarily due to food inflation, mostly vegetables. The softening in core inflation, that is CPI inflation excluding food and fuel, continued across both goods and services, reflecting the cumulative impact of monetary policy actions as well as the significant softening in commodity prices. The uncertainties in food prices, however, continue to impinge on the trajectory of headline inflation. Taking into account this growth inflation dynamics and the fact that transmission of the cumulative 250 basis points policy rate hike is still underway, the MPC decided to keep the policy repo rate unchanged at 6.5%. The MPC will carefully monitor any signs of generalization of food price pressures which can fritter away the gains in easing of core inflation. Monetary policy must continue to be actively disinflationary to align inflation to the target of 4% on a durable basis. The MPC will remain resolute in this commitment. The MPC also decided to remain focused on withdrawal of accommodation to ensure fuller transmission and anchoring of inflation expectations. I now propose to provide an assessment of growth and inflation. Let me take up first global growth. Global growth is expected to remain steady in 2024 with heterogeneity across regions. Though global trade momentum remains weak, it is exhibiting signs of recovery and is likely to grow faster in 2024. I would like to mention that, I am making several statements, and the supporting data for all the statements that I am making, all the sentences that I am reading out, the supporting data is provided in the footnotes. So therefore, those of you who are interested can refer to the footnotes for the backup data in support of whatever statements I am making here. So let me just restart so that there is continuity. Global growth is expected to remain steady in 2024 with heterogeneity across regions. Though global trade momentum remains weak, it is exhibiting signs of recovery and is likely to grow faster in 2024. Inflation has softened considerably and is expected to moderate further in 2024. Financial markets are volatile as market participants adjust their expectations on the timing and pace of rate cuts by major central banks, who in any case remain cautious against premature easing in their fight against inflation. Amidst the current headwinds, elevated level of public debt is raising serious concerns on macroeconomic stability in many countries. Now, this is a new point which I am just introducing, which I am talking about in this MPC, because this aspect, I think, is an important aspect, and it will impact the future trajectory of global financial stability and global financial system. So therefore, this point I thought I must mention here as a part of the monetary policy statement. Now, amidst the current headwinds, elevated levels of public debt is raising serious concerns on macroeconomic stability in many countries, including some of the advanced economies. Global public debt to GDP ratio is projected to reach 100% by the end of this decade. The public debt levels in advanced economies, in fact, are much higher than those in the emerging market economies. The challenges of debt sustainability in an environment of high interest rates and low growth at the global level can become new sources of stress. Reducing debt burdens is necessary to create fiscal space for new investments in priority areas, including green transition. Now, in this context, so far as India is concerned, going by the budget which has now been presented, I think government is adhering to a path of fiscal consolidation, and as per the projections made by the International Monetary Fund also, India's that is general government, the debt of both central and state governments are expected to moderate in the years to come. This is just a point of information to put things in the context. Domestic growth. Domestic economic activity remains strong. The first advance estimates placed the real gross domestic product, that is real GDP growth, at 7.3% for 2023-24, that is for the current year, making this the third successive year of growth of above 7%. Going forward, the momentum of economic activity witnessed during the current year, that is 23-24, is expected to continue in the next financial year also, that is in 24-25. Agricultural activity is holding up well despite lower inflation, lower reservoir levels and delayed sowing. Rabi sowing has surpassed last year's level as well as the normal acreage. The allied sector is also expected to provide major support to agriculture with continued momentum in horticulture and fisheries. Industrial activity is gaining steam on the back of improving performance of manufacturing. The early results of corporates in the manufacturing sector remain upbeat, driven by higher profit margins. The Purchasing Managers Index, that is PMI for manufacturing, is displaying expansion along with strengthening of future activity index. Services sector activity is expected to remain resilient on the back of strong domestic demand and stable global prospects. The PMI services increased significantly in January, that is January this year, suggesting continuing strong expansion. The buoyant demand for residential housing, coupled with increased thrust on government capex, is expected to propel construction activity. On the demand side, improving employment conditions and moderating inflation, together with a rebound in agricultural activity, should push up household consumption. Rural demand continues to gather pace. Strengthening farm level activity as reflected in declining Mahatma Gandhi Narega demand and the extension of Pradhan Mantri Garib Kalyan Anna Yojana should further support rural consumption. Urban consumption remains strong on the back of improved income levels. Investment cycle is also gaining momentum, is gaining steam, aided by sustained thrust on government capital expenditure, increased capacity utilization, rising flow of resources to the commercial sector, and policy support from schemes such as production-linked incentive. Revival in private corporate investment is also underway. Our survey suggests that investment intentions of private corporates remain upbeat, and both services and manufacturing firms are optimistic about overall business conditions. Next, net external demand is also improving with narrowing merchandise trade deficit. Now, taking into account all these factors into consideration, real GDP growth for 2024-25, that is the next financial year, is projected at 7%. I repeat, real GDP growth for 2024-25, that is next financial year, is projected at 7%, with Q1 at 7.2%, Q2 at 6.8%, Q3 at 7%, and Q4 at 6.9%. The risks are evenly balanced. Let me now turn to inflation. Headline inflation moderated to an average of 5.5% during April to December 2023 from 6.7% during the whole of 22-23. Food price inflation, however, continued to impart considerable volatility to the inflation trajectory. In contrast, the deflation in CPI fuel deepened and core inflation moderated to a 4-year low of 3.8% in December. The decline in core inflation continued to be broad-based, with inflation remaining steady or softening across its constituent groups and subgroups. The inflation trajectory going forward would be shaped by the outlook on food inflation, about which there is considerable uncertainty. Adverse weather events remain the primary risk, with implications for the Rabi crop. Increasing geopolitical tensions are also leading to supply chain disruptions and price volatility in key commodities, especially crude oil. On the positive side, the progress in Rabi sowing has been satisfactory and augurs well for the season. Prices of key vegetables, especially onions and tomatoes, are registering seasonal price correction. Taking into account these factors, CPI inflation, that is consumer price headline inflation, is projected at 5.4% for the current year, that is 23-24. So that is for the current year 23-24, we are projecting CPI inflation at 5.4%, with the fourth quarter, that is the current quarter, projection of 5%. Now, assuming a normal monsoon for the next year, CPI inflation for the next financial year 24-25 is projected at 4.5%. I repeat, CPI headline inflation for next financial year 24-25 is projected at 4.5%, with Q1 at 5%, Q2 at 4%, Q3 at 4.6%, and Q4 at 4.7%. The risks are evenly balanced. Now, what do these inflation and growth conditions, what do they mean for monetary policy? Let me try and answer. Inflation has seen a significant moderation from the highs of the summer of 22. That is the summer of 2022. Over the last 2 years, monetary policy has prioritized inflation over growth, undertaking calibrated increase in policy repo rate by 250 basis points and withdrawal of stimulus measures. Monetary policy was supported by proactive supply-side measures by the government. That said, the job is not yet finished, and we need to be vigilant about new supply shocks that may undo the progress we have made so far. Headline inflation has remained high and has seen considerable volatility, moving in a range of 4.3% to 7.4% during the current financial year. Recurring food price shocks could interrupt the ongoing disinflation process, with risks that it could lead to de-anchoring of inflation expectations and generalization of the price pressures. Adding to these are the renewed flashpoints on the geopolitical front, including supply chain disruptions. Importantly, the CPI inflation target of 4% is yet to be reached. Monetary policy in the midst of these lingering uncertainties has to remain vigilant to ensure that we successfully navigate the last mile of disinflation. Now, the last mile of disinflation is always the most challenging, and that has to be kept in mind. Stable and low inflation at 4% will provide the necessary bedrock for sustainable economic growth. This point is very important because if we are interested in the long-term growth of our economy, then we need a regime of low and stable inflation. That is why we remain focused on bringing the inflation, to align the inflation to the target on a durable basis. I would now like to focus on the liquidity and financial market conditions, about which there is a lot of interest in the financial markets and also elsewhere. After remaining in surplus during April-August 2023, system-level liquidity turned into deficit from September after a gap of 4.5 years. Adjusted for government cash balances, potential liquidity in the banking system is still in surplus, and that may surprise you. But adjusting for government cash balance, potential liquidity in the system is still in surplus. During December-January, the Reserve Bank proactively injected liquidity through both the main and the fine-tuning repo operations to ease liquidity tightness in the system. With government spending picking up and augmenting system-level liquidity, I must mention that in the recent, particularly in the second fortnight of January, government expenditure was sustained, but I think there has been a significant pickup from the second fortnight of January, and also we are witnessing the same in February. And so with government spending picking up and augmenting system-level liquidity, the Reserve Bank undertook 6 fine-tuning variable rate reverse repo auctions, that is VRRR auctions, during February 2 to February 7, 2024 to absorb surplus liquidity. Financial market segments have adjusted to the evolving liquidity conditions in varying degrees. While the short-term rates have fluctuated, long-term rates have remained relatively stable, reflecting better anchoring of inflation expectations as indicated in the softening of term spread in the government securities market. In the credit market, however, monetary transmission remains incomplete. Let me reiterate, and this is very important, let me reiterate that our policy stance is in terms of interest rate, which is the principal tool of monetary policy in the current framework. Our stance of withdrawal of accommodation should be seen in the context of incomplete transmission and inflation ruling above the target of 4%, and our efforts to bring it back to the target on a durable basis. So far as liquidity conditions are concerned, these are being driven by exogenous factors which are likely to correct in the foreseeable future, aided by our market operations. On our part, the Reserve Bank remains nimble and flexible in its liquidity management through two-way main and fine-tuning operations in both repo and reverse repo. So you would have noticed we have done two-way, market interventions, both repo and now reverse repo. And we have been very nimble even during one particular day, like yesterday and day before. On a single day, we conducted 2 VRRR auctions on a single day. That was seen yesterday and day before, and that goes to show that we are nimble and swift in our response to the evolving liquidity conditions. Now, I would like to emphatically state here that we will deploy an appropriate mix of instruments to modulate both frictional and durable liquidity so as to ensure that money market interest rates evolve in an orderly manner and financial stability is maintained. The reversal of liquidity facilities under both SDF and MSF, even during weekends, which we announced in the last, that is in December policy statement, has actually facilitated better funds management by the banks. As of February 7, 2024, the Indian rupee has remained stable compared to both its emerging market peers and even a few advanced economies. In terms of coefficient of variation, the Indian rupee exhibited the lowest volatility in 2023-24 as per the data available between April to January of the current financial year. Now this I am saying compared to the corresponding period in the previous 3 years. Let me reiterate that the exchange rate of the Indian rupee is market determined. Its relative stability in the recent period, despite a stronger US dollar and elevated US Treasury yields, reflects the strength and stability of the Indian economy, its sound macroeconomic fundamentals, financial stability, and improvements in India's external position, particularly the significant moderation in current account deficit, comfortable foreign exchange reserves, and return of capital flows. Now, the confluence of all these factors put together have ensured that the Indian rupee, the exchange rate of the Indian rupee, has remained fairly stable over the last 1 year or so. I would now like to touch upon financial stability. The domestic financial system remains resilient with healthy balance sheets of banks and financial institutions. The financial parameters of non-banking financial companies, that is NBFCs, are also improving in tandem with those of the banking system. Good governance, robust risk management, sound compliance culture, and protection of customers' interest are of paramount importance for the safety and stability of the financial institutions as well as that of individual financial institutions. The Reserve Bank lays great emphasis on these aspects. We expect the regulated entities of the Reserve Bank to accord the highest priority to these functions. External sector is the next area on which I would like to touch upon. India's current account deficit declined sharply to 1% of GDP in the second quarter of 2023-24, that is second quarter of the current financial year, from 3.8% in the second quarter of the previous year. Going ahead, the net balance under services and remittances is expected to remain in large surplus, partly offsetting the trade deficit. India's services exports remained resilient in October to December this year, driven by software, business and travel services. Moreover, with around 10.2% share in world telecommunications, computer and information services exports, India is a significant player in the world software business. According to the World Bank, with an estimated $135 billion inward remittances in 2024. I repeat, the World Bank estimates the inward remittances for India to be in the order of $135 billion in 2024. Now with this, India would remain the largest recipient of remittances globally. Thus, current account deficit for both 2023-24 and 24-25 is expected to be eminently manageable. On the financing side, net foreign direct investment stood at $13.5 billion in April to November 2023, as compared with $19.8 billion a year ago. Foreign portfolio investment, that is FPI investment, witnessed a sharp turnaround during 2023-24, that is current year, up to February 6, with net FPI inflows of US $32.4 billion as against net outflows of 6.7 billion a year ago. Net accretions to non-resident deposits and net inflows under external commercial borrowings were also higher during the current year. As on February 2, 2024, India's foreign exchange reserves stood at US $622.5 billion. Vulnerability indicators suggest greater resilience of India's external sector. We are confident of comfortably meeting all our external financing requirements. I shall now announce certain additional measures, and some of these measures are very important, so I request your patience. The first measure I wish to announce is a review of the regulatory framework for electronic trading platforms. The Reserve Bank's extant regulatory framework for electronic trading platforms was issued in 2018. In view of the subsequent developments in markets, products and technology, etc., a revised regulatory framework for these electronic trading platforms will be issued for stakeholders' feedback. The next announcement relates to hedging of gold price risk in the OTC market, that is over-the-counter market, in the International Financial Services Center, IFSC. In December 2022, the Reserve Bank had permitted resident entities to hedge their gold price risk in recognized exchanges in the IFSC. It has now been decided to allow resident entities to hedge the price of gold. Now let me just read it again. It has now been decided to also allow resident entities to hedge the price of gold in the OTC segment in the IFSC. This will provide more flexibility to resident entities in hedging their exposure to gold prices. The next announcement is actually very important and has far-reaching consequences. Particularly, it is something which will really benefit the small borrowers from the lending sector, from banks and other entities. At present, and that relates to key fact statement, that is KFS for retail and MSME loans and advances. At present, the loans and advances availed by borrowers, apart from including the rate of interest, also include other fees and charges such as the processing fees, documentation charges, etc. So as a result, what happens is that the customer, he knows that the loan carries an interest of so much percentage, but then there are other charges and fees, etc., which he pays upfront. Now that also needs to be loaded into the actual interest rate, so the customer has a clear idea that what is the actual annualized interest rate that he pays. And this is something on which, as you are aware, as I have said a little earlier, customer centricity is something on which the Reserve Bank lays a great emphasis in the overall public interest. Now, to enhance transparency in disclosure of such information, that is information on various charges, fees, etc., the Reserve Bank had mandated certain categories of lenders to provide the borrower a key fact statement, that is KFS, containing essential information such as all-inclusive annual percentage rate and recovery, and also details of the recovery and grievance redress mechanism. The requirement of the key fact statement is now being extended to cover all retail and MSME loans. This measure will lead to enhanced transparency in lending and will enable customers in making informed decisions. The circular will be issued separately. Obviously, we have to give some time to the banks to comply with these requirements, because quite a few preparatory action needs to be taken at the end of the banks. The next announcement relates to enhancing the robustness of AEPS. Aadhaar-enabled payment systems, that is AEPS, has played an important role in financial inclusion by enabling customers to make digital payment transactions through service providers such as business correspondents. Given their significance, it is proposed to streamline the process for onboarding of AEPS service providers and introduce some additional fraud risk management measures. This measure will further strengthen the security of the AEPS system and enhance its robustness. The next announcement relates to principle-based framework for authentication of digital payment transactions. Over the years, the Reserve Bank has proactively facilitated introduction of various mechanisms such as additional factor of authentication for securing digital payments. While no particular mechanism was specified by the Reserve Bank, SMS-based OTP, that is one-time password, has become very popular. With technological advancements, however, alternative authentication mechanisms have emerged in recent years. Therefore, to facilitate adoption of alternative authentication mechanisms for enhancing the security of digital payments, it is proposed to put in place a principle-based framework for authentication of such transactions. The next and the final announcement, the last announcement, relates to introduction of programmability and offline functionality in central bank digital currency pilot projects. The CBDC, that is Central Bank Digital Currency Retail, the CBDC Retail pilot currently enables person-to-person and person-to-merchant transactions. It is now proposed to enable additional functionalities of programmability and offline capability in CBDC retail payments. Programmability will facilitate transactions for specific or targeted purposes, while offline functionality will enable these transactions in areas with poor or limited internet connectivity. I now propose to conclude. The Indian economy is making confident progress on a strong, sustained and transformative growth path. Domestic and international investors are reposing greater confidence on India's economic prospects. In our assessment, the current setting of monetary policy is moving in the right direction, with growth holding firm and inflation trending down to the target. Therefore, much has been achieved, but we must remain vigilant. Policy making during uncertain times has to be based on a continuous assessment of the incoming data and its implications for the evolving outlook. We reaffirm our commitment to bring down inflation to the target of 4% in a timely and sustainable manner. Price and financial stability are the foundations for strong, sustainable and inclusive growth. Our endeavor all along has been to take a holistic approach to keep the economy in balance. We must not only preserve the hard-earned strength and stability of the Indian economy, but also build on this further for a long haul of higher growth with price and financial stability. In the current environment, what Mahatma Gandhi said long ago remains very relevant, and I quote, "I am moving cautiously, watching myself at every step. I repeat, I am moving cautiously, watching myself at every step. But there is the fixed determination behind every act of mine." Thank you. Namaskar.
Well, that's the policy. And before we go to our guests, a quick summation from me and Samina. What stood out for me, no change in stance to my mind. That's the headline. CPI inflation seen at 5.4% for FY25, 4.5% in FY25, and mentioning that the job is not finished because need to be vigilant on new supply shocks. And, well, interestingly, large mention on debt sustainability for the world at large and how it could become a new source of stress for the world. I mean, in an EM central bank talking about the message for the world. And real GDP growth, 7.3% FY24, 7% FY25, which would make it the fourth consecutive year of growth of 7% or above.
Right, and also Neeraj, they were pretty explicit in stating that they are managing liquidity in a pseudo manner any which way. So after September, and that's what the governor indicated, that system liquidity had turned into a deficit after a 4.5-year gap, which we've actually seen and witnessed over the last couple of months. But after adjusting for government cash balances, potential liquidity in the banking system is still in a surplus. And that's what the governor has said. They've also said they're nimble-footed and they will manage liquidity with repo and reverse repo. So the pseudo balancing of liquidity still remains the only way to manage liquidity. Their growth targets have, of course, been in line with what the NSO has said. FY25, the estimate is 7%. For FY24 stands at 7.3%. Inflation, I'll just quickly break those numbers down for you so you have some perspective on what it is. But of course, inflation as well is an unfinished task, is what the governor said. Neeraj Gambhir, Group Executive Treasury Markets of Axis Bank, and M. Kamakodi, CEO, City Union Bank, joins in. Neeraj, I'll start with you first. Are you surprised? No change in policy, no change in stance, and no major announcements on managing liquidity either. What did you make of these comments? In line, you think, or there's a little bit of surprise because while they talked about managing liquidity, they've largely said that they've been doing it and they're nimble-footed and will do what it takes when it takes.
Thanks for having me on the show. I think it's broadly on the expected lines, both on growth and inflation. In fact, I was a little bit positively surprised by the sort of assurance or, in some senses, the confidence that the RBI governor has on 7% growth for next year. Our own estimates are for a little lower, say about 6.5%. Nevertheless, it still continues to be it will most likely be another year of very strong, economic growth, and hence the sort of, I would say, reflection on the fact as to how fast you need to adjust rates. On liquidity, yes, we have seen Reserve Bank pretty active in the markets. We have seen over the last week itself multiple, repo and reverse repo auctions being done to make sure that the system liquidity stays. What the governor has said is not a new information. We all know that there is a very large government balance that sits there, which is causing this frictional liquidity in the banking system. The challenge is that this frictional liquidity shortage in the banking system is causing the short-term rates to actually spike up quite sharply. We've seen 3-month CD rates go up to as high as 7.8%, and that is obviously impacting then the cost of funds for the banks. So I think I'm hoping that with this renewed set of assurances that the governor has given, there will be some cooling off of these short-term rates. And I think he pointed out towards the fact that there has been some volatility in the short-term money market rates. So I think that's the key thing. If the overnight rates settle towards 6.5% and the short-term money market rates start cooling down, then I think this policy would have achieved what we would have liked to see in the policy.
Mr. Kamakodi, did no change in stance surprise you, or are you in sync with what Neeraj Gambhir just mentioned?
Yeah, just to add what Mr. Gambhir said, you also heard a statement which clearly said that probably from the earlier, on policy announcements and all, you had more discussion on the Arjuna's eye on the inflation. And now it has been clearly spelled that, the things will be now, economy will be now getting ready for the growth, that all sort of, other actions will start and all. So it is definitely a little bit, we are positively surprised that probably happening 2 months earlier. Probably we were expecting this maybe in the next policy, but good that the support for growth will be more from where we are now. That's a positive point here. All other on rates and all are on expected line.
Neeraj, I know while we are focusing on a whole bunch of global cues and the fisc and the budget and the market borrowing, but the fact still remains that we will, or we have, and we should be taking a cue from what the Federal Reserve does. The fact that that market rate cut expectation has now been pushed forward, do you feel like until the Fed moves, the RBI, even if conditions are conducive, will be unable to move because the rate differential is very critical for an emerging market like us?
Yes, it is, and hence what the Fed does is also of quite a bit of importance. Rate cut expectations in US have been pushed back by at least 6 months. I think the market was hoping to have it in the first quarter in March policy. Now we are looking at May, June, and even probably later, given the recent spate of data that we've seen in US. So yes, that does make the bar for a rate cut to move higher in India particularly. And also the fact that our growth continues to be strong. The task on inflation front is still not complete. We are likely to see a inflation outcome for this fiscal and the next fiscal, which is going to be higher than the target of 4%, basically means that Reserve Bank has no real hurry or a reason to cut rates anytime soon. And I think both of these factors need to be taken into account simultaneously.
Neeraj, that brings me to the next question, which is a little bit of a conundrum in my head at least. So core inflation has been easing in line with what the governor or the RBI would like, recorded at 3.8%. The fact remains that if it continues to fall and gets closer to 2%, this becomes bad for the economy. On the other hand, and of course because of that, the headline inflation has also cooled off. But vegetable inflation continues to be a sore point. Non-vegetable inflation has also been going up over the last 4 years. So what do you think, in your opinion, needs to be done to tackle inflation in that sense? Because you can't, and the only thing the RBI can really tackle is core inflation, but we don't want that to fall off too easily, right?
But at the same time, if the headline inflation continues to stay high and volatile, and remember, food is a large part of India's consumption basket, so can't ignore it that easily. And if the food prices continue to stay volatile, it affects people's expectations about the future inflation, and hence, it is not very easy for a central bank like India, where headline inflation is the target, to start cutting rates when the overall inflation or the headline inflation is much beyond the target. So I think Reserve Bank can take comfort from the fact that the core inflation is low, and hence, it is not a situation of overheating in the economy. It is more of a supply side issue in the vegetable and food basket of products, but cannot really start cutting rates till such time the overall headline inflation starts cooling off, trends.
By the way, just take a quick detour and mark risk assets by and large before we get in Anubhuti Sahai in the conversation as well. The Nifty, the bank Nifty, both are off. I mean, we have seen the PSU banks come off because there was a bit of a rally, but let's just mark the markets about not too much, but a bit lower. But the banks, and the PSU banks in particular, would be the ones. The bank Nifty is in the green, but the PSU banks have certainly come off, so that is to be kept in mind. A PSU bank index actually by and large okay. A few banks have certainly come off. Anubhuti Sahai of Standard Chartered Bank joins us right now on the show as well. Anubhuti, good having you. Thanks for joining in. Anything surprised you? I mean, one reference being made to external shocks in a meaningful way, particularly the debt that the developed world stands in, and how that is a source of potential future shocks.
Yeah, sure. I think there were 2 points which were of great interest. One, for the first time, we have seen a dissenter emerging and probably voting for a cut. This we have not seen, and our sense is, while there was just one vote in this particular meet, as we move further into 2024 and probably by June of 2024, we are likely to see 6 out of 6 votes in favor of cut. A fair bit of caution today, well justified, where the world stands today with the tensions in Middle East, and especially with the data surprising on the higher side in the US economy, and probably rate cuts been deferred there. So fair bit of cautiousness, which was a surprise, but the dissent for a cut was an equal surprise to us. Otherwise, broader on the policy decision, more or less in line with expectation. On your point about public debt to GDP, I think it's a very important point which the governor brought to the attention of the market. If we talk about the global level, there is a very high level of public debt. While it can be managed without impacting the markets a lot, especially if we look at the developed side, developed markets, it becomes a constraining factor for a lot of emerging economies, including India. And in case of India, while we all have applauded the budget, I think the public debt to GDP is something which is a factor on the minds of policymakers, and to a great extent, there is a great deal of focus to bring it down as soon as possible, to ensure that the issue with the rating agencies about high public debt to GDP gets addressed sooner rather than later.
Okay. Mr. Kamakodi, small things, but he mentioned about how 2 or 3 very important moves taken at the end of, virtually at the end of the policy, including allowing resident entities to hedge price of gold, extending KFS requirements for all retail and MSME loans because it's mandated earlier only for certain class of lenders. Any thoughts on those 3 or 4 announcements that were made?
Yeah, particularly on the, key factor statement is there for some time, but including all charges with the interest rate, let's say it will, we have to think over that, and probably some amount of saving on the GST will also be there, because if it is included in the, let's say, interest rate, if it is a charge, you have GST over and above that, and if it is in the included in the interest, you don't have the, let's say, GST part on that. Some amount of, let's say, thought should be put over there to take it forward, but it will be definitely, let's say, beneficial to the customers, and overall transparency will be getting better and better.
Right, we also have with us Keki Mistry, former VC and CEO of HDFC Bank, joining in. Hi, Mr. Mistry, thank you very much for taking the time to talk to us this morning. No surprises on policy, not too much of a change in the tone or the stance, more or less on expected lines, or would you have expected or liked a slight change in stance, commentary maybe? He hasn't even said much on liquidity in that case.
I don't think I would have expected too much of a change, given the fact that the external environment continues to remain uncertain. Like you've seen that, you have 3 wars going on, 2 wars going on, and 1 near war going on. You have this Gaza issue, you have the Ukraine-Russia issue, you have this, conflict between US and Iran. So in that kind of an environment, things can be very uncertain. You could have a sudden change in oil prices, sudden change in sentiment. So given all of that, I think RBI will continue to be watchful. My sense is by the time we come to, let's say, May or so, around May, RBI will get a better fix on where they expect the monsoons to be and whether we expect a normal monsoon and therefore normal, agricultural output, and then maybe act in terms of lowering interest rates. But I still believe that once the macro environment stabilizes, and if we don't have any surprises on the monsoon front, we could look at a rate cut coming sometime in the, maybe even in May, June.
Mr. Mistry, good morning. Neeraj here. Just wondering, did the confidence of the Reserve Bank of India on growth surprise you precisely for the reasons that you mentioned, with the conflicts going in and world growth slightly looking dodgy? Is 7% number that the Reserve Bank has said, did that surprise you?
No, not at all. If you ask me personally, and I've said this before also, in my view, a growth may even be slightly higher than 7%. We are not that much dependent on global factors as the rest of the world, in the sense that our economy is largely a domestic economy, and as long as we are creating jobs, people have jobs, they have income, they are spending money, consumption is there, manufacturers are incentivized to produce more. Because they are producing more, they're hiring more people. So the economy is on a roll. And there's a multiplier effect to these things. So I'm not at all surprised. In fact, I would believe, in my opinion, that we would end up with a number higher than 7.
Okay. Mr. Mistry, appreciate that. Thank you so much for taking the time out and being with us. Really appreciate your time. My colleague Vishwanath Nair is now standing by with the key highlights of the policy and what stood out for him. Vishy.
Right, Neeraj. So we expected a dovish sort of policy, but then, of course, the RBI governor came in and delivered a slightly more hawkish tone in his commentaries. Now, of course, the point that we have to watch out for is that 6th policy, again, status quo, the stance remains the same as withdrawal of accommodation. But the RBI governor's main point is that there is a lack of transmission. There is an incomplete transmission happening in the credit market, for which reasons he didn't explain during his speech. Maybe later in the press conference he will explain it. And the other main point is that the inflation is still away from the 4% target. So those 2 things are the most important driving factors of what future decision making on the monetary policy front are going to be. Now, if you look at where the RBI is projecting inflation for this financial year as well as the next financial year, FY25 is expected to be around 4.5%. Inflation hits 4% at some point in September, and then later on in the following 2 quarters of the next financial year, you will still see inflation remain higher than the 4% target. So that's something that you need to watch out for, and how that influences the RBI and the MPC's decision making. Liquidity front, I heard Samina say that they didn't make any clear announcements on liquidity. That's true. They didn't, but what the RBI did say is that they will continue to do two-way sort of moves, which is infusing liquidity when needed and absorbing excess liquidity whenever the situation warrants it. So the RBI remains nimble as far as managing the system liquidity is concerned. On the growth front, the target of about 7% for FY25 sounds of a very, very strong sort of growth momentum. The RBI governor has said that the strong growth momentum we saw in FY24 is likely to continue next year. Now, apart from all of these rate-related decisions, I think two important things that the RBI governor did talk about. One was on the key fact statement bit, which till this point in time was only on for digital lenders who need to issue a key fact statement to the customers, which details all the interest rate as well as other costs involved with a loan. So now that will be extended to all retail and MSME loans. This is intended to bring in more transparency, but of course this raises the compliance cost for banks and NBFCs who traditionally did not do digital lending. The other important bit is on the CBDC front. The RBI is proposing to bring in additional programmability. Now, to my mind, that's a bit of a dicey area, because the whole intent of bringing in e-rupee or CBDC is to make digital rupee the equivalent of paper currency. Now, if you bring in additional programmability, which is to say that this money can only be used for a specific purpose, if you bring in that kind of programmability, then you take away from that fungibility factor of the paper currency, and that takes it away from the commonality between digital rupee as well as the paper rupee. These, to my mind, were the most important sort of factors to watch out for as far as the monetary policy announcement is concerned. Let's see what happens during the press conference. Specifically, I would really like to know what the RBI governor meant by incomplete transmission and what the factors behind those are.
Right. Thank you, Rishi, for that. Of course, Gus, you've got to run for the press conference, but we will catch you soon again. Neeraj, explain this to me, and we're a little perplexed at this stage. There was really nothing too exciting in that sense in terms of the policy, and I'm not saying that's a bad thing. No change in policy, not the governor not sounding dovish at all, in fact highlighting global concerns that could play or could be the jack in the pack. Why, I don't know if you've got a cue on this, and I know equity price is just one part of it, but PSU banks specifically are having a field day this morning. What are they getting excited about? Anything that you found that we haven't managed to catch?
No, nothing. I haven't really caught on to anything which I think should have a particularly impact on PSU bank shares. Could be one of those days when the market is just kind of looking at a particular segment. But in the policy per se, I did not see anything which has a positive or a negative bias for a particular set of banks.
Anubhati, I want to come to you now. You did say that you're largely in line with what was expected, but anything more that you'd have liked to see in terms of commentary? There were some parts of the markets expecting maybe a slightly more dovish commentary, which in my opinion hasn't happened. And also with liquidity per se, the governor has maintained that they are nimble-footed. They will do what it takes when it takes. Nothing too detailed in terms of liquidity management. Were you a little disappointed on that front?
On liquidity, I won't say that there were disappointments. Market always expects very explicit guidance or very strong measures when it comes to liquidity management in every single policy meet. But if you go, barring the ICRR announcement which happened in the August policy decision, otherwise, very strong statements of liquidity have never, are usually not made during the policy days. They are made out of the policy days. So I don't think I would say that I'm disappointed to say so. Whatever is required, I think RBI will continue to do on the way they have been doing it for the past several weeks. On your point about dovishness versus hawkishness, yes, we expected a little bit more acknowledgement
on the way domestic inflation has panned out, especially given where core inflation is. And in fact, if we just step back and look at some of the comments which were made by the governor earlier in the year at Davos, his first interview where he sounded a lot more positive about the domestic inflation trajectory. That was missing in this policy statement. So our sense is this is primarily driven not by some fresh development between Jan and Feb in the Indian economy, but probably is weighed down more by what's happening globally. As I mentioned earlier, Middle East tension needs to be watched out because it has a lot of implication for oil prices. And also, if you look at the US economy and the pushback which the market in general has got on rate cut expectations from March to May, I think these are very important factors which any emerging central bank governor will have to take into account. So more cautiousness is primarily driven by global factors, in my view, rather than anything changing on the negative side domestically.
Got it. Anubhati, Neeraj, Gambhir, lovely talking to you, both of you. Thank you so much for taking the time out and being with us. Mr. Kanimodi, I have one final question for you, and that is around whether the policy statement in some sense leads anything about growth for the banking sector, because there are a lot of question marks around credit deposit ratio any which ways and the extent of private capex and what it could do to growth per se.
See, even though you don't hear anything very specific or very pointed, the general message that what I say slightly different from my previous speakers, in the sense that the period of focusing on the inflation targeting, there are multiple statements, but directionally things are cooling up. So eventually at least the light at the end of the tunnel is visible, and going forward you will be sooner than later you will start seeing the interest rate coming down, which should propel growth. And there was a specific statement which I could hear which said something like from inflation targeting, now we are we'll start focusing how to support growth and something like that. So things have to, we should be getting for better days to come.
Better days to come. Mr. Kamakodi, I'd love to talk to you longer, but we're sadly out of time this morning. In the meantime, so thank you very much for joining us. But in the meantime, the markets are almost holding steady. Banks are having a great day. I guess it's a trading day for PSU banks. Nifty is actually inch lower, so my bad.
Nifty, private banks are down, but PSU banks are doing well.
Private banks are lower. The Nifty itself is off. PSU banks, stocks like SBI, are looking exceptionally well placed in trade as we speak. Even PSU banks has come off just a little bit in the last couple of minutes. SBI trades the gain of 4%. But what is catching our attention is LIC has taken its peers along higher this morning. LIC trades with a gain of 8%. The New India Assurance is up 11.5%. General Insurance, GIC, is also trading with a massive gain of about 12%, turning out to be one of the top gainers on the Nifty 500. So those counters, again, catching our attention. Neeraj, I'm not sure whether this is just pure trade or there is more on...
Also, the data that came out maybe late hour yesterday.
Data, what the Prime Minister said, and LIC earnings. I guess there are three good enough reasons for the insurance back to trade firm. With that, completely out of time, but thanks for joining. There's a lot more programming on the other side, so stay tuned.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams.
Hello and welcome. You're watching the Small and Mid Cap Show. I'm Harsh Saita. With regard to where markets are, of course, 0.5% lower on the Nifty, but we're going to quickly focus on some key names in focus today. And the first one we're going to talk about is Keystone Realtors. The company recently posted third quarter earnings where the profits saw a multi-fold rise and margins were down when I'm looking at it year over year. We have with us Boman Rustam Irani on a day, of course, when we also had the RBI monetary policy statement coming out from the RBI governor. Let me first start off with that question. We haven't really seen as of now with regard to the stance itself any major change. Boman, talk to us about what you believe from the statement life will look like going forward, especially with regard to interest rates, because real estate is such an interest rate sensitive sector.
That is so true, Hiral. Thank you very much for having me on your show. Real estate, they say in real estate, it's not the price of the transaction, but the way it is funded that is critical. And this is absolutely right, no matter which part of the country you go to. And whether you're buying an affordable home or you're buying a uber premium home, you're generally affected more on the affordable home side when you're talking about the interest rates. Actually, while I'm still okay with the fact that they've not changed the repo rate, obviously I would have liked for it to be tweaked down a little lower. Having said that, I think all the signs are very good. The consumer price index, which is about 5.4 for this financial year, stands to go down to about 4.5 in the next financial year. We also have the RBI pegging the GDP real growth at about 7.7% for financial year 25. And we have the repo rate, which is unchanged as of right now, which means that it's going to be great for the home loans, which directly, as you mentioned, affects the entire housing sector and purchasing power of my consumers.
Sure, understand, Boman. Quickly with regard to where you see your numbers and how do they really start to add up. Your GDV, or rather gross development value, which is your your new developments that have come on stream, 9-month FY24 stands at roughly 2,200 crore. You still have 2 projects in the pipeline to be launched by end of this year. What would the rough GDV for that be like, and what would the execution timeline for that be like?
So Hiral, actually, our business development teams have been very active, and on the redevelopment front, where Rustomji, Keystone Realtors is considered as one of the developers that has consistently performed, is going extremely strong. It's always good to be the developer of choice when a society is going in for a redevelopment, because they believe, or they strongly believe, in our ability to complete a project in the timelines with the amenities and all the promises made to them for the period. I'm happy to state that, as a matter of fact, the last 9 months of this year, we've done approximately 5,100 crores worth of GDV projects that we have bagged. And this is a little more, I mean, if you consider the 2 projects that we've tied up in this month, we've more than doubled our GDV of last year. That was about 3,425 crores that we had acquired. And again, keeping in mind with our guidance, we have said that we'll continue to grow in the mid-mass, which is the 1 to 3 crore segment, and in the aspiration, which is the 3 to 7 crore rupee segment. And if you see all the news that is out there, our maximum purchases or our maximum tie-ups have taken place where we can provide our consumers homes in this price point. We continue to be extremely bullish on the western coast and the western railway line of Mumbai, and we believe that that is going to be the side that really continues driving growth. At the same point of time, our Thane continues to be a very sought-after project, it being a township of 127 acres. We've done extremely well with the 3 launches that we've had this year over there. So overall, I think the year will be very much as per our guidance, and we hope to cross those numbers as well. But a 25% growth that was given as a guidance will definitely be clocked, or rather we might even be kind of clocking over that as well in this year itself.
Sure, Vaman, point taken. Just quick clarification, you're speaking with Harsh Saita, so just that one piece. But also, if I can, sure, no worries there. But if I can quickly try and understand with regard to your, pre-sale numbers, Q3 FY24, 616 crore. Now with these 2 new launches for the for this Q4 of FY24, pre-sale number would be a slightly larger number in this quarter?
Yes, they would be larger in this quarter. As a matter of fact, as we all know that the Q4 always stands to be one of the best quarters in the year, because a lot of people are, while we are done with Diwali and Dasara and the season, which is the Q3, but the Q4 also, there's a lot of buying interest that takes place. As a matter of fact, we participated in one exhibition, and the response was extremely great. And now we're participating in another exhibition. Again, these are projects that are localized to that particular area. But the Creta MCHI exhibition has been extremely good for us. And we've clocked more than the regular number of apartments that one would expect out of there on the spot bookings as well. We are very, very hopeful that, the 616 number that we've had, which is about 101% over the Q2 and about a 42% year-on-year growth over the Q3 last year, will be excelled in the Q4 as well, and we'll well cross the 25% guidelines that have been offered, Harsh.
Sure. Bowman, what about debt? You've guided for 1:1. Currently, your debt is still coming off. My guess is, as some of these pre-sale numbers start to stack up, your debt has more scope for coming down before it goes back up, or how should one look at debt?
No, Harsh. Basically, at Keystone, we've kind of decided, or we've given a guidance that our debt to equity would be 1:1. As of right now, we are at about 0.5. And this 0.5 also that we've gone up in our debt, our gross debt is roughly around 889 crores, whereas the net debt is about 458 crores. The reason why this debt has gone up is because we did an opportunistic purchase for a project that has been very much in our development itself. There was an opportunistic buyout of the developer, and that is where we've kind of raised our debt to take that over. I think it's a strategic move that we've taken, and this will pay us heavy dividends in time to come.
Sure, understood. You are still seeing, from an overall demand perspective, Bowman, demand sustain, hold up, at least from your commentary, that's the sense I'm getting. So plenty of positives, right, for the real estate sector, given that you're at the top end of the interest rate cycle and demand has continued to sustain in some of the largest markets. You cater only to Bombay largely, and it's high ticket.
Harsh, I'm happy to state it's not only my experience, but across the board, any developer will tell you that real estate or other good developers who are selling homes where they are not only looking at price points, but are looking at volume and velocity and are in a position to offer the consumers what they need, are seeing tremendous growth taking place. I also want to state that time and again, CredEye carries out various reports, and we carry out reports with as much as which are the cities that are going to grow in the future, and there are 9 cities that are definitely on a growth path, and we are talking of 60% urbanization of the Indian population by 2030. These are not my figures; these are the Government of India figures. And add to that the MMR, which has performed phenomenally well, with being 42% of the entire residential. Recognized residential real estate by value in the last year, should point out very clearly to a great growth. And I am very happy to state that the infrastructure growth that has taken place in the city of Mumbai will actually add to Mumbai and the MMR tremendously. And we at Keystone are always following wherever the infrastructure grows. We are in alignment with the government's vision of providing homes across various categories. And we are present, Harsh, in all types of development, everything from affordable, which is the under 50 lakhs. In the mid-mass, we are holding a very large amount of supply that is going to come out. And this is one of the strongest segments. That is the 1 to 3 crore apartments for Mumbai city. Then we've got aspirational, which is the 5 to 7, which is everything from Andheri West to Bandra East. And you're aware of the kind of developments that we are doing out here. We are tying up newer and newer developments in this area as well. And finally, in the premium and uber premium, there's a very strong buy. People are actually making investments in real estate, and we are one of those that continue to be supplying or rather taking care of the needs of our consumers, and we are beneficiaries of the same.
Got it. Okay. So that winds my conversation with you for today. Thank you so much for all of that perspective, Bowman. And
thanks, Harsh.
yes, and from the viewers as well. Thank you for all of that. But we'll slip into a very short break. More on the other side. We'll also speak with the management of Nexus Select Trust. Also something happening in markets. We'll talk about all of that and more.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with with all you need to know on NDTV Profit.
Listen to the voices of reason as they...
Welcome back. You're watching the small and mid cap show here on NDTV Profit. I want to quickly flag off markets. We've seen a bit of a slip up, 200 plus points in fact, from the top for the day. And that's where we're at post this RBI MPC address by the RBI governor. I want to also quickly flag off the contributories on the Nifty 50, and what you'll see is only 7 positive contributors, at least the way I'm looking at it right now, only 7 positive. The top negative is HDFC, ICICI, so the 2 largest private sector banks are leading the fall with regard to where the Nifty 50 benchmark is concerned. Axis is the 4th largest in terms of points decline, or 3rd largest now as we speak. So a lot of pressure coming in from there, but you look at SBI, it's playing the offset. And if I can also lastly have the advanced decline very quickly to try and see how stocks have moved. And the advanced decline ratio will also seem to suggest, see, that very sharp reversal being seen in advances versus declines. But we have with us Ajay Bagga. He is, of course, a market expert. Ajay, it's firstly a pleasure having you on the small and mid cap show on NDTV Profit.
Thank you very much.
Ajay, so, I want to quickly try and understand from you your take with regard to the policy itself. We're seeing largely all sectors in the decline except the Nifty PSU Bank. How are you viewing this development, and how are you viewing the commentary? Because nothing really surprising came out from the commentary, but markets not reacting positively at all.
Yeah, I think 2 surprises you can say. The policy was hawkish. So one was expecting that for the 6th policy in a row, when you're not raising rates, it should have become more dovish. But the commentary was quite hawkish. On balance, the inflation issues remain, though inflation is trending downwards. I think the 2 major points which kind of spooked the markets. One is the fact statement on loans. If you are taking loans, there are a lot of hidden charges like processing fees, documentation fees, like advanced EMIs, which are taken especially on consumer durable loans, things like that. So bringing all that into one interest rate might hurt margins. The second hawkish part was that the liquidity issue was not addressed. So the governor did describe it, and overall systemic liquidity might be okay because the government has not been spending. But come March 15th, when the money goes out of the system for advance tax, you will have an issue in the busy season going in with a liquidity deficit. And the bond yields immediately factored that in, and they started showing that the market was not very happy with the liquidity measures or the lack thereof. So I think these were the 2 big issues: overall hawkish tone and nothing for the market to price any up move further. And the markets were priced to perfection. So natural some amount of sell-off has come. It will get absorbed.
Sure, some great takeaways there, Ajay, from you. I want to also try and understand from you your view on the Nifty PSUs, or rather just the PSU pack, which has been on a tear. And just try and understand what your sense is with, or what's your analysis or thesis with regard to the kind of returns that some of these stocks have given. Of course, maybe SBI, CanBank, maybe exceptions, but outside of that, also if you have a viewpoint, that'll be great to understand.
Yeah, on the mid-tier and the smaller PSU banks, I have 2 words: watch out. Because and look at the price to book. There is very little free float left in a lot of the mid-sized banks because the government kept capitalizing them over the last 5 years, and so most of the stock is lying with the government, which doesn't sell on a daily basis. It will announce an OFS or a fundraise and then do it. So on very limited floating stock, we are seeing very high price appreciations. In some cases, even 50% hikes in 2 weeks is what we have seen in some of the smaller PSU banks. Price to book going to 6 times, which is like, the best run NBFCs growing at 30% would also pant and sweat to get valuations like that. So overall, fundamentally, there is a re-rating. Overall, fundamentally, 10 years, 12 years of underperformance has got repriced. Overall, fundamentally, the PSU bank pack, first 3 quarters of this financial, the profit after tax has gone up from 70,000 crores to 98,000 crores. So great show. But the pricing has run ahead of the fundamentals, and that does not end well because of the lack of free float. A lot of, I think, engineered price hikes are also happening. So I would be cautious. The big banks, very good. It's a turnaround story. It's not over. By all means, we can look at them. But the smaller banks, be careful whether, the engineered price has taken over rather than the fundamentals.
Sure, Ajay. Ajay, I'm going to stick one quick question with you. Maybe if I can have it that in maybe 10 to 15 seconds. What sectors are you looking at?
I think IT pharma is what you should look at. If you are playing for a global recovery, a global soft landing and a global recovery, global rate cuts in the second half of this year, I think IT pharma would remain the top sectors.
IT pharma it is. Thank you so much. It's a pleasure having you here, Ajay. And of course, we'll be in touch to obviously dissect your views in greater detail. But that's all we have for today's show for now. The markets have held up that slip. They've not slipped further, which is possibly a positive. But with that, we're completely out of time on this edition of the Small and Mid Cap Show. Thanks so much for watching. From myself and everyone who puts the show together.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable show.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy?
Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary. We'll take you through the next half an hour or so of trade. This show is aimed at getting you answers to all of your stock-related questions, whether it is short-term in nature or long-term. And so if you're holding on to something that you wonder whether to sell, or if you're thinking of buying something fresh, then to find out more about that, you can write to us on any one of our social media platforms, or indeed on the WhatsApp number that should be flashing on your screen right now. In fact, it is. Let's very quickly take you through where the markets are right now. In fact, you've seen quite a bit of churn in the session today. Remember, it is the weekly expiry, and so you're bound to see more volatility, but you've seen quite a bit of a falling off in the equity markets post the statement of the RBI Monetary Policy Committee's decision that was to keep the rates unchanged, and the stance as well was kept unchanged. As things stand, you have the Nifty Bank that's trading with cuts of about 0.9%, and you have the benchmark index, the Nifty 50, that is down about 0.8% or so. In fact, even the broader markets not doing too much, but performing better than the benchmark at least. The mid-cap index up about 0.1%, and the small-cap index trading more or less flat. Let's take a look at the advanced decline ratio, because that more or less will tell you the texture of the market so far. And you see now that there are more declines than advances as opposed to what you saw at the start of the session. We've got Gaurav Bissa that's with us right now. Gaurav, thanks so much for taking the time. Why did you talk about the key levels to watch out for heading into the expiry, and the fact that we've seen quite a bit of selling over the last 1 hour or so?
Good morning, Alex, to you and your viewers. See, if you talk about Nifty, it was seen to be forming a cup and handle pattern formation on daily charts. You can also think of this as a cup and handle formation on 2 hourly, 3 hourly charts. We were expecting that this fall that we witnessed yesterday would be the last instance where we will see. That was not the case, however. Even at the current juncture, I'm not too bearish on Nifty. If you look at the hourly chart, it is currently trading in a channel triangle pattern, and supports are firmly placed at levels of 21,800 on the future side. One can keep this as a stop loss. It's just 50 points away. One can keep a 50-60 point stop loss and buy. It will have some risk, but in my opinion, the risk reward is favorable for a bounce back. I'm not saying that it will move 300-400 points from here, but it can again scale back about 22,000. So in my opinion, this can be a good trade.
All right. Thank you so much, Gaurav, for that. And good morning to all the viewers. We'll quickly jump into the focus for the day, which is LIC. Now, the stock is gaining about 7-8% in trade. It's about 7% up right now, and that's because of the earnings that'll come out this evening. But let's take a look at what's expected out of these earnings today. Now, if you look at the APE, that's the annual premium equivalent, that's seen to rise about 9% to 11,224 crores. On the other hand, the VNB is seen to rise about 25% to 1,741 crores, and margins are expected to be above 15% in this quarter as well. It was compared to the previous previous year, it was 13%, so a bit of an increase there as well. Now, we have already seen a bit of rally in LIC shares in the last couple of weeks. However, we'll take it to our fundamental guest, that's Ashish Kapoor of Invest Shopee. Ashish, what is the expectation from LIC? And we've already seen a run up in the stock price as well. Is there more upside to it from here on?
I think so. I think, the whole market is playing on the PSU theme, and this is one of the very large successful PSUs. Also, relatively, the insurance sector has underperformed and kind of overlooked the great insurance penetration potential which our country has. Which is best captured by LIC. So according to me, LIC still has a lot of scope to go higher. And I have earlier also suggested a target of, recommended a target of 1,500, and I stick by it. I think 1,500 hopefully within less than 1 year is something which we should see on LICs.
All right. It's time to jump into the queries, and we've got quite a few that have already come in. The first one we'll take is from Prasanna this morning, and he's looking for an entry into Suzlon, and he's not really mentioned his time horizon. So I'm going to go across to Gaurav on this one. Gaurav, on the charts, Suzlon, trading very close to that 50 mark now. Is it a good time to enter the stock right now?
I don't think it's a good time. The trend reversals on long-term charts were confirmed at 10 odd levels, and some of our clients had bought. I generally avoid stocks which are in double digits because people generally don't follow risk management that closely. Having said that, it's moved up from say 10 to 45, 50. The latest swing breakout was around 35, 36, where we have seen a fresh breakout. After that also we have seen a 30-40% upside sort of coming in. So in my opinion, this is not a good time. Even though you may have a very long-term horizon, the gentleman might want to keep it for next 3 years, 4 years, 5 years. But at what level you buy, that also makes a lot of sense. It is equally important, not just that if you have a long-term horizon, I can pick randomly any stock. So right now what he's doing is he's chasing the stock. It's more of a FOMO factor that we are looking at this one, and in my opinion, one should avoid that.
All right. Next up, we're talking about Vadilal Industries. Now, Satya has bought the stock at 2,200 levels. The stock is currently trading at around 3,700 levels. So a considerable profit there. But he wants to know the targets for the next 1 to 2 years. Ashish, any specific targets for Vadilal Industries?
No, I haven't tracked it lately, so I won't have any specific target. But on the whole, this has been a great turnaround story, and I think story still has more legs to go. I think the valuation was very, very cheap till a couple of years back when it was less than 1,000 rupees this stock. From there, it has got re-rated, done very well. But I think certainly one can hold on to it. I think there is more scope on the upside, and the company should keep doing well and keep generating value for its shareholders.
All right, Manoj has got the next question. NBCC is the name of the counter. He's saying that he's making profits of as much as 60% on this particular counter, and he's wondering whether to exit or hold for more potential upside. Gaurav, on the charts, is that possible? Further upside, it's down about 1.5% in trade today.
It depends on what the time horizon is. So we advised our clients to buy NBCC when it was around 60, where the trend reversal also was confirmed. There was a swing breakout as well. And we have booked positions. It has moved up 30-40% after that as well. Having said that, the previous lifetime high was around 145, 146, and currently it is giving a swing high breakout on monthly charts. So if his horizon is for long term, he can keep it for 1 year, 2 year. Then what he should be doing is take out the investment part, book some profits at the current junction, and then hold on. A monthly close about 150, 155 would confirm a swing high breakout in the monthly long-term charts as well, and then that can push the stock towards 180, 200. So structure remains positive, volumes are still there, but some profit should be booked. But if his horizon is say 2 or 3 months, then I think he should book right away.
Right. Next up, we're talking about a couple of stocks here. This one's from PK Bandhopadhyay, and they're talking about IRFC, PFC, and IOC. Now, Gaurav, any key levels to watch out for in these three stocks? IRFC, PFC, and Indian Oil Corporation.
When it comes to IRFC, we have seen the stock quadrupling, if not less. And we have seen many of the railway stocks also doing something similar. At the current juncture, we are advising our clients also to buy on declines because we have seen very strong upside on all the time frames. Momentum indicators are in the overbought zone. So for me, it's a clear avoid. We had recommended much lower levels. When we exited, it has doubled from those levels as well. So for me, it's an avoid. When you buy something, it's a function of what will be a stop loss and what will be the target. You can always say my targets are 2x, 3x, my horizon is 5 years, but will you be able to hold your panic level if it corrects 40%? I'm not saying it will correct 40%, but in case if it does so, will you still panic or will you hold? If not, then probably you can buy at the current junction because the story seems to be for another 3 to 4 years. For me, this is an add-on declines. Similar is the case with PFC. When we first recommended it was around 140 odd levels. I'm talking about the post corporate action adjusted one, and our targets of 3x. So it has also been achieved. We have booked profits in PFC as well. So all of these stocks have moved up a lot, and this is nothing but chasing the stock which is in the flavor at this point in time. We don't know when they will correct because there has been a vertical rise. If you see the monthly charts as well, you will find every month close for the last 7-8 months, it has been higher. And majority of times, every month it has added 10%, 15%, 20%. So in that scenario, once it starts correcting, the supports will be very deep. So I would skip all of these three at this point in time.
They've already bought in these stocks. So would you suggest taking some money off the table in three of them?
Certainly. See, if you have bought the stock at lower levels and if your buying price is fairly low and you are making good amount of money, you should take out the investment part and keep riding. I'm not saying the structures are weak or the sectors they are into, they are not looking good or they don't have a tailwind. They are certainly very strong. So if somebody's already bought, they can keep riding it, keep a trailing stop loss and keep riding it. Book out certain profits and keep riding. But fresh entry has to be avoided. Neither one should buy a fresh, nor one should try to average it.
The entire power theme has done incredibly well. In fact, we've got a question coming in from Kushal. Kushal is writing in from Mysore and asking about Asian Paints. What would you say about this one, Ashish? Would you say that it's a good stock to hold in your portfolio and therefore no real time per se to consider adding into this?
Well, I think historically this has been the most consistent wealth generator, at least as far as the large caps are concerned. It has had about at least a year plus of deep underperformance and also maybe 3 years of relatively underperformance, which is very strange for this stock. The company otherwise, of course, is the market leader. One reason why of the underperformance is I think the competition in the paint segment has really gone up with a lot of new entrants. And second, of course, I think too much of noise was being made a couple of years back about Asian Paints being such a consistent performer. And I think psychologically, the market tends to go on the other way. And we can put it like that, it resulted in over ownership of this stock, which has resulted in this. And I think combination of both the factors have resulted in this underperformance over the last couple of years. The company, nevertheless, is fundamentally a very strong story. It still remains very great market leader in a growing industry and with a very impeccable business model, very difficult to replicate the kind of business model which they have. So I think sooner or later the stock will come back. I think it's a great time to, in fact, one of the very safe large cap stocks in the market today, which investors can safely buy. Downside is now very limited, and upside may take time, but it will be pretty good on the upside. If you can wait for 3-4 years on this, I think the returns will be very handsome, and risk is very well defined now.
All right. Next up, we're talking about Yes Bank. This is from Abhi Sharma, and there's one more viewer that is asking about the same counter. Now, Gaurav, if you can give us a target for the next 6 months for Yes Bank.
To give targets for 6 months, there are two reasons. One, if you look at Yes Bank in isolation, it has been trading in a range, and we have seen some good amount of volume participation picking up at the lower levels, and it has moved up from 17, 18 to 30 at the current price, at the current juncture. So it's already moved up. Almost it has doubled in last 3-4 months. So in my opinion, if you are buying here, or if you have bought, start booking some amount of profits. Second, I am not too comfortable with 6 months time frame, and this is something which we have advised to our clients as well. The reason being that we have union elections around April or May. So in next 2-3 months, we'll see some volatility coming into the picture. Nifty index, mid cap, small cap, these indices already moved up. So as such, they are in the overbought zone. There might be some increased volatility because of that factor. Add to that union elections. Then you have US elections approaching in November. So there's going to be fairly a good amount of volatility. And for that perspective, we are also advising our clients that either you keep 1 or 2 months horizon where you keep churning your portfolio. You have good amount of breakouts, small reversals where you can make decent money in the short term, or you have a horizon of say 1 year or more where the entire expected volatility will be taken into account. But this 5-6 month time frame is something that we are avoiding and consciously avoiding, aggressively avoiding at this point in time. So either he changes his time frame, keep a horizon of say at least 1 year. I think he can make good amount of money from the current level as well, or he should start booking profit next couple of months.
Okay, fair point, and very well explained at that. Gaurav, Ashish, do stay with us, and viewers as well. We have to slip into a very quick break, but we've got more questions that we're taking on the other side. Do stay tuned.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा, और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead?
Welcome back. You're watching Ask Profit. Next up, we're talking about Inox Wind Energy. Now, this one's from Amit Rastogi, and they're asking if there's any arbitrage opportunity left. I think in June they announced that the company is going to merge with the parent, which is Inox Energy. Ashish, what's your view on this? And they want to hold the stock for 1 to 2 years.
Well, frankly, I haven't tracked it lately. I can't comment on the arbitrage opportunity. Yeah. The sector as a whole is doing well, but I don't know much about this particular company.
Okay. Any views on the merger as well? I think this came out a couple of months ago.
No. I honestly, I haven't.
All right. We'll quickly then take some key levels on this counter. Inox Wind Energy, Gaurav, how does it look?
See, we had given it at lower levels to our clients. We booked out, like many of the stocks were booked out and stocks are still flying. That is the kind of momentum we are seeing in the markets at this point in time. Having said, there's a small flag breakout, and once it gives a close above 560, I think momentum can push it towards 600 quite easily. One can buy above 560. That is going to be the key level to watch out for. There's a good breakout, flag breakout. It's a continuation pattern. And you need to at least hold for a month, 1.5. You can make decent amount of money. So see, people who have already bought can keep holding. A fresh entry, I think 560 is the level that one should watch out for.
Right. Mohit from Ludhiana has got this next question. He's asking about Shipping Corporation of India, which he's bought at levels of 39.4. And he's also asking with regard to the upcoming divestment of SCI land and assets, which I believe is going to happen in the next couple of weeks, a few weeks or so. He's saying that he can hold from the perspective of the next 2 years. Ashish, on the fundamentals, how does it look? Of course, I guess one of the counters that has gotten affected by geopolitics that is plaguing a lot of businesses around the world.
Yeah, but having said that, again, this is one of the stocks where performance is likely to improve going forward. So, yes, immediate there could be some hurdles, but I think overall the growth looks quite interesting going forward. So, and the valuation comfort is there. So, I think yes, one can hold on to this company.
All right. Next up, we're talking about this one's from Jay Krishna from Kozhikode. This time I'm pronouncing it correctly. And this is on APL Apollo. They've already bought the shares at 1553, and this is for the medium term. Should they continue holding on to it is the question. Ashish, do you track this counter? Any views based on the fundamentals?
Yeah, I do track, and I think this is again a very solid, good company, very fundamentally very good stock. I think you should not bother about the near-term fluctuations. Continue to hold on to it. There's plenty of more capital creation which is going to come going forward.
Okay. We've got Apurva from Pune who's asking about NHPC, and I believe there are a couple of others also that are looking at this as a possible stock to pick up. The question that he has is that he purchased it during the offer for sale that was announced by the government, and he's asking what the target for the quarter would be over this quarter. And I do understand, I take your point, Gaurav, about the shorter term target, so let's push that further down. And one of my viewers in fact was looking for a very short term target. He was talking about 1 day. But then what would you say in terms of advice for NHPC?
See, it is always difficult when the prices are forming a lifetime high every month, right? So where exactly will that stop? It is just anybody's guess. What I can say is when we gave around 40, there was a multi-year breakout at 40 odd levels, a good consolidation breakout. After that, the stock has now more than doubled. So at these levels, I would suggest if you have bought at lower levels, keep booking profits because the targets are getting achieved. For me, the targets were 80, 85. Our targets were achieved. We were out. It's moved from 80, 85 to 100 now. So it's still above those levels. In my opinion, this is a time that one should book profits. If not entire, at least book 50, 60% and then keep riding it because giving targets at lifetime high levels where exactly it will stop, it's next to impossible. And every month it's adding 20%, 25%, 30%. So whether next month will be positive or not, difficult to say. Like in current month itself, you can see the high was 115, currently it's 100. So there has been almost a 13, 14% drop from the high levels. If it falls another 10, 15%, nobody knows that, right? So in my opinion, if he has already bought and it is a profit, start booking out profits. For us, it's achieve the targets.
All right, that's all the time we have on the show today. Thank you, Gaurav and Ashish, for joining us and for answering so many questions for us. Thank you, viewers. We'll be back tomorrow, same time, 11:30 a.m. But stay tuned, lots more coming up on NDTV Profit.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all that is buzzing in trade today. Well, we've already had the Reserve Bank of India's governor speak to us, and while the interest rates remain unchanged, we haven't seen too much of a change in terms of stance or, for that matter, any of the other commentary that's coming through. And after that, we have seen a little bit of a correction as far as markets are concerned. They're not at day's lows, at least as far as the benchmarks go, but we are seeing some amount of weakness seeping through. The question really is that while it has been a choppy day, can we expect a little bit of recovery as we move into the second half of this trading session? Remember that it is the Nifty weekly options expiry, so one cannot rule out that amount of volatility and choppiness to come through. That said, as far as your broader markets go, for the mid-cap and the small-cap indices, well, they've moved back into the green at the moment. So that, of course, is always a positive taken in with both hands as far as bulls are concerned. The question really is that at the moment, where do you go from here? So with that, let's take a look at how well, markets are faring, at least as far as your Nifty is concerned. I want to start by taking a look at the constituents of the Nifty and where we're seeing that pull and push coming through. So, we do have SBI, which is leading the pack. On the other hand, we have banks such as ICICI Bank and HDFC Bank weighing on the indices at the moment. Of course, Power Grid is one of the other counters which is giving a substantial amount of an up move there. But to talk about the broader markets, and certainly broader markets will be all about earnings, because that's where we see the sharpest reactions coming through. And, I'm going to start by taking a look at some of your big movers. So we have Trent. Now, Trent is that F&O stock which advanced by 19% yesterday, and it is advancing by another 7.5–8% today. In fact, at a new life high as we speak, and that's been a sharp up move. Of course, Trent is also reacting to earnings which came, because of which we saw that strength come in yesterday. Then we have Cummins India, and Cummins India is up around 7.5% as well. Again, very strong quarter coming in for Cummins, and because of which we're seeing that gains come through. Tata Tele is the other one where it's up around 6.6%. And we also have Z Entertainment, which is also advancing by around 6.5% as we speak. So on the whole, we are seeing a lot of strength here. Let's pull up Mankind Pharma as well. Mankind Pharma has seen a bulk deal in today's day of trade. And as far as that one's concerned, it was not necessarily just on earnings. We're also seeing a lot of buying traction. So Mankind Pharma has advanced on some very, very strong volumes as well. Moving into a handful of other stocks in the broader markets which are seeing a decline, well, we do have something like a Paytm, which is down around 6.3%. And of course, this is after it hit an upper circuit of 10% yesterday. We're seeing perhaps markets take a bout of profits, and currently still at around 465 rupees per share. That's that's a reasonably good one to talk about. Now, that's as far as broader markets go, but we will, as you can see on your screen, have the RBI's press conference, where, of course, the Reserve Bank governor will take questions from the media. we're waiting on that one. And of course, a lot more in terms of details. We may, in fact, also have some questions surrounding fintech companies, specifically the challenges around Paytm. So we'll be watching out for that one as well. But on the whole, we're certainly keeping an eye on the economy, the state of the economy, of course, the liquidity conditions right now, and maybe we can have a little more coming through there as well. Inflation coming, and that would perhaps determine the course coming through. So let's toss back to the RBI governor.
I had said last time, just say governor.
Okay, sir. We have Shri Shaktikant Das, Governor, Reserve Bank of India with us, along with Dr. Michael Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, and Shri Swaminathan J. Along with us also our Executive Directors, Dr. O.P. Mal and Dr. Rajiv Ranjan, and my colleague from MPD and the Secretariats. So we have 22 media persons present here, and as is our want, we will first go with your opening remarks and then we'll go for the press conference. Over to you, sir.
Thank you for being here. Good morning. You have already heard the statement. It's been uploaded also. I just, as a part of initial remarks, I would like to make 9 points. First, domestic economic activity continues to be strong. We expect the real GDP to grow by 7% in the next financial year, 24-25. Second point, CPI inflation is moderating with intermittent interruptions and spikes. We have to remain vigilant about the incoming data and the outlook. Our endeavor to achieve 4% inflation on a durable basis has to continue. Third, globally, markets are front-running central banks in anticipation of policy pivots. But central banks remain apprehensive and await a more durable alignment of inflation with the targets. Four, liquidity will be actively managed by the Reserve Bank. 5, our multi-pronged, proactive and calibrated policies have worked well to maintain and strengthen macroeconomic and financial stability. 6, systemic, sectoral and institution-specific signs of stress are being proactively monitored and acted upon wherever necessary. 7, let me reiterate that good governance, robust risk management, sound compliance culture, and protection of customers' interest are the hallmarks of the Reserve Bank's approach to the safety and stability of the financial system and individual financial institutions. Regulated entities must accord the highest priority to these aspects. This is the 7th point. The 8th point is the external sector of the economy remains resilient. The current account deficit is expected to be eminently manageable. 9, the exchange rate of the Indian rupee has remained stable. Thank you.
Thank you, sir, for those opening remarks. And may I request all of you to wait for your turn to be called, and request also to stick to one question. And if we have time, we'll go for the other or second or third question. So I'll begin by inviting Lata Venkatesh from CNBC TV 18.
Thank you, Governor. Thank you, Yogesh. Sir, I'm a little confusion about whether you are distinguishing between liquidity and your stance. You have mentioned in 3 places that the entire rate hike has not been fully transmitted. So I assume you want more hike transmitted. But separately, you have said that you will manage liquidity, para 21 in great detail, that you will manage liquidity with a bunch of instruments. Should we understand, therefore, that unlike a majority of the last 5 months when call was closer to 6.75, you will be more like you were in the last 1 week, where you will give long-term liquidity through repo and adjust for short-term, which is keep call rate closer to 6.5. Is that what you are trying to say, that I'll do that, but I want more interest rate hikes to happen? Yeah. And sir, since you have dwelt twice on this good governance, I must add, are you trying to say that you will not give Paytm any further timeline to set them right? Does Feb 29 stand? Is that what we should understand? So there are two
questions actually. Yes. Two questions. So please ask one question each. The first part of the question I would request Deputy Governor Michael Patra to reply. The second part I would request Deputy Governor Swaminathan to reply. Go ahead.
As Governor has clarified in his statement, the stance is all about the future course of policy rates.
A little louder.
Sorry. Okay. Now, liquidity is endogenous to the rate. When the rate is the chief instrument of monetary policy, liquidity follows the rate. You have to move liquidity to achieve a certain rate. So our objective is to keep the repo rate, keep the weighted average call rate around. But there are times when there are temporary drivers of autonomous liquidity like government balances, which go through tectonic shifts, and market participants take time to adjust. Even they are unsure about the future direction of this. So that is why sometimes the call rate goes to where it went. But you saw that we were nimble in our actions and we brought it down to the repo rate. That is our endeavor.
But you were nimble after 5 months. So I'm asking, will you be like the previous 5
No,
months?
that is,
or will you be like the last 5 days?
No, that is not correct, because at the time when the rates were up, we allowed market participants to take what liquidity they wanted from us through our standing facilities. And we did the main operation every 14th day. So it was not that we let it go. But it was the market participants still, you saw the reactions to the VRRR. They are unwilling to let go because they are unsure about how balances will move.
Yeah, as you know, as a matter of policy, we don't comment on individual entity or actions that we initiate in such cases. But that anyway, since this question is on the uppermost of mind of most of you, I think I would like to say 2-3 things, essentially to set the context. While we don't want to be discussing the individual details here because that will not be proper. In terms of context, as you all know, that this is a supervisory action on a regulated entity for a persistent non-compliance. Second, such supervisory actions are invariably preceded by months and at times years of bilateral engagement, where we not only pointing out the deficiencies, but also provide more than adequate time for them to take corrective action. Third, of course, is in terms of, as a regulator, it's incumbent upon us to protect the interest of the ultimate consumer and thereby protecting the stability of the financial system. So these actions have to be seen in that particular context. Coming to the second part of your question, what lies ahead? You know, as part of MPC, we don't give a forecast in these matters. So I think you will have to wait. And of course, feedback we have been getting, we'll work on. And as a responsible regulator, suitable steps will be taken to ensure that the customer inconvenience, if any, is minimized. So we will take care. I think with that, we can give a rest to this question and then move on to MPC is my request. Thank you.
Thank you, sirs. I'll move on to Mr. Govardhan Rangan from Economic Times.
So thank you, sir. So good afternoon, Governor. For the rate decision, or rather, the status quo, you specifically mentioned that the transmission of 250 basis points is still continuing. So the bankers say that the deposit rates have already gone up by 250 basis points and the lending rates have also gone up. So what in your mind is the actual transmission that has not happened and how much is that? And what is the benchmark that you're looking at to conclude that the transmission has happened? Thank you.
Okay, again, like the previous questions, I would request, I think, DG Swaminathan, supplemented by DG Michael Patra, to reply to that question. Let there be wider participation. I don't want to monopolize all the answers. So, yeah, go ahead.
Yeah. See, as far as the transmission in a hiking phase, as we have always seen in the past, the rates on deposit side resets much faster. And they get passed on, and as we have seen, deposit rates have almost played out. While on the lending side, it does take time to pass for two critical reasons. In our assessment, there are two major reasons. One is that, the proportion of loans that are benchmarked externally, what we call EBLR-linked loans, is still less than 50%. So, where the transmission could be instant is only where the EBLR comes into play. In case of other instruments, other benchmarks like MCLR or base rates or fixed rate loans, it does take time to transmit. So that is the precise reason why we still see that transmission is fully not in place. The second, also in a hiking phase, we have seen banks in their anxiety to maintain their market share in the incremental credit also adjust their margins so as not to lose their market share in the incremental credit. So that also impedes a complete transmission in terms of the effective interest rate. So I hope, as we understood from the context of these two parameters. Thank you.
Anything you would like to supplement? No. Yeah.
I'll move on to Mr. Ankur Mishra from ET Now.
Mike.
Thank you, sir. I would like to ask a question once again on the persistent issue. We understand there has been meeting with Paytm officials and Reserve Bank of India. What transpired in that, I don't want to know the exact details, but from the financial system point of view, the company has been claiming that they have taken all the remedial measures and all the efforts are being made so that there is minimal or no impact on customers. So from that point of view, is there any remedial measure which has been suggested by Reserve Bank of India?
This is again a matter of bilateral discussion, so I don't think that will be proper for us to discuss it in this forum. So as I said, discussing on individual entities will not be very proper, giving granular details in this matter. So we are seized of the issue, and as we take steps, we will keep the media and public certainly informed. Thank you.
You see, as the Deputy Governor has already commented, I mean, sufficient time, I'm again saying in a general sense, not specific to this case. We give sufficient time, we give sufficient time to every regulated entity, every entity that is supervised by the Reserve Bank to comply with the requirements, the regulatory requirements. We give sufficient time, and sometimes, as he pointed out, sometimes it may even look more than sufficient time. And we would not like to act, we are a responsible regulator, we are a responsible supervisor. If everything had been complied, I'm talking about in a general sense, why should we act? I mean, after all, we have a responsibility, it's a responsible institution, RBI, so that's how it is, yeah.
Thank you, sir. अब मैं आमंत्रित करूंगा जीवन भाव सर, ऑल इंडिया रेडियो.
नमस्कार सर. पिछले कुछ सालों में, पिछले कुछ महीनों में कुछ बैंकों ने अपने लेंडिंग रेट्स कम किए हैं, लेकिन जो कम किए हुए रेट्स का जो बेनिफिट्स है वो नए कस्टमर्स को दिया जा रहा है. पुराने कस्टमर्स अभी भी हायर रेट्स पे लेंडिंग रेट्स पे कर रहे हैं. तो इसके लिए ये पैरिटी लाने के लिए आरबीआई कुछ इंस्ट्रक्शंस इशू करेगी या कुछ बैंकों के साथ टेकअप करेगी?
ये जो इंटरेस्ट रेट्स हैं जो नए कस्टमर्स को मिलता है, लेकिन एग्जिस्टिंग कस्टमर्स को भी ये फायदा होता है. जब वो रेट रीसेट होता है तब एग्जिस्टिंग कस्टमर्स को ये फायदा मिलता है. तो पॉलिसी चेंज की जरूरत नहीं है, क्योंकि जो गाइडलाइंस हैं फ्लोटिंग रेट इंटरेस्ट पे, उसके आधार पे दोनों एग्जिस्टिंग कस्टमर्स और नए कस्टमर्स दोनों को ये फायदा होएगा. थैंक यू.
धन्यवाद सर. अब मैं आमंत्रित करता हूँ आनंद अधिकारी, बिजनेस टुडे.
Good afternoon, sir. I'll also make an attempt on Paytm. DZ Swaminathan talked about this persistent non-compliance, and he also said in such cases months and years of bilateral engagement. My question is, why did RBI not consider appointing a director on the board of Paytm when you knew about this persistent non-compliance issues?
See, as a regulator, we have various tools in the kitty. And it's not necessary that every single tool will be deployed in every single situation. that we make our own assessment to the scale and proportionality of the issue, as well as the tool that we will have to use at different points in time. So one size fits all kind of solution may not work in such situations. So, I would like to stop there rather than, trying to elaborate on that. We may use certain tools, may not use certain tools, but it is after a due consideration that we do. Thank you.
Thank you, sir. I'll move on to Mr. Anup Roy from Bloomberg.
Thank you, sir. Sir, the budget was non-inflationary and the government really brought down the fiscal deficit, etc., and the bond yields have fallen. So the government probably wants interest rates to come down, but RBI probably is keeping interest rates high. You are saying the transmission is not complete, etc. So is there a lack of coordination, sir?
No, I mean, has the government said anywhere that they want the interest rates to be brought down? So, therefore, it's a very speculative proposition. So, I cannot reply to that question.
Thank you.
Thank you, sir. I'll invite Shama Mishra from Doordarshan.
Good afternoon, sir. So, it's again on Paytm. The situation, as we describe it, that Paytm is known as one of the pioneers of Fintech. Coming to this situation, do you see this as a worrisome situation for the entire sector? And what lesson would you like to highlight for any similar, future companies?
Now, let me sort of provide some broad guidance on this Paytm issue because, there have been at least 4 or 5 questions till now, and there could be many more questions. So, let me put the entire thing, let me put the record straight. Now, you said that worry about the system and all that. There is no worry about the system at the moment. Here we are talking about a specific institution, a specific payment bank. As the Deputy Governor Deputy Governor Swaminathan has already explained, he has provided several details. Similarly, I also don't want to comment on a specific case. But in this context, I would like to make some general observations, not with specific reference to Paytm as such, but some general observations which includes all our regulated entities. So all our regulated entities does not exclude Paytm. It is applicable to all the regulated entities. And in fact, which one? No, the advice is the camera should not focus on this because I have written so many things. This is a private part, so the cameras can focus perhaps on my face. So, but let me thank you. I think that's very agile on his part. So, let me focus on make some general points. And I would like to, make some about 6 or 7 points. Now, first is that over the last few years, as all of you are aware, we have significantly deepened our supervisory systems, approach and methods. Number 2, our emphasis is always on, as the Deputy Governor has pointed out, our emphasis is always on bilateral engagement with the regulated entity. And in that engagement, we give focus on, and we are completely focused on nudging the regulated entity to take corrective action. Let me rephrase it. For you to make note, our emphasis is always on bilateral engagement with the regulated entities with focus on nudging them for corrective action. And sufficient time is given for undertaking such corrective action. The third point, when such constructive engagement which we undertake, when that does not work, so when such constructive engagement does not work, or when the regulated entity does not take effective action, we go for imposing supervisory or business restrictions. Number 4, such restrictions which we impose are always proportionate to the gravity of the situation. Please take note that such restrictions are proportionate to the gravity of the situation. Number 5, all our actions, being a responsible regulator, being a responsible supervisor, all our actions are in the best interest of systemic stability and protection of depositors or customers' interest. These aspects cannot be compromised. Individual entities should be mindful of these aspects for their long-term success. Number 6, over the last few days, we have received a lot of queries, clarifications from various quarters, including members of the public. You have raised a few questions today. So we have noted all these questions and clarifications which have been sought from us, and based on that, we will be issuing a FAQ sometime next week. So that should address all these questions and clarifications which are being raised by you and which have been raised in the public domain and raised bilaterally with us by various from various quarters. Number 7, finally and emphatically, let me stress and let me emphatically state that the Reserve Bank is and will continue to encourage and support innovation and technology in the financial sector. Let there not be any doubt about Reserve Bank's commitment to promote fintechs, to promote innovation, to promote technology in the financial system. Thank you.
Thank you, sir. I will move on to Mr. Dinesh Unnikrishnan from Money Control.
Thank you, Your Grace. Thank you, Governor. I have a very short related question, sir. You in your remarks, you stressed about the good governance and sound compliance, and this is not something that you're speaking for the first time. You have been emphasizing this part, and the role of the boards in the regulated entities is extremely critical, as you have pointed out. What is your view on the role of the Paytm board? Because it didn't happen all of a sudden. Since 2021, RBI has been alerting the regulatory breaches. And as per the process, the RBI on-site inspection report is passed to the ACB and the board for corrective actions. So probably, if they had acted on time, things would not have worsened to this level. So why is the regulator silent on the role of the board while the reasons for this action is quite evident?
You see, typically we do not share such granular information. We have been engaged with the institution, with the entity for quite some time. And within that, with whom we interacted and how it was, such granular details, it will not be appropriate on our part to share those details.
Thank you, sir. I'll move on to Mr. Vishwanath Nair from NDTV Profit.
Hi, sir. Thank you so much, Yogeji. I'll give you a little respite and move to another topic. But on CBDCs, you're talking about introducing additional programmability.
No, we don't need any respite.
The topic
go ahead, but the point is, the same question is coming up. And also, in as much as we are issuing a FAQ, so I would request, if you have still some clarification or something on which you want clarity, I think you can send it bilaterally to us. Directly you can mail it to us. We will see to what extent we can address that question. Yeah.
Sure. My question is with regard to the additional programmability that you're proposing to bring in with respect to the CBDC pilot. The question has been there since the beginning when this topic was DG Ravishankar had introduced. Doesn't this go against the fungibility of money if the intent is to make CBDC the equivalent of paper currency? And if you introduce specific restrictions on usage, does the fungibility factor not go opposite to that?
No, we are not imposing a restriction. I think we are making it more flexible, but let DG Ravishankar take that question.
Thank you. Shifting to me. So, I'll give a more formal answer. I think, but the best way to think about it is when a family puts some currency notes
in a package to be used for, let's say, groceries during the month. Doesn't mean that the fungibility of the currency is lost. It's just that until that spending happens, it can be used for no other purpose. I'm just giving you as an example to be able to, think on what we mean by fungibility, or what we mean by programmability. When you do programmability, for a moment, fungibility is on hold. We have to realize that it's a facility that we are providing the currency. Again, by way of an example, let's suppose that a school has given some money to a student who won a prize to buy books in a particular shop. So the student can only use this money to buy books in that shop. That's intended. Supposing the student goes and buys that book, he cannot use it for any other purpose. As soon as the book is purchased and the currency goes to the bookshop owner, it again becomes fungible. So it's only for that period that fungibility is limited. Supposing he doesn't spend, it goes back to the school. Fungibility is restored. So it is a way of controlling expenditure that you do not get unless it's digital, and that you do not get unless it's a token. It's a facility that is there. We'll use, and the facility will typically be agreed by both the recipient as well as the person who puts that condition. So no, to give a very short answer, it doesn't militate against the programmability, doesn't militate against fungibility. It's only a specific use binding. Thank you.
And to extend that reply further, imagine a situation where later on, when CBDC is fully implemented at a later date, if the government wants to give some cash support to certain individuals for a specific purpose, programmability will be useful in such situations, so that the money, the cash which is going from government to such persons can be used for specific purposes. So therefore, it's typical for every, it is typical for every household in the beginning of the month to do their own budget and set aside money, one envelope for school fees, one envelope for electricity bills, and it happens. It's a common thing which happens in large number of households. Yeah, next.
Thank you, sir. I will request Manojit Saha from Business Standard.
Thank you, sir. So I again go back to the Para 21 on liquidity. So you said stance is with respect to rates and incomplete transmission. Does that mean that you are creating elbow room to do liquidity operations, OMO purchase, to infuse liquidity, because March is going to be very tight, and then then such liquidity operation will not be seen out of sync with the stance. So you're separating the stance from liquidity management, and you're saying it is only on rates. Does that give you elbow room to do OMO purchase when liquidity will be very tight in March?
You see, what we have attempted to do today is to, clarify and clearly state that do not read the stance of monetary policy in terms of excess liquidity prevailing or deficit liquidity prevailing. That's not the point. Liquidity plays a secondary role to support monetary policy transmission. That is, there is a monetary policy, there is a repo rate. Liquidity situation in the market, I think that is what the Deputy Governor said in the beginning itself. You clarified that we try to keep the liquidity at a level wherein the overnight call rate, which is the operating target of monetary policy, remains around the repo rate. In the first part of this year, due to various exogenous factors, there was a lot of liquidity. So we conducted sort of repo auctions, variable rate repo auctions, but market took time to adjust, and market also, banks, individual banks make their own analysis of the liquidity situation, and that analysis by the banks also varies within a day. You look at yesterday, yesterday or was it day before, we did 2 VRRR auctions.
Both.
The response to the first one was very low. I think some 4,000 crores.
Yeah.
But then same day we did one more and we got a response of 27,000 crores. So between morning auction when the banks offered 4,000 crores and to a subsequent auction in the afternoon, the banks offered 27,000 crores. So therefore, due to various autonomous factors, liquidity situation has been fluctuating in the market. Banks make their own assessments. Banks also take their own decision. Markets and banks, and meaning the banks and the markets, take time to adjust to the evolving liquidity situation. So far as the RBI is concerned, we will remain active. We will remain nimble in our liquidity management. What instruments we will utilize, that will depend on the prevailing situation, which will come up from time to time. I cannot say that we will use this and not use this. We have several instruments at our disposal. Depending on situation, we will use the most appropriate instrument.
Also, let me ask one thing very straight.
Other people also. So I'll move on to Mr. Brijesh Kumar from Z Business News.
सर मेरा सवाल होगा, आपने जो हिडन कॉस्ट की बात कही है कि हिडन कॉस्ट लोन में, तो हिडन कॉस्ट में आपका फीडबैक क्या, हिडन कॉस्ट में आप क्या कहना चाहते हैं? प्रोसेसिंग फीस की बात करना चाहते हैं, या जब वो ये कहते हैं कि अगर आप कोई प्रॉपर्टी ले रहे हैं तो जो लॉयर के चार्जेस हैं या जो आर्किटेक्ट के चार्जेस हैं या जो इंश्योरेंस के चार्जेस हैं जो एक तरह से वो मैंडेटरी कर देते हैं, तो इस हिडन कॉस्ट में क्या चीजें हैं और क्या एक यूनिफॉर्म फॉर्मेट होगा जो सारे बैंक को फॉलो करना होगा?
इसलिए देखिए, हिडन कॉस्ट टर्म मैंने यूज नहीं किया, हिडन कॉस्ट मैंने बिल्कुल नहीं किया. अभी जो बैंक जो लोन सैंक्शन करते हैं, टर्म शीट में सारे चार्जेस स्पेसिफाइड है, सारे चार्जेस, प्रोसेसिंग फी कितना होगा, आपका क्या क्या फीस होगा, क्या क्या चार्जेस होगा, सारे स्पेसिफाइड है. लेकिन एक ऑर्डिनरी बोरोअर जो है, एक कॉमन बोरोअर जो है, वो दिखा गया है, एक्सपीरियंस से पता लगता है कि वो पूरा जो टर्म शीट जो है, टर्म्स एंड कंडीशंस, वो 2-3 पेज का या 4-5 पेज का है, कोई पढ़ता नहीं है. वो देख लेते हैं कि 5% में या 10% में लोन मिल रहा है तो ले लेते हैं लोन. बाकी सारे चीज टर्म्स एंड कंडीशंस में है, कस्टमर्स उसको सही तरह से पढ़ते नहीं है. तो इसीलिए हमने माइक्रो फाइनेंस लेंडिंग में, डिजिटल लेंडिंग में ये ऑलरेडी मैंडेट किया हुआ है कि एक सिंपल सा की फैक्ट स्टेटमेंट जिसमें कि उसमें फ्लेक्सिबिलिटी दिया है हमने बैंकों को. वन मेजर थिंग जिसमें हमने ये कहा है कि एनुअलाइज्ड ऑल इंक्लूसिव इंटरेस्ट रेट बताना चाहिए. आपका इंटरेस्ट रेट मान लीजिए 5% हो सकता है, बट अपफ्रंट आप एक फी पे कर रहे हैं, मान लीजिए 1,000 रुपया. वो 1,000 रुपया मैं आज दे रहा हूं, लोन 5 साल के लिए है. वो 1,000 रुपया 5 साल में देने के बजाय मैं अपफ्रंट दे रहा हूं, उसका एनुअलाइज्ड इंटरेस्ट रेट ज्यादा होगा. तो इसीलिए ये हमेशा कॉमन जो बोरोअर है उनके समझ में नहीं आता है. तो इसीलिए क्लैरिटी के लिए, ट्रांसपेरेंसी के लिए ये हमने मैंडेट किया है. ये कस्टमर इंटरेस्ट में है. अभी भी बैंक्स वो इंफॉर्मेशन दे रहे हैं, कोई हिडन कॉस्ट नहीं है, कुछ हाइड नहीं किया है. तो लेट अस बी वेरी क्लियर. The bank's terms and conditions are very transparent in the sense that all information is given. But experience ये है कि हम लोग पढ़ते नहीं हैं. तो इसीलिए एक सिंपल सा टर्म शीट उनको की फैक्ट स्टेटमेंट हमने मैंडेट किया है, प्योरली इन कस्टमर्स इंटरेस्ट. एंड आई एम श्योर बैंक्स विल encourage it because the banks also are interested in, the banks are long-term players, so they are not, short-term operators.
सर, बट कुछ फैक्ट्स ऐसे हैं जो कुछ फैक्ट्स ऐसे हैं जो नहीं होते हैं.
नहीं, नो सेकंड क्वेश्चन.
नहीं, ऐसे ही जैसे गवर्नर ने बताया, ये हमने प्रिस्क्राइब करने की कोशिश की है बैंक्स को भी, रिटेल कस्टमर्स और एमएसएमईज के लिए ये की फैक्ट शीट भी मैंडेट किया जाएगा. साथ ही में इससे पहले भी आप देखते हैं कि क्रेडिट कार्ड के इश्यू में हमने वो मोस्ट इम्पोर्टेंट टर्म्स एंड कंडीशंस बताया था टू गिव ग्रेटर ट्रांसपेरेंसी. उसी हिसाब से ये भी हमने पॉलिसी अनाउंस किया है.
धन्यवाद सर. पीयूष शुक्ला फ्रॉम फाइनेंशियल एक्सप्रेस.
Good afternoon, Governor sir, DGs, Yogesh ji. Sir, just taking you back to where we started. DG sir said that there are various tools in Kitty with regard to Paytm, how the future of course of action will be taken. Sir, very specifically, banks are becoming very hesitant to actually partner with this bank, Paytm Payments Bank, for shifting their customers and their merchants in one go. They are saying that we need regulatory approval for that. So will you provide that, and will you allow the sale of their wallet to other potential payments bank?
It will be very difficult to provide any hypothetical answers at this point in time. So as I said that we are, there's still time that is provided for customers to continue to access the services that is provided. So during this period, we will see what else needs to be done, and keeping, as Governor also said, that we keep the customer in the center of what needs to be done. So we will take appropriate steps. The second part of your question in terms of what the other banks will have to do, each of them, it's a business decision, and they have got to carry out the required due diligence as per their laid down board approved policies. And I'm sure that they will carry out that if they have got to do a partnership. So that's something which we will not comment at this point in time. But what tool and shape it will take is not something which we would like to speculate at this point in time. We may wait for the FAQs, which will give you more clarity.
Sorry, so banks don't need regulatory approval for taking on board the Paytm customers, is it?
It's very specific to a particular item. I think it's better for you to wait for the FAQs. As
Please
said.
be patient. Let the FAQ come next week. Okay.
Thank you, sir. I'll move on to Swati Bhatt Chete from Reuters.
Thank you, sir. Governor, today you've said that next year's growth is projected at 7%. Nominal GDP growth as per the budget is projected at 10.5. I mean, I don't know if my maths is wrong, but effectively that would mean inflation is at around 3.5% next year. Is that right? Are you being a bit too optimistic about growth, or is the government underplaying growth and being very modest in their projections? Thank you.
So I think you take that question, yeah. Because he likes to play these balls.
No, I will not venture to answer for the government. But my understanding of this is that what goes into the nominal GDP is not CPI inflation, it's the GDP deflator. And GDP deflator is always a weighted combination of CPI and WPI. Now the WPI has been in deflation for most part of this year and is just emerging out of deflation. So that must be the reason.
Thank you, sir. I'll move on to Mr. Mayur Shetty from Times of India.
Governor, in the development measures, you spoke about reviewing the AEPS, and some banks have come out with warnings of how
AEPS,
the Aadhaar-enabled payment system.
Oh, AEPS.
Yeah,
okay. Huh.
Yeah. And some banks have come out with warnings on how fingerprints can be cloned using silicon. Is that what's caused this thing? And also, since OTP is also being reviewed, does it mean that the traditional forms of KYC are the best option for regulated entities?
No, OTP is not being reviewed. What I am saying is that over the years, it so happens that OTP has become the most popular and commonly used AFA, that additional factor of authentication. But with the movement of time, various other technologies and methods have come up. So we want to just tell the players in the field that there are other methods also. And please, and RBI will be agnostic to them. As long as they are, sound methods, the banks and institutions are free to adopt them. But I think let DG Ravi Shankar take the other part of the question with regard to the Aadhaar AEPS. Yeah.
You sort of gave the answer in your question itself. It's basically to ensure that since this is being used in rural and such areas a lot, it's important that the safety of these transactions is ensured. Now, with the passage of time, as in the case of additional factor of authentication, we can use various technologies to do it. So that is essentially the position here. All touchpoint operators will go through a standardized, safe, and secure onboarding process. we can add, we possibly can, as we have indicated, we can also add other factors into it. For example, the switch on has to be done by the customer instead of it being pre-available on the system, or it can have geo limits beyond which it cannot operate. Whatever is required for the customers. The idea is that as Reserve Bank has always been placing a lot of emphasis on the security of digital transactions, which we believe is key to ensuring customer adoption, especially customers who are not savvy digitally. But this is an effort in that direction to improve the security of transactions.
Thank you, sir. I'll move on to Mr. Hitesh Vyas from Indian Express.
Hi, sir. Good afternoon. Sir, there is an expectation that the stance would be changed to neutral, sir. What are the preconditions for stance to become neutral?
I cannot give a forward guidance on that. I think when when such a thing happens, we will explain, how it is. But you see, I'll tell you, the evolving situation continues to be very volatile and uncertain. You look at the commentaries coming out from the central banks, mostly of advanced countries. Sometimes, they appear to be giving giving a forward guidance in one particular direction. Sometimes the market interprets the next direction, guidance to be in a different direction. So therefore, at the moment, we are not giving any forward guidance with regard to stance or rate, when we will, there's a talk of when the central banks world over will cut rates. So, and as I have said, markets are, overshooting the, running ahead of the central banks. So I think preconditions I will not be able to specify unless DG Michael Patra wants to comment anything on that. So, because, these are very volatile times. And so therefore it's better to wait. And when something like that happens, we will explain it appropriately.
Thank you, sir. I'll move on to Ms. Gopika Gopakumar from the Mint.
Thank you, Yogesh sir. Good afternoon, Governor. Considering that your inflation forecast for next year is at 4.5% and GDP at 7%, and you're saying that RBI needs to be vigilant in the last mile of disinflation, does it rule out a rate cut in FY25? And secondly, on the Paytm issue, what is a larger issue? Is it the KYC or is it something related to the ownership or interlinkage between a regulated and a non-regulated entity? Because if it is KYC, then does RBI need to relook at the minimum regulations around the minimum KYC accounts? That is my second question.
No, again, an entity, an institution or an entity-specific details we would not like to spell out. And let me leave it at that, because I cannot really share. It's a bilateral engagement between the RBI and the regulated entity. The regulations are there in their place. The regulations are robust. There is no need for. It is not a case. It is not a case where there was a regulatory deficiency or there was a regulatory correction required. It's an issue of compliance. Compliance with various parameters. You mentioned about KYC, but compliance with so many aspects. Again, let me not specify the details. So regulations are there. Regulations are robust. And it's a situation where we are focused on the compliance not being there with the regulatory requirements.
Thank you, sir.
The first question.
Sorry?
First question.
No, on the rate hike and the pause, I cannot say that. I think only time will tell. Only time will tell, when something like that will happen. So.
Thank you, sir. Last few questions we will take. मैं अब आमंत्रित करूंगा अनुराग शाह, ET Now स्वदेश.
हाँ, नमस्ते सर. थैंक यू योगेश सर. नमस्ते सर. सर, पिछले कुछ महीनों पहले जब आपने पर्सनल लोन पे चिंता जताई थी और उसके बाद रिस्क वेटेज वगैरह बढ़ाया गया था, तो क्या अब भी उतनी आप चिंतित है? वहां चिंता कम हुई है? और क्या सर आपका मानना है जिस तरह से पर्सनल लोन बांटा जाता है वो भी एक देखने की चीज है? हर किसी को, चाहे बड़ा आदमी हो छोटा आदमी हो, दिन में 2-3 कॉल तो आते ही है पर्सनल लोन की, जबरदस्ती इसके लिए. तो ये भी एक तरीके पे भी क्या आप मतलब क्योंकि टेली कम्युनिकेशन तो आपके हाथ में नहीं है, बट फिर भी सर तरीके जिस तरह से बांटा जाता है। और सर बाकी दूसरा सवाल जिसकी सबसे ज्यादा चर्चा हुई उस हिंदी के दर्शकों के लिए जो करोड़ों मर्चेंट्स और ग्राहक है उनके लिए सर, क्योंकि सर आप जो बात बोलेंगे वो एक भरोसा देती है देश की जनता के अंदर। तो सर क्या भविष्य में जब पूरा ये मामला हो जाएगा तो अगर डिस्ट्रप्शन आता है तो आरबीआई वहां मजबूती से खड़ा रहेगा इस मामले से जुड़ा हुआ, और क्या आने वाले दिनों में कुछ और क्लैरिटी भी आप इस पूरे मामले में देंगे?
किस मामले में?
ये पेमेंट बैंक की जो चर्चा हुई है सर, ये
नहीं, मैंने तो सारे एक्सप्लेनेशन मतलब अंग्रेजी में वैसे दे दिया है।
हाँ,
हिंदी में भी
एक
मिनट, हिंदी में भी एक कुछ एक दो क्वेश्चन आई थिंक शायद यहाँ से आया था, नहीं हिंदी में बताया। नहीं, मैं हिंदी के भाषा में ये सबको आश्वासन देना चाहता हूँ कि भारत का जो फाइनेंशियल सेक्टर है, जो बैंकिंग सेक्टर है, ओवरऑल फाइनेंशियल सिस्टम बहुत मजबूत है, बहुत मजबूत है, उसमें कोई दो राय नहीं है। अब बैंकों की हो या नॉन बैंकिंग फाइनेंस कंपनी, एनबीएफसीज का हो, किसी का परफॉर्मेंस आप देख लीजिए, बहुत ओवरऑल पैरामीटर्स आप अगर देखेंगे सिस्टमिक लेवल पे और इंडिविजुअल लेवल में पैरामीटर्स आर स्ट्रांग। और इंडिया का फाइनेंशियल सिस्टम बहुत मजबूत है, ग्रोथ साउंड है, ग्रोथ भी अभी अच्छा मोमेंटम है। लेकिन हम एज ए सुपरवाइजर हम रेगुलेटेड एंटिटीज को सुपरवाइज करते रहते हैं, और हर एक सुपरविजन में हमारा ये कोशिश रहता है कि पहले जो सुपरवाइज्ड एंटिटी है, बैंक हो या एनबीएफसी हो या कोई भी फाइनेंशियल इंस्टीट्यूशन हो, उनके साथ डायरेक्टली हम एंगेज करें, डायरेक्टली उनसे बात करें और उनको कहे कि आपका ये खामियां है, यहाँ आपने रेगुलेटरी वायलेशंस आपने किया है, इसको आप सही करिए, अब सही दिशा में आपके जो बैंक हो या एनबीएफसी हो उसको आगे बढ़ाइए, और हमारा रेगुलेटरी गाइडलाइन से आप यहाँ आपका डिविएशन हो रहा है, इसको करेक्ट करिए, सही कदम उठाइए। और उसके लिए हम काफी टाइम भी देते हैं। जब एक्शन नहीं लिया, ये मैं जनरल सेंस में कह रहा हूं, कोई एंटिटी स्पेसिफिक रिप्लाई ये नहीं है, और जहां एक्शन टाइमली नहीं लिया जाता है या इफेक्टिव एक्शन हमको दिखाई नहीं देता है, वहां पे हमको पब्लिक इंटरेस्ट में, कस्टमर इंटरेस्ट में, डिपॉजिटर्स इंटरेस्ट में, ओवरऑल फाइनेंशियल सिस्टम के इंटरेस्ट पे कुछ कदम उठाना जरूरी हो जाता है। और वो कदम हम इसीलिए उठाते हैं क्योंकि रिजर्व बैंक जो है वो फाइनेंशियल स्टेबिलिटी और फाइनेंशियल सिस्टम का कस्टोडियन है। रिजर्व बैंक हमेशा इस मामले में कमिटेड रहा है, आगे जाके कमिटेड रहेगा, और आपने कहा मजबूत से खड़ा है, रिजर्व बैंक बिल्कुल मजबूत से खड़ा है। थैंक यू।
सर पहला सवाल नहीं
सर, Pratigya from Informist Media and then Anshika from Hindu Business Line. Two questions, sir. Last two questions.
Good afternoon, Governor. So, public debt has been high for 3 years now because of COVID spending by governments across the world. So, what risks does RBI see specifically now to raise this as a risk factor, and what are the spillover risks for this for India?
You see, I was raising it in a global context, not in the context of India. The India part of the information I have given just by way of information. But my reply was in the global context. You see the footnotes of my monetary policy statement, all the supporting data is given. By the end of this decade, global debt to GDP of EMEs, advanced economies all put together is expected to exceed 100%. आज के तारीख में, on today's date and in future, very surprisingly you will notice that the debt to GDP of the advanced economies are actually much higher than the debt to GDP levels of the emerging market economies. और फिस्कल डेफिसिट, कई सारे एडवांस्ड इकोनॉमीज हैं जहां पे फिस्कल डेफिसिट अभी भी बहुत अधिक है, 7%, 8% उस रेंज में है। सो फिस्कल डेफिसिट के लिए वो बोरो करते रहेंगे। जब बोरो करेंगे, अगर वो रिजर्व करेंसी है तो उसमें मनी सब आप जो व्हाट यू कॉल एज creating new money, printing notes. So therefore, these are kind of things, if the debt has to be sustainable. for the long-term stability of the global financial system. So therefore, I have raised this as an issue which can create a future, which can become a future source of stress to the global financial system. So far as India is concerned, you please again look at my statement. I provide the data in the footnote. The IMF fiscal monitor gives out the data for India. The debt to GDP for India had gone up to 88%. General government, states and center, had gone up to 88% during the COVID year of 2020 because of the various fiscal measures which were undertaken. And it projects how by 2028 it's likely to, it has already come around about 81% or so. By 2028, according to the IMF's fiscal monitor, it is expected to be around 80% or so. So that is the path which I just mentioned by way of information.
Thank you, sir. Anshika, last.
Hi, sir. Good afternoon. So this is not about Paytm, but about UPI. Basically, there were talks about restricting, capping the market share of each app in terms of the UPI transaction volume share. We've seen the deadline was extended and the market share has only gone up for these platforms. Now that we're seeing the Paytm-led migration happen to some of these platforms like Google Pay and Phone Pay, their market share is only increasing. Is there a concern regarding, say, over-reliance on a few specific platforms? And does that raise the risk of them becoming too big? And could the RBI then look at a structure of systemically important PA entities or something like that? And because I'm the last person, just one small clarification. You mentioned the overnight 2 VRRs in the day, 2 VRRs. Is there a specific amount or range that the RBI has in mind that you would prefer that banks not park their funds beyond that in SDF?
I think DG Ravi Shankar followed by DG Michael Patra. 2 questions, but yes, you said last person. So the last mile in the queue should always have priority. So last person. So I think DG Ravi Shankar followed by Michael Patra.
Yes, and since the last question, I'll keep it very short. The limit is from the point of view of of diffusion of risk in case some entity doesn't become available for whatever reason at any point in time. But to take it to too big, to fail sort of is probably not appropriate here because they are just third-party app providers. The limit of 30%. Funds don't go through them. So the system is not threatened, except that there could be a temporary inconvenience in terms of shifting over to an additional system. Having said that, it will be for the market to decide. The market forces have to play out such that this percentage is more evenly decided. We will not be interfering into them in the market process to ensure that the 30% or something is big. In any case, it's an NPCI requirement. We'll have more players to come in. Hopefully with technology, we'll get some more players and that percentage can be maintained. We have time till the end of this year anyway.
We don't have any preconceived limit on how much they put in SDF. The SDF by its very nature is a standing facility and it's at the discretion of market participants as to how much they want to use. As to why we did 2 VRRs during the day, we assessed market conditions and bidding behavior. And we've in the first auction, we realized that there were like bids which were higher than the amount we offered. We offered 50, we got a lot more. So we thought that probably they would like to park more in the VRRR, which is more remunerative than the SDF, and so we did the second one.
Yeah, I think DG Swaminathan wants to
just one clarification on, because the question came around the UPI apps. See, this particular action is against the payment bank. It's not to do with, not to be confused with the payment app which is run, right? That's okay. We will clarify through the FAQs, but just to clarify in terms of your question, just as a supplemental information, that as an app is not impacted by this action.
Okay, thank you.
Thank you, sirs. With this, we come to a formal close of the press conference, the first press conference of the year, and looking forward to a few more. All the best to you. Thank you for coming.
That was the Reserve Bank governor and the deputy governors telling us about all that has happened with respect to liquidity. But perhaps the majority of the questions were around Paytm. And besides that, we also had a bunch of details coming out as far as CBDCs are concerned, technology that will be adopted down the line. But perhaps the highlight of this press conference was several questions around what's happening with Paytm. I have my colleague Muralidhar Swaminathan who's joining us. Murali, a lot was spoken about it, but I reckon that enough time was given. What are your key takeaways from the press conference?
Okay, so let me start by saying the RBI governor, deputy governors very clearly said that we don't want to comment on one entity, but whatever they said and what we very clearly understand is all about Paytm. So whatever I'm going to say is not verbatim what the RBI officials said. What we have understood from is, point number one, there is no worry to the system as far as the action against Paytm is concerned. That's the first point. The second one, the governor very clearly emphasized several points, 5 or 6 of them are very important, and these are specific to actually Paytm, but he did not say so. First, no entity, including Paytm, will be excluded from the regulatory system. That's the first and foremost point. Second, the emphasis has always been, as he says, through a bilateral discussion. They keep pointing out they do supervisory action. Then, which means that they have been engaging with Paytm for a very long time and discussing with them and highlighting them, and they've given them a chance. Third point, he says that we have given them sufficient time, and he also went to the extent of saying that we gave them more than sufficient time. Now, more than sufficient time is what we need to mark. The RBI very clearly gave Paytm plenty of time to comply, which did not happen. When such discussions failed is when the RBI imposed these restrictions. That is the third point. Now, all these actions are in the interest of maintaining very clear stability in the system, whether it is fintech or not. That is the fourth and fifth point. And the more important one is, as far as customers are concerned, RBI is going to issue a very clear FAQ in the coming days. Yeah. Now, that must be sometime in the next week. Now, these are the main takeaways directly as far as Paytm is concerned.
Right. And of course, we'll continue to give you more market voices along with a lot of experts through the course of the day based on what we've had as far as the RBI is concerned. But the key takeaway here is that RBI restrictions were proportionate to the gravity of the situation, at least as far as Paytm is concerned, even though it wasn't referred to directly. Well, on that note, we are completely out of time on that show, but lots more lined up. Stay tuned to NDTV Profit and we'll keep bringing you more.
फिस्कल डेफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hand.
All right, thanks for tuning into Profit Insights. Immediately after the RBI policy, let's try and take stock of what could it mean for risk assets and other factors impacting. So we've seen the markets drift off post status quo on the policy, and the Nifty down about 0.6, 0.7%. The banks and private banks in particular hurt a bit more, while PSU Bank Index, which was well and truly up about 3%, has also come off a little bit, but still 2.5%, so not that bad. I think that's the key crux. And the broader end of the spectrum, a bunch of insurance companies and some result reactions. Cummins is up about 8%, Trent is up another 6%, so there's strength there. And insurance companies, at least the PSU insurers, LIC, GIC, RE, etc., all doing well. And last but not the least, look at what's happened to ITC after the news bits that have come up on your screen about British BAT talking about how they want to go ahead and maybe reduce or monetize some of their stake in ITC. The stock is down 3.5%. So lots to talk about with our guest on the show today, Manishi Ray Chaudhary, a veteran investor in Asian equities, joins us right now with his thoughts. Manishi, great having you. Thanks for being in the studios.
Thank you. Thank you very much. A visit to Bombay after quite a while. It's always a pleasure to be here.
Okay, yep. Thanks and pleasure to have you. Manishi, what's your sense? I mean, the equity markets have taken a bit of a step back today because maybe they anticipated the RBI to make some move on stance, at least if not rates.
Right.
That hasn't happened, a bit of a pullback here. Do you expect that pullback to be more pronounced as the week comes to an end tomorrow? Do you reckon that it is difficult to portray that?
I think the RBI policy was no surprise, really. So none of the rates changed, and the gradual withdrawal of accommodation, that stance will also be maintained. So I think in the market nowadays, there's a degree of anticipation about some actions. And if that doesn't really come about, then the correction tends to be deep because the valuations are already at a relatively steep level. India is, possibly the most expensive market in the entire emerging market universe. So, after the market did so well across November, December, I think this present drift that we're seeing and the kind of reaction on any real or imagined disappointment, that's also not much of a surprise. Would there be a major correction anytime soon? Difficult to predict these things, but I would rather be, possibly focused more on a kind of a drift down or what's called a time correction, over the foreseeable time horizon, so that the other emerging markets, valuation and India, while not entirely converging, comes closer, relatively closer.
Got it. Would Chinese markets need to perform for that to happen, Manishi? Or do you reckon that EMs can attract flows even if China doesn't perform?
Well, China is the 800-pound gorilla in EMs. So the EM basket as a whole performing without China, that's still difficult to sort of imagine happening, because if you look at the emerging market index or MSCI Asia ex Japan, China, despite this severe underperformance over the past 3 years, it's still about, maybe 30% or so, 30 to 35% of the index. So for such a large weight, it's difficult for the headline indices to perform with such a massive market staying down or continuing to underperform. Now, the question is, what would make China recover? And that's a question that we're all grappling with, because it's clear now that the Chinese authorities' old-style stimuli, they're not really working. I mean, they announced the RRR cut coming in from early Feb. There was a small spike over there, but nothing beyond that. So it's clear that the Chinese authorities would have to think about different measures, maybe more fiscal stimuli than monetary policy, which is more directed at supporting consumption. So we're all waiting for that. We have the meetings, so-called the twin meetings coming up in March, but it's something to look forward to.
Okay, that's interesting. And we'll slip into a quick break in a couple of minutes from now. But before we do that, Manishi, the question, therefore, that comes to mind to any Indian investor would be that while Indian markets are expensive, headline, you could make an argument that for a foreign investor who is heavily invested traditionally into banks and into IT, those two indices are not. And therefore, it's a tale of two halves. So if I want to put money into India, do I have, and if I have a long-term view, do I get pockets where they are very liquid and where I would love to put in money, where the benchmark weightages are high and I get them at decent valuation? So can FI inflows into India happen even if the headline Nifty numbers stay expensive?
Right. Now, that's a very important point to make. Historically, we have seen these two sectors, financials and IT, they were close to 60% of the Indian market put together, and they used to corner bulk of the FII flows, particularly FII flows, not so much the DI flows. But now we're actually seeing, if you look at the consensus earnings growth forecast, they're much stronger in consumer discretionaries, they're much stronger in industrials, in power equipment, and so on. So I think there are alternative avenues of investments for both domestic institutions and foreign institutions opening up gradually. And that's an encouraging sign.
Okay, my final question before we take that break, because in your previous avatar, you spoke to FIs of all sizes, all types, etc.
Absolutely.
Is India becoming a favored destination independently, or do you reckon it will still continue to remain an EM, a part of EM, and therefore dependent largely on what happens to EMs?
Right. Now, that's a very interesting point. And after continuous and extensive interaction with foreign institutions, and I still continue to do that, I think India is gradually moving into that status where the Indian market on a standalone basis is looked upon as the likely candidate for providing supernormal returns, not just for the next 2 years or 5 years, but possibly for the next decade or two. So in a sense, if I hark back to the early 2000s, when China was first inducted into the WTO, and the next decade and a half was possibly the golden period for Chinese equities and other financial assets, in a sense, India might actually be entering that kind of a phase. There are quite a few things falling in place for India, and that's being appreciated by the FIIs, not just in terms of economic growth, not just in terms of flows, not just in terms of, say, inclusion in the emerging market bond indices, which opens up additional avenues for flows, but also look at it, a geopolitical sweet spot, which no one can ignore today.
Okay. So that's interesting too. And okay, let's do this. Let's digress a little bit and talk about some of the most recent developments before we take that break. One of them is what's happened to Paytm. And I first want to get in my colleague Vishwanath Nair, who is at the Reserve Bank of India. He's heard the press conference. He was a part of that, asked questions to the governor, and has heard with keen interest what the response on Paytm was. Vishy, fill us in on what you thought was the statement and the implication of that statement with regards to Paytm.
Right, Neeraj, this press conference turned out to be slightly more fiery than what was expected earlier. Of course, a lot of focus on Paytm. The RBI governor as well as deputy governors have been very clear that they do not want to say anything about specific entities, especially Paytm. However, the broad guidance that the RBI governor and the deputy governors have been giving is that any entity that is found in breach of the norms which RBI has laid down will need to face the consequences of that breach, of that violation. No entity has any kind of free pass to act as they want. They have to entirely listen to what the RBI is saying in this matter and how exactly the RBI has drafted these norms. What the RBI is also saying is that the customer protection is a very, very key part of this entire discussion, and that is how the RBI will ensure that companies do remain within that band of regulatory limits and ensure that their operations do not affect the customers at the end of it all. Because remember that is the biggest fear in this entire saga, that after the 29th of February, what exactly happens to Paytm customers. So the RBI has been very clear that we are there to protect you and we are there to ensure that the system is protected. However, any entity that is found in breach of the norms that the RBI said will face the consequences of their action. The RBI will come out with a list of FAQs for such supervisory action so that people's doubts can be addressed adequately. So that we'll watch out for next week. However, very clear dialogue on entities which may be very big brands, but does not matter. As long as they do not follow the norms, they will face action.
Vishy, just quick 30 seconds, and we have Manishi Ray Chaudhary here also, and we'll take his opinion. But just quick 30 seconds. In some sense, if the street, rightly or wrongly, was hoping for assurance of quote-unquote leniency, did that come about, or was the exact opposite heard from the Reserve Bank?
Interesting that you bring it up, because leniency is not something that the RBI wants to be associated with, especially in situations like this. Because if you remember, in the past, wherever banks have been in violation, or any financial services entity has been in violation, the RBI has been very clear that this is the law of the land. You've breached it, and therefore we are going to introduce business restrictions, penalties onto you, and you have to ensure that compliance is achieved at all costs. Now, remember that with respect to this specific case in Paytm, it's been about 2 odd years worth of regulatory action that's been going on. So the RBI is very clear that we have given you enough time, and if you have not achieved what was required on the compliance front, then that's really your fault, and you have not done what is required. So as long as compliance is managed and the RBI is convinced that the company has learnt its lesson, that's when those restrictions come off. Till that point in time, there's really no debate. At this stage, there's a bilateral communication that is happening between RBI and Paytm. That's all that the governor and deputy governors have pointed out. No further granular details on what exactly is the nature of those conversations or how that is going to pan out in the future. But it's very clear that they do not want to be lenient as long as there are non-compliances. Once those non-compliances are addressed, that's when the RBI will come in with some kind of remedial measures.
Fair call, Vishy. Thanks. So, and in some sense, Manishi, is the regulator saying that we will, we are being transparent and fair, unfair to say that we are biased against fintech space at large. Does this set an example? Does this kind of damage the fintech space or nothing like that? Is it an isolated incident?
Right. I don't think at all that this should be construed as a reason to damage the fintech space. This is a specific case. The RBI has made it clear that their focus is on consumer protection and financial stability. There are certain clear guidelines that all the companies would have to adhere to. And if they're not being adhered to, after significant conversation, bilateral conversation, such action have followed. So it is a specific instance against a particular company. The RBI has made it clear. I would certainly not think that this has a broader implication for the fintech space as a whole.
So startup founders, viewers may have written to the powers to be and all of that, but the RBI, going by what they have done even in the past with some of the other systemically important institutions as well, if they have, in RBI's eyes, have gone off from what needs to be done. So Paytm locked on a 10% lower circuit. Markets slightly off as well, but there are individual moves which are doing well. Manishi Ray Chaudhary, reasonably bullish on India right now, save for the valuations, believes that China and EMs need to take a bit of an uptick for the favor to return. We take a break, come back and try and talk about some specifics as well. Stay tuned.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is
moving upwards, just buy. buy. 1 Nifty call option. But if you think the market could slide downwards, 1 Nifty call option. But if you think the market could slide downwards, just buy. 1 Nifty call option. But if you think the market could slide downwards, just buy. 1 Nifty call option. But if you think the market could slide downwards, just buy. 1 Nifty call option. But if you think the market could slide downwards, just buy. 1 Nifty call option. But if you think the market could slide downwards, just buy. 1 Nifty call option. But if you think the market could slide downwards, just buy. 1 Nifty call option. But if you think the market could slide downwards, just buy. 1 Nifty call option. But if you think the market could slide downwards, just buy. 1 Nifty call option. But if you think the market could slide downwards, just buy. 1 Nifty call option. But if you think the market could slide downwards, just buy. 1 Nifty call option. But if you think the mar
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial
Okay, thanks for staying tuned to Profit Insights. We're talking to Manishi Chaudhary, and I think amidst all this talk of PSUs being expensive, two pockets which are continuing to do well, PSU banks and power. Now, let's talk about one particular name, which is Power Grid, which is up quite significantly in the session today, up about 5% on the back of strong Q3. The other ones are some of these power ancillaries. Inox Wind, for example, is up on the back of an order win from CESC, which itself is a power company and has done really well. Mihika is here to talk about a few of these details. Mihika.
Yes, so first I'll go to Power Grid, which did, run up to an intraday high of 7.5% on back of their Q3 results, which were much better than expected. Revenue growth of 2.56% driven by the transmission segment. EBITDA was also up 3.23%. Net profit was up 10%. What worked for the company is mainly their finance costs fell 18% year on year, and the debt equity ratio improved at 1.37 versus 1.57. We also have a City Note, which has maintained a buy on Power Grid at a raised target price of 300 rupees, and they say that the improved DISCOM payment situation and the longer term need for creating more capacity creates opportunity for the firm. And the company has also approved a dividend of 4.5 rupees per equity share. But because of the 55% run up in the past 6 months, the dividend yield is now at 3.4% versus 6% 6 months ago. Then we have Inox Wind, which has signed an agreement for India's single largest wind order, and it's an agreement with CESC, and it's going to install and supply 1,500 megawatts of wind capacity over the next 3 to 4 years. They've also extended their 2 and 3 megawatt product offerings and have entered an agreement with Wind2 Energy to launch a 4x megawatt series, which does give them an edge in the space. For Inox Wind, it is up 6.6% in intraday, and the stock has also run up 148.94% in the past 6 months.
Mihika, thanks. And thanks for putting that into perspective. Manishi, before we thank you, power as a space.
Of course.
Generators, ancillaries, what have you. Are you constructive?
Possibly the best economy proxy, especially when the economy is growing not as a consequence of boost to consumption, but as a consequence of boost to infrastructure and industrials, is the power sector. What do you need for industrials to, think of an economy, C plus I plus G plus X minus M, consumption, industrials, government spending, and so on. So for industrials, for investments to grow, there is almost no other direct beneficiary than the power sector, and particularly in the present day and age, where for the past several years, there had not been incremental investment in the power sector. It's quite natural that investors would be enthused at a point when incremental investments are just beginning to flow in. Right. So there, and the best part of it is that you have an entire chain of power generators, power distributors, the equipment suppliers to the sector, and if you move back even further upstream, you have, the likes of coal or other, fossil and non-fossil fuel sources. So it is actually quite obvious that this entire chain would perform in an environment where investments had not been made for the past several years.
Got it. Okay. So constructive on power is Manishi Ray Chaudhary as well, but pick and choose carefully is the point. But Manishi Ray Chaudhary, we'll have to wrap it up here. But thank you so much for joining in today on Profit Insights and giving us your thoughts.
My pleasure entirely.
The pleasure was ours, and viewers, thanks for tuning in. Stay tuned to NDTV Profit.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये ज़रूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah. Over the next 30 minutes or 25 minutes, we'll talk all about mutual funds. But before we start talking about mutual funds, it's important to put something into perspective. And that is what's happened to ITC. While we get in experts to talk about the best mutual fund strategies to deploy, here's the news on ITC. British American Tobacco is looking to monetize some of its stake in ITC. Let's go across to Sajid Mangat for more on this. Sajid.
That's right, Neeraj. Be it BAT or British American Tobacco is looking to monetize some of the stake that it holds in Indian FMCG and cigarette maker ITC. Basically, as part of the earnings statement, BAT has released that it plans to monetize some of this stake, which in ITC over a period of next few years, and is working with the regulators to ensure that it gets the due permission for that. To put in context, it's planning to offload roughly around 4% in the ITC. It holds nearly 29% stake there. It's one of the early investors of ITC from early 1900s, and over a period of time, it has gone up to 29%. And now it wants to, bring in little capital efficiency, because the value of the stake is now valued at roughly around $18 billion or 1.5 lakh crores, and it plans to use that as part of its cash management or capital management, where it has told its shareholders that it plans to generate over $43 billion before dividends over the next 5 years.
Okay. Sajid, this comes at an interesting time when ITC for the longest time hadn't done anything and now has had a significant up move. So the timing is clearly interesting that they're taking advantage of the fact that ITC is no longer the laggard that it used to be.
That's true. Also, the fact that there's a demerger in process for the ITC hotels, which comes in, and BAT would be getting a stake there in as part of the shareholding in ITC hotels as well. So, and ITC hotels is not going to be a core business for BAT. So, when that demerger happens, it seems that BAT would look to monetize that stake as well.
Okay, Sajid, thanks so much for putting that into perspective. On today's edition of the Mutual Fund Show, we are joined by Kalpen Parekh, MD and CEO of DSP Mutual Fund, and Vineet Samre, Head of Equities at DSP Mutual Fund, to talk about a very interesting note. It's an annual note 2024, which they have titled A Winning Team. And amongst things that we will talk with them on the show is what they are talking about as insights from the Tour de France for a thoughtful portfolio approach. I saw the report and I was like, we have to do this conversation. Lend itself to a little bit of mutual fund investing as well, because we're talking on the Mutual Fund Show. Kalpen and Vineet, thank you so much for joining us today. Kalpen, let me start with you. What was the genesis of writing a note like this with such a comparison of insights from a major sporting event?
Thanks, Neeraj, for firstly inviting, and more importantly for deep diving on a very detailed document that Vineet and team have come up with. So since the last 3 years, we've been coming up with an annual document, which mainly is about our reflections from the year which went by and our observations on broadly data points, trends which are playing out in the world of investing. So this annual note is actually meant for us to improve our learning, our reflections, and transparently share with our investors and marketplace what we are thinking about. And this is also a point in time where many turning points are there, many beliefs are getting questioned and challenged in terms of a certain part of the market becoming frothy, some part of the market remaining reasonably safe in terms of margin of safety. So this note allows us to put across our points of view. Also at DSP, as a 27-year-old asset management company, it is over time leveraging a lot of data technology along with fundamental experience of our teams. So the whole concept of a winning team was to see that how can we try to marry both together and take certain investment decisions or get inputs on a daily basis which can help sharpen our decision making and improve. And we've given a lot of examples in the note. So I think that was the backdrop, and glad that you invited us to talk about it.
Pleasure is ours. Vineet, you want to add to this? Vineet, you want to add to this?
Again, thanks for inviting us today on the show.
So see, I think why we actually picked up this theme, more importantly also beyond what Kalpen mentioned, is the fact that we wanted to highlight two important messages out here. One, just like in case of these sporting events, there is a team effort which actually leads to success. Here we want to drive the fact that the whole DSP team as such, including our core investment team, I think the divergence of knowledge what these team actually gets in, the divergence of skill set what these team gets in, allows us to think maybe in a more variable manner, think more differently, and that is what is maybe defines how the long-term success has to happen. So that is one aspect why we have aligned. The other aspect also is the fact that just like in case of this sporting event, there is a team effort. Here also what we are seeing at this juncture, when the valuations have reach where they are, some part of the markets are a little expensive, it's also good to look at diversified asset class to maybe bring your portfolio more into a aligned manner given the current valuation, and also to see that long-term success will be a factor of how your asset allocation strategy today is defined, rather than just taking a call on a specific segment which may be doing well today. So that's the overall thought process.
Now, Kalpen kindly mentioned that I have already done a deep dive. I've obviously not done as deep a dive as you would have liked, but I'll still try and pick up the 3 or 4 key aspects that at least we thought were relevant to talk about today. And we're trying to correlate them to how can a mutual fund investor per se, take insights from in her or his investment journey. So let me try and understand from you guys. You've spoken about how 2023 was a year of mid caps and small caps, and either of you can take this answer, but could it happen, again, looking at insights from a sporting event and looking at what's happened in 2023, that an encore could happen, or should a person be careful about that space now that that space has done so well? Either of you.
So let me start before Vineet adds, and I want to give a disclaimer that if you had asked this question to me 6 months back or 1 year back, I would have said that the space looks a bit expensive, so broad base or diversify and be more in large caps or be more in flexi cap funds. So in a way I have been wrong, and yet you're asking me this question, so I'm grateful that you are. But we genuinely believe that the starting point is never market cap. The starting point always is that what type of businesses are available, where are they in their earnings and business cycle, and what is the price that we are trying to pay for it. And then if the outcome of that ends up giving us large cap stocks, so be it. If the outcome ends up giving us small or mid cap stocks, so be it. At large, 2 things have happened. The small and mid cap segment has also seen a lot of significant improvement in operating metrics. So ROEs look good, profitability has improved. All of that has turned very sharply positive in the last 2-3 years. That has coincided with a lot of money also coming in that bucket. So end of the day, there are 250, 300 stocks which are available for Indian investors via mutual funds or directly to participate in, and more flows in the last couple of quarters going into that bucket is also creating some bit of premium in terms of their valuations. And around the same time, if companies report marginally positive operating metrics, it's only adding to the tailwinds. So I really don't know. I've been wrong last year in terms of predicting that small caps may not do as well or mid caps may not do as well. So I don't want to hazard a guess again. But I personally, this is what I do in my own portfolio. My preference always is in diversified funds. And typically at market extremes, you get into smaller mid caps when there are sharp corrections, or use SIP as a consistent method of investing. Most of our investors have been significant beneficiaries by doing SIPs in our small cap and mid cap funds. And typically when there are phases of poor returns in the last 3-4 years, if you come in at that points in time, your odds of getting better return outcomes are in your favor. That's my view, personal view. But Vineet, if you want to add anything.
Yeah, just one data point. So, we've covered one analysis, a short analysis in this note, wherein we've captured the 7-year rolling return for the mid cap index and the small cap index. And if one looks at that data point, one sees that in the maybe the last 10-15 years for which we have done that analysis. On a 7-year rolling basis, we'll see that the index has provided upwards of 12% return 75% of the times, and 0% returns, the probability is 0. I mean, the history has been 0. So the point which we wanted to make here is, while it at various points we'll have extremes created in different categories, the way to deal, one of the ways to deal, because it is going to be very difficult predicting how things are going to turn out, one of the ways to deal is that not to get out of the asset category, but to expand the time horizon. So once you have, let's say, 4 categories which are getting expensive, but these are good categories to own, good ROEs, the companies are inflecting, growth metrics are there. Only point is that at extreme valuations, higher valuations, one needs to have a longer time period for as far as the investment decision is concerned, and not maybe lose track of your asset allocation is broadly what we wanted to highlight.
Viewers, it's a very interesting statistic that Vineet Samre is pointing towards, and I just wanted to lay out that point that they've made in that note, that for a much maligned broader end of the spectrum, and everybody likes to say that, oh, mid caps, small caps having done so much, etc., because you are investing into mutual funds from a long-term perspective. That statistic that Vineet Samre spoke about, that they've highlighted, on a 7-year rolling basis since September 12th, the mid-cap index has returned over 12% returns 76% of the times on a rolling basis, has delivered negative returns 0% of the times on a rolling basis. Even for the small cap space, by the way, on a 7-year rolling basis, delivered negative returns only 1.2% of the times. It's a telling statistic. If you're investing for the long term, maybe, just maybe, these statistics will help you make some thoughts. Vineet, just can I ask you a quick perspective, because you guys made this famous decision of not taking investments into your small cap fund at a point of time when you thought it to be overheated. A brave move then as well. Would you say that if you're investing from a slightly longer term perspective on the back of this statistic and on the back of the nature of the market currently, because so many sectors are formed only in the mid cap and the small cap end of the market, it might not be a bad idea to keep your SIPs going?
Yeah, definitely. So that's the thought process that, and then more so when we do this analysis for SIP, this works out to be even better. That investing at a high point also yields to decent returns over a long period of time, and hence from that perspective, I would say that if one really has a good 6-7 years perspective, despite the high valuations, it's okay to be part of this category. The other matrix is that when we look at our own portfolios, there are still maybe roughly about 40-45% of our investments are still into companies where the valuations are not expensive. The valuations are below 15 multiple even today. Maybe some of them are facing a low business cycle. Some of them are not in the positive momentum or narrative today. But the point is that one needs to create a portfolio which is designed to yield success over the long period of time and have a mix of companies which can potentially deliver good returns when the cycle returns. So I think from that perspective, it's not that everything is sort of over at the moment with these high valuations. There still are opportunities, and definitely one stretches the time horizon to maybe 5-7 years. We don't see a material negativism as far as that decision is concerned.
Okay. Well, gentlemen, stay on. We need to slip into a short break. On the other side of this conversation, we try and talk about one more aspect that they've sent. It's been 2 more aspects. One is the PSU outperformance, which is probably more than just a narrative, or is it? Let's ask Vineet and Kalpen about this on the other side of this quick break. Stay tuned.
बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is
Moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
All right, back with the mutual fund show in conversation with Mr. Kalpen Parekh and Mr. Vineet Sambre, and we are talking about that annual note learnings from the Tour de France and trying to understand those or juxtapose those learnings with a thoughtful portfolio approach. Some of the things we've discussed. One important thing that we did want to talk about is this whole excitement around PSUs. Now, Kalpen, I don't want to spill the beans. You guys have mentioned that the header is that is this whole PSU quote unquote excitement more than just a narrative? Can you talk about this?
Sure. So, like the title, Neeraj, what we are trying to highlight here is that investing has to be a rational attempt, and if data changes and if numbers change, we have to evolve and adapt our opinions and views. So over the last few years, even at DSP in our portfolios, PSUs which had fairly low weights over the last 2 to 3 years, when they started screening in on 2 counts. One, on account of significant operating efficiencies in their businesses. Second, on account of certain regulatory changes or certain other environmental changes which gave confidence or conviction on the durability of their business cycle or revenues. We started increasing our weights significantly, so much so that in some of our funds the weights are in excess of 20% in the PSU bucket. Now, an important dimension was that they were also cheap. So typically how do you make money in stocks is, you get significant earnings growth and momentum. And secondly, there is valuation expansion. Now, PSUs were cheap for long periods of time over the last 8-9 years. So if you had entered in the second year or the third year or the fourth year, they were always cheap. But some of the triggers which came out in the last 2-3 years in many pockets, whether it was in the defense segment, whether it is the cleanup on the PSU banking side, or in the energy space, or even on the power side, there were a lot of regulatory changes which also came in, and that coincided with significant improvement and enhancement in business performance. So as money managers, we constantly look for data, and if that data is questioning or making us evolve our beliefs. It's not easy many times when you're anchored in a certain space that we invest only in a certain pattern. The reason to highlight this dimension, so this was also a dilemma that, the team keeps on having, that, is this for real? Is this narrative? And there are always two schools of thoughts, two sides of a coin. But looking at how data points were evolving, operating metrics were changing, the behavior of these companies in terms of a very high quality business performance, all of that was falling in place and supported by great tailwinds of very cheap valuations. And compare this to a large part of the other side of the market, which was becoming more expensive than what it deserved to be. We decided to gradually increase weights in a lot of these pockets. We've given data points in the note on how ROEs of these segments were in the last 3 to 4 years versus the prior 4-5 years, and how ROEs improved, and they were at starting valuations which are very cheap. So with that context, and like I mentioned in the beginning also, ultimately as money managers, our objective is to buy high quality profits at reasonable valuations, or if at some points in time you get it very cheap also, you get lucky. So I think that is the convergence which is playing out in the PSU bucket. No doubt some pockets are seeing extreme fraud, but that's our role as money managers to ensure that the discipline is there, not to buy into them just because there is a PSU rally going on, but each company is evaluated on its merit, and we question that how long is the durability of this growth, and accordingly we decide how to size. Vineet, if you want to add.
No, so I think broadly Kalpen has covered a lot of the points, and more importantly, I think again, going from the fundamental viewpoint, a PSU again is a labeling, and when we look at where businesses have created most value, we know that when the growth recovers and the ROEs inflect over the cost of capital. I think these two combinations are very powerful for any kind of businesses to start delivering strong outperformance and returns. So I think from that matrix, when we look at these, I think those have added up well. The other important factor is that definitely the past inferences will always remain strong in our heads, and hence the selection criterias for them will also remain more rigorous, and wherever we find that dominating PSUs, low private competition, high margin of safety, I think those are going to be the parameters to be part of that basket overall.
Got it. Okay, so Vineet, we're kind of running out of time on the show, sadly, but I just want to ask you from a mutual fund investor's perspective, how does this, or even the third topic that we kind of looked at, which is where do you guys think we are in the investment cycle and what are the implications for the same? How does a mutual fund investor benefit from the learning around PSUs or from around where we are in the investment cycle?
So I think clearly what investors, I think the most important factor is going to be the rationality, and I think that is going to be the long-term success mantra for investors at large. For us as mutual fund managers, I think this is what we try to look at. We try to look at data to guide our decision making, and data can come from both our team of diverse skill set plus technology, which is also helping us a lot, which we also covered some bit in our note. So I think we'll keep getting guided by those, and as we understand in terms of the business cycles, I think there are business cycles which are maybe towards the higher end of the curve. There are businesses which are still in the midpoint. Many of them are in the midpoint. And there are businesses which are in the low cycle. So let's say specialty chemicals, agri, these are the businesses which are in the low cycles. Automobiles, healthcare are in the mid cycle, and maybe high cycle. Some of these engineering names today seems to be in the high cycle. So I think we need to decipher these segments, need to then compare it to the valuations, and then maybe take a more rational call around how to position or size up some of the good companies within these buckets.
But so therefore, would Kalpen, sorry, just before we wrap up, Kalpen, would you believe that investing via diversified funds, wherein the fund manager takes a call on some of these sectors, be it investment cycle, be it power, because you guys have done some tremendous work in the note on the change in the power space that you guys saw early, etc. Is that the best way to play this? I'm just trying to correlate it from the viewer's perspective about her or his takeaway after listening to this conversation.
Vineet, Neeraj, at any point in time, we believe that the common investor or the average investor who doesn't have the wherewithal to, keep jumping themes and cycles, the best place is a diversified flexi-cap or a multi-cap fund, because there the fund managers will navigate. 7 out of 10 times if we go right, that would be a good outcome, and we will keep navigating. The tax efficiency is very high. Left to ourselves as individuals, generally we get excited about a cycle towards the fag end. To give an example, 3.5 years back, we reintroduced a fund called DSP Tiger Fund into the market, saying that the capex cycle could actually be, the valuations looked expensive even then, but the earning cycle had not kicked off, particularly in the capex space. And that, for example, has been the best performing fund in our bouquet of around 15 funds. Today there's a lot of interest in that, but the returns went to only very few people who invested in 2020 or 21. So today, if someone says I want to put money in that type of a theme, we would say come via an SIP route, because a lot of returns have been made. So our belief is at any point in time there are different buckets and different phases in the cycle. For an investor, it's best that he comes via diversified flexi-cap and multi-cap funds, and depending on his personal asset allocation, decide whether he should do lump sum or an SIP. But clearly avoid hot themes at this point in time, which have run up between 3 to 10 times in different pockets without doing appropriate homework.
Got it. Jayman, we are out of time completely, but thank you so much for writing such a lovely note and talking to us about it. Really appreciate your time. Well,
Thank you so much, Neeraj.
That's the view from Team DSP. By the way, just mark a couple of stocks there, including Garware, which has had a very strong quarter, and the stock is up nearly 15-16%, so a bit of a bounce there. Some others too, but this one stood out. That's it on this leg of the mutual fund show. Stay tuned to NDTV Profit.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना, आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये ज़रूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा, और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
Hello and welcome. You're watching Large Trades on NDTV Profit. I'm Agam Vakil, and in this show we take you through all those stocks which are buzzing in trade. But before that, a quick look at the markets. For now, we are looking at just a little bit of weakness coming through as far as the benchmarks are concerned. But since the RBI monetary policy, we have seen largely sideways movement. So it is turning out to be a quiet latter half of the trading session, especially given that it is the Nifty weekly options expiry. For now, both the indices are down by around 0.9%, up by 0.8% to be precise. And we haven't seen too much traction since the Reserve Bank of India's governor's speech on the monetary policy. As far as Bank Nifty is concerned, it is largely the same, moving in tandem with the benchmarks. But it is the broader market indices which are, in fact, showing a lot more in terms of traction. So you do have the mid-cap index, which has advanced in trading in the green, and the small-cap index is largely flattish. Outperformance there with respect to some of the key benchmark indices, and even in terms of some of your big movers as far as your broader markets go, well, a lot of them are in focus on account of earnings. In the gainers, we do have something like a Cummins, which is up around 7.8%. And we'll be talking about that, in fact, in this show. We also have Trent, which continues to advance today, up another 6.4% as we speak. And of course, Mankind Pharma is the other one, which is also advancing by around 6.5%. And on the losing end, we have Paytm now, which has hit a lower circuit after it was our upper circuit yesterday. So a lot of topsy-turvy happening, and of course a lot of this was on account of the press conference of the Reserve Bank of India, where there were a lot of questions and a lot more clarity with respect to why the RBI has taken the steps that they have against Paytm. Besides that, we have a little bit of weakness in Dr. Lal PathLabs, which is down around 3.4%, and have several other counters which are also buzzing in trade. But from there on, we talk about all the counters that we want to talk about in this show. We'll be talking about Cummins India, of course, which has shot up. We are also covering Venky's and Cypria Life Sciences. These are the three stocks that we want to cover in our show today. We start off with Cummins India, which came out with surprisingly good numbers. And I reckon that this has also surprised the street, which is why the stock has advanced by nearly 8% as we speak. Let's get in my colleague Anushi to give us a better understanding of the earnings as well as the technical aspects. Anushi.
Right. So as you correctly mentioned, the Q3 results did translate into 10% of an intraday high for Cummins India today. Even if you look at the volumes, that are up by about 9 times its 30-day average now. So just to recap on the earnings part, the revenue, EBITDA and the margins all saw a uptick, with the revenue gaining about 17%. Well, this was on the back of the domestic sales, which continues to remain the strongest segment. But now I want to just to highlight what is happening on the export sides. Export continues to remain a downside, with about 40% decline in this one. So exports contribute about 13% of the mix. However, the overall revenue growth continues to be strong, with about the company expecting a double-digit growth for the FY24 guidance. Now, coming to the valuations part, if you look at the 3-year PE, that is about 39 times. So comparing it to the current PE, that is about 59 times. So higher valuation side, and mixed sort of reviews on the analysts' recommendations. But Kotak did come with a report today wherein they have upgraded the stock from add to buy now, citing the gross margins which are remaining strong for the second consecutive stronger at 35%. Also, the normalization of inventory is one factor which they are bullish on, that with now the pre-buying of inventory over and now the inventory back to their normal levels. Again, exports, they are seeing some kind of a positive momentum with the pickup of its CB4 compliant products. So definitely a watch out on these bases. The stock has gained over 76% in this 1 year itself.
Sure. Anushi, thanks for getting us those updates as well as details on Cummins India. And from there on, we move and shift focus to Venky's. And that's where we have seen it hit, and in fact, it's currently trading at an intraday low. Let's get in Mihika, who's joining us on the details on the stock performance as well as the company's first quarter. Mihika.
Yes, so the stock is at an intraday low, low of 7.11%, and has also shown weakness in the past 6 months. It's down about 6%. Now, volumes are more than 5.6 times its 30-day average, and the total volume stood at 3.05 lakhs, which is around 5% of its total public free float. And the sellers were 2.13 times the buyers. Now, the dip in pricing was mainly because of the Q3 weak earnings. Revenues are down 8.15%, and the company posted an EBITDA loss of 7.21 crores versus an EBITDA profit a year ago, and the company also posted a net loss of 7.94 crores. Now, what actually went wrong was the revenue degrowth in the oilseed segment, which fell 16% year on year. The segment was mainly impacted because of lower demand and also muted realizations from the finished goods part where oilseed is used. Otherwise, the poultry segment profit margins are also impacted on lower realizations. The company also to give an update on the expansion project. The company is set to open a new manufacturing unit in Maharashtra. The project is on track and the construction is completed, and the company expects the government permissions necessary to come in by the end of Feb 2024, and post then the production will start.
All right, Mihika, thanks so much for getting us those insights into Venky's. Stocks under pressure, down 6.5%, but it is a significantly volatile counter. But from there on, let's talk about Supriya Life Sciences. This is a small cap company which is in focus and on account of a sharp up move coming through. We have Varsha now who's joining us, who can give us perhaps shed more light here as to what's happened. Varsha.
Hi Agam. So if you see stock price is up almost 15% for this company, and volumes are at 18x its 30-day average. Now let's have a little background what this company does. So this company manufactures API, that is active pharmaceutical ingredient. They have got niche product basket of 38 APIs, presence in 86 countries. Now if you see the stock price is up 15%, this is on the back of Q3 earnings which company has posted. Very nice numbers. Revenue was up 33%, but if you see the EBITDA margin is at 30% versus 13% last year. Now, company had already guided that they will have almost 28 to 30% of margins in last quarter. If you see guidance that was given in Q2 FY24 was they'll maintain an overall revenue growth of 20 to 25%. But recently, in one of the business channel, they had lowered their guidance, and management said conservatively they are maintaining 15% of revenue guidance. Now, if this 15% is taken into consideration, next quarter results may be muted. But remember, H2 is better than H1 for Supriya. So maybe management is giving a conservative guidance, and they may, make 20 to 25% growth. But now we have to see that. Also, management maintains margin of 28 to 30% for FY24. Now, company did see margins of 40 to 50% in past quarters. But due to China effect and China impact, now the margins will be around 20 to 30%. Also, now the big thing is now they bet big on its R&D to double sales in 3 years, and let's see what it pans out for them.
Sure, absolutely. Thanks so much for that, Varsha. It's a very interesting counter, of course, in the small cap space, and a lot of traction there as well. But on that note, it's time to slip into a short break, but don't go anywhere. On the other side, we get you a lot more managements in terms of earnings. Stay tuned in.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, Decide on a strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health.
Welcome back. It's now time to talk about earnings, and we do have those from Shelby Limited, whose stock is down at the moment, but even as the company has posted its earnings. Well, we have the management, Shanay Shah, president at Shelby, who's joining us on the show. Shanay, good afternoon. Thanks for joining in. You know, your operating margins have certainly seen a good improvement on a year-on-year basis. Revenues, of course, single-digit growth coming through. How do you assess this quarter?
Yeah, good afternoon, and thank you for having me. So we do believe that this quarter has been a good quarter and in line with our expectations. We have grown at a 25% level on a year-on-year basis on the EBITDA as well as the profit after tax. And it is a historical year for us, because we are going to complete 30 years since we founded the organization. And also we are going to be crossing 200 crores, on EBITDA in this year, as well as 100 crores on PAT by end of this year.
Okay, so considering it is a milestone year, can you give us an idea about your current number of beds, operating beds, and what can we expect going forward as we move into the next quarter as well as the next financial year?
Well, in this fiscal, we will be doing about 17-18% kind of top line growth compared to in FY24 compared to FY23. And we are very confident that we will be doing between 20 and 25% top line growth in the coming year. The EBITDA performance has been solid in this year, more than 25% on both EBITDA and the PAT levels. And we expect that to continue as, the operating leverage will continue to kick in. In terms of, the capacity, we've just added, a hospital. We've acquired a hospital in the Delhi NCR region. This will add a total of 180 bed capacity to our existing 2,100 beds. So this is, a great location on Golf Course Road, and does about 70% of its business as international business, and that too in most of the high-end specialities such as the bone marrow transplants, liver transplants, kidney transplants, among other high work that they do. And also, Shelby itself has a very strong presence in the northern region. And with this capacity coming in, we will be able to unlock a lot of value, because of the credibility that the brand has in the northern region.
Can you tell us a little more about the acquisition that you made? I believe you bought a little over 87% in a 130-odd bed facility. Can you tell us about how this can contribute to your overall performance?
Yeah, so we have acquired this hospital stake at about 100 crores. We've acquired 87.2% at 100 crores. And essentially, the company has about a 45 to 50 crore kind of debt. And essentially, at the run rate at which it is going on, in the next 12 months, we are looking to do about 120 to 150 crores on top line. So it's a good buy for us from the value standpoint. And we look to unlock value, as Shelby will bring its own clientele along with the good work that the Sanar Hospital has already been doing.
Right. Shanai, I believe that you guys have had some challenges when it comes to supply chain, which has impacted and hampered perhaps your performance going in. Can you tell us a little more about that and how you guys are addressing this?
Yeah, so the first half of this year, we were kind of hampered with some of the supply chain issues, which was not specific to the company, but the industry as a whole. And, we are seeing signs of all of that behind us. We are very positive for the future. We have 6 new SKUs coming up and launching in the next 15 to 18 months. Some of our launches, like the Tux, have done extremely well over the last 1 year, and we expect significant growth coming from that. And we are building the significant capacity, to kind of fuel this growth, because we will have to build that level of inventory to kind of cater to the new surgeons and distributors that we intend to work with.
Sure. A final question then. Looking forward, if you can also give me an idea about the home care business, which has also grown by as much as 30% year on year. What can you tell us as far as this particular segment goes?
Look, so the home care business has shown the double-digit growth in terms of the number of patients that we have catered to, and it has shown more than 52% growth in the top line in this year. So it has grown well, and the 3 big levers for us in this year have been physiotherapy and diagnostics, as well as the pharmaceutical area. So these 3 have been the major drivers for us, and we will continue to grow and unlock value here. Having said that, the biggest benefit that we get because of this is really, the kind of the stickiness from the patient, and we get a lot of inpatient, outpatient top line in the hospitals because of this particular segment.
Right, Shanai, we leave it at that. Thank you so much for joining us and taking us through the quarter as well as the expectations. We wish you the best. Well, that's the management of Shelby telling us about all that's in store going ahead. But from there on, we talk about JB Pharma, which reported their Q3 earnings as well. And the net profit surged as much as 26%. My colleague Monal spoke to Nikhil Chopra, the CEO and the whole-time director at the company. This is what he had to say. Listen in.
This was one of the peak margins that in last 3 years that we could demonstrate in our operating business. And the reason behind this margin that we could achieve was a mix of many things. What we have been trying to do in India business, which is contributing overall 53% of the revenue, is tilt towards the entire chronic part of the business, particularly in chronic, when I'm talking in the field of cardiology. Within that cardiology, hypertension, heart failure, lipid-lowering medicines. That is what we are trying to do, which is helping us with good gross margins. And secondly, also there is a robust efficiency program that we are running in the company over the last 3 years, be it productivity in the field, be it efficiency and better bed sizes in our manufacturing plants, better vendor management, all aspects of efficiency. That is what we are trying to achieve, which only helps us to reinvest in the business. And overall, the trajectory that we have seen in our CDMO business is also helping us with better gross margins. And last but not the least is the haircut that we have taken in our South Africa business, which was more public driven. is also helping us in terms of better gross margins and better EBITDA margins. So this is where we stand. In terms of guidance, if I have to talk about, we have been guiding for our EBITDA margins ranging between 25 to 27%, and touch wood, our EBITDA margins for 9 months are close to 27.8%. So we will continue to guide our EBITDA margins between 25 to 27% for the coming year also, because there are a couple of pain points that we are seeing in the business, and as everybody is aware about the Red Sea issue, and equally some of the API prices also going up and delays in shipping. So keeping in mind, we continue to guide for 25 to 27% EBITDA margin.
Sure, sir. So if I were to just understand, what is the share of chronic in the whole of domestic business versus acute, and is this proportion going to be the same? Are we looking at moving more towards chronic? How is the product mix going to be?
Very good question, Monal. In terms of, that is the agenda which we are looking at in India business. A chronic part of the business today is contributing 52% to the revenue at JB. But if you look at Indian pharma market, which is $25 billion market, the chronic contribution within that is close to 40%. Coming back to JB, the roadmap that we have put in place is to take chronic contribution to as high as 60%. With existing portfolio that we have bought within cardio space, what we are trying to do. And there are some also niche products that we have in the field of nephrology, and a couple of products in the field of metabolics that will only help us in terms of improving our cardio share. When we look at chronic space, what we keep in mind is not only generating revenues. The long-term agenda is how do you at least care for the patients, look at how do they lead better quality of life, faster early diagnosis, better quality of medicine, affordable access. All this has been kept in mind, driving better adherence, reducing burden of disease. That is a long-term agenda that we are looking at. How do you serve more and more number of patients with the quality medicines which are coming from the house of JB, and ultimately you can drive better revenues. That is how the balance between a humanitarian approach and a commercial approach, that is what we are trying to keep in.
Sure, sir. So this is another question just for understanding. When we look at margins of a chronic portfolio versus an acute portfolio, are they almost at par, or how is the margin profile for these two therapies?
Well, obviously the chronic portfolio margins are better, but I will not be able to detail it, but the margins in chronic are better. And one more thing which happens in the chronic space is, as 50-60% of the population who are taking medicines, they adhere to medicines. So there is a refill business which also helps you in long term. But the competition in the market is stiff. If you look at cardiology market, which is a $3 billion market in India, 3 years ago we were 13th ranked player, and we were covering 40% of the cardiology market. In 3 years, the journey that we have traveled with our organic big brands like Cilacar, Nicardia only becoming big, gaining market share, and also the couple of acquisitions that we have done in heart failure and lipid lowering pill. Today we are covering 90% of the market, and we are from 13th ranked company, today we are 8th ranked company, and we are the fastest growing company today in cardiology space in the country.
And that is all that we have for this edition of Large Trades. But don't go anywhere. On the other side, we get you India markets close. Stay tuned to NDTV Profit.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is
Moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Hello and welcome to India Market Close. The big event of the RBI policy meet is behind us. The governor very conclusively hinting that the chances of a rate cut are very unlikely until inflation targets of 4% achieved, and the markets do not like that. On back of that, the Nifty, which was holding well above 46,000, has actually sold off quite sharply, 526 points lower, 1% cut on Bank Nifty is what we have. The Nifty and the Sensex itself are looking quite pained, 220 points off on the Nifty. The Sensex trades the cut of 750 points. So if the bulls and bears were struggling to hold on to levels, the bears of course having their field day or day in the sun after the governor pretty much stayed on his stance and of course did not comment very much on liquidity either. Well, that's the broader market. The outperformance across the broader market continues in today's trade as well. The Nifty mid-cap trades with a marginal gain of 70 points. The small cap index, though, on the other hand, trading with a cut of 24 points. Well, beyond the macros, the bigger focus on the street was all about earnings, and the large part of the broader markets were reacting on back of either good numbers or bad numbers. But let's take a quick look at what's happening on the Nifty 50 first. The breadth of the market is very clearly biased towards the downside. You've got a whole lot of losers for a very few handful of gainers in today's trade. Well, Britannia posted numbers that the street was disappointed with yesterday. Saw some selling pressure in trade yesterday. The selling continues into today as well, down about 5%. Well, ITC at the day's low point, 4.6% lower. The reason is that there are reports on the wires that BAT which is British Tobacco, is looking to pass stake in ITC. We'll try and get more on that from an analyst and what it really means for the stock too. Nestle again post-earnings week. FMCG as a whole pack really has been having a down day from the get-go in early trade. Along with that, Tata Consumers, I'm not sure why the street is disappointed, but the numbers from Tata Consumers stable weren't actually too bad. They've seen growth across most segments. They had an exceptional item on their profits, largely on back of the acquisition costs that had to be absorbed by the company. UPL looks weak. iBank, banks like we said are also trading much lower. Through the first part of the day, it was the public sector banks that were gaining, and in fact SBI single-handedly was holding the markets and the bank Nifty together. Still gains and does well in trade, 4.5% higher is what we have, but unfortunately the other banking names are seeing selling pressure, and that is what is taking bank Nifty lower. Power grid, markets like those earnings. The stock is up 4.2%. OMCs continue the rally in trade today. Remember, a few days ago, you also had a report by Morgan Stanley saying a re-rating in this space is very likely, and on back of which your BPCL looks good, Coal India looks good. Interestingly, HCL Tech is also seeing some buying. TCS is looking okay. Auto is also pretty much having a flat day. But Harsh, I think the day belongs to SBI, and on the downside, FMCG is getting whacked, and I don't know why, because some of those numbers were not actually that disappointing.
Well, yes, absolutely. So it's an earnings, it's an earning focused kind of a day when I'm looking at stock specific actions. And that's correctly put up by you. Let me quickly take it to some big earnings which came out. You look at the likes of a Cummins. Strong set of numbers. Stock is doing quite well in trade. Power grid as well. Margins going up from around 87 to 88.5%, and that one is also flying away in trade. You have the likes of an EPL as well, up 2% on the back of numbers. Some counters which didn't do so well on the back of numbers. Again, you look at the likes of an Ashok Leyland. That one, Tata Consumer, seems to be lower by almost 3%. Samina touched upon that. Greaves Cotton, Sobha are some of the other names which are having a mixed kind of day. Sobha doing badly, but Greaves Cotton doing fairly well after a good set of numbers. You also have HMA Agro and Ratan India, both of which also declared numbers and were buzzing at least on the back of numbers. Some taper with regard to that buzz. In terms of other stocks, other counters which are buzzing on the back of news, you have the likes of a Paytm down 10, TRF up 20%, second consecutive day, and ITC is down 5%. Samina touched upon that as well. Back to you, Samina.
Afternoon. The broader markets, of course, weak on back of a little bit of disappointment in terms of what the Reserve Bank of India did, even though they played the part, remained status quo on rates. That was 100% consensus when no expectations were on the rate. There was a little bit of hope that the tone of commentary would change or sound a little more dovish, and there may have potentially been a change of stance, but the governor pretty much making it clear that none of those parameters will be changed in the foreseeable future. And they also talked about the fact that liquidity is being managed because the RBI is very nimble when it comes to that. FMCG is seeing weakness. You can attribute it to earnings. You can attribute it to the fact that rural demand has largely been weak and the markets don't seem too happy. Or you can simply put it down to the fact that there have been no rate cuts, and FMCG or any sort of sectors that will get a bump up on back of lower rates is seeing some selling. But let's move the focus back on to the technicals of the street. Jay Bala, founder and chief market technician of Cash the Chaos, joins in. And we also got Aditya Shah, founder of Hercules Advisors. Hi, Jay. Afternoon. It's an interesting day. The market spent quite a bit of time consolidating. The VIX had also come off a little bit. Important parameters were all indicating too that there would not be too much downside pressure. What we are seeing right now post-policy is some weakness. The street is down, Nifty is down about 1%. Good time to buy, you think, or go long?
Good afternoon, Samina. See, my opinion is slightly different. And, if you see the price action of the markets for the last several sessions, it's been trying to close above 21,950, and that's getting rejected. It's trying to close below 21,350, that's getting rejected. My sense is that this market wants to cool off, and it's trying to get lower from here. And we just need markets to confirm that it is heading lower. 21,661, the market is about 21,698 now. If 21,661, that gets printed now, that will be the early warning sign that this market is trying to weaken. But we want the markets to close below 21,460. That will be a confirmation that this market is considerably trying to cool off, predominantly due to weakness from the banking index, which has been a rank underperformer for several months now.
Aditya, I'm not going to spend too much time on the policy, but what is happening in FMCG in your opinion? Is the disappointment stemming from earnings or is there more to it? Is it just healthy profit taking that we're seeing? Because stocks like Britannia, Tata Consumer, ITC of course is news based, are all down 4 to 5% each.
So the perspective really is all the stocks that you've talked about, they're really very highly valued, and a little bit of disappointment on the earnings is triggering the sell-off per se. So in my opinion, in good names, it's an opportunity to buy. We've seen likes of Trent coming out with their results yesterday, and they were fabulous set of numbers that they have posted. One common thing with the FMCG space that you really need to check is the valuations will be extremely aggressive, and they have been extremely aggressive for a couple of years now. So the perspective is slow growth together with high valuation is a recipe for slow returns in the near term. So in my opinion, selectively you can buy companies like ITC, companies like Trent, or companies like Tata Consumer, where longer term visibility is still there. There you can go ahead. Otherwise, you have to wait and watch.
Sure, Aditya. Aditya, we did hear from Jay, who spoke about banks. I think you track banks extremely closely. How are you viewing the sector as a whole, especially given the fact that there are rate cuts probably on the anvil? No commentary yet on that, but they're probably not too far away. So how do you view it, public versus private?
So Harsh, we've spoken about this before as well. We are entering into the second leg of credit up cycle. And in the second leg of credit up cycle, the quality banks will start to perform much better as the asset quality continues to improve for them. And the banks where the underwriting processes are not very stringent are the ones who will start to struggle now. We've seen the RBI already warn on the unsecured side of it. And we've also seen some banks report some bit of slippages on the unsecured side of it. So in my opinion, the party of the PSU banks, where they have outperformed the private sector banks over the last 6 months to 1 year, 6 months, about 1.5 years, that will slowly start to abate. Good private sector banks, where the asset quality will stay intact as the credit cycle continues to move up, are the ones to watch out for, in my opinion. Also, similarly, on the NBFC side of it, the quality NBFCs will continue to do really well. And the smaller NBFCs, again, will have asset quality issues. So, in the markets, nothing is permanent in nature. The first leg of re-rating of PSU banks is now complete. Now we will move on to the second leg of re-rating of these banks. Second leg of credit cycle, where good quality banks will start to perform. And mind you, not to say SBI is not good, very high quality. SBI is also a very high quality franchise. So you need to selectively look at PSU banks. But top private sector banks, which have not done anything over the last 3.5, 4 years, could be the top bets for me in 24 and 25 as the credit cycle continues to move on.
Right. We have earnings as well from Apollo. On the top line, there's a slight improvement. On the profitability, there's a dip. We will come back to that in a minute, but I just want to quickly take a look at how these insurance companies are doing. They were looking very well placed yesterday and for most part of trade today as well. LIC is still up 8%. New India Assurance is looking good. GIC is having a good day. Most of those insurance names really. Jay, you want to comment on it technically on the charts? Would you go long on any of those insurance stocks, or for that matter even go short and on expectation that there would be some profit taking?
See, the insurance space is a little bit mixed, and we need context here. And LIC is leading from the front, and there is a considerable movement in New India Assurance. These are the two names that I like from the public sector insurance space. But if you look at the private sector insurance space, most of them are in a counter trend rally, like HDFC Life, SBI Life. They are all in ICICI Pru. They are all on a counter trend rally. So if you want to buy the dip, you are better off focusing on LIC and New India Assurance. But New India Assurance, I'm telling you, it's probably reaching an exhaustion level. But be careful here. But in the private sector space, in the insurance sector, you want to do something. It's ICICI Lombard. That's looking like it's got further upsides to work with. So that is looking interesting for me. Other than that, I will treat the rest of the insurance rally as a counter and bounce. So avoid the other names within the life insurance space, except LIC, New Year Assurance, and ICICI Lombard.
Got your point, Jay. Aditya, if I can have your views very quickly on this, I'm short on time. With regard to the likes of some of these insurers, General Insurance, New India Assurance, some of these names have really run up. Your views, maybe 2-3 key reasons which you feel why some of these have really re-rated.
See, LIC was trading at below its embedded value, and that was the real reason why LIC stock has moved up. Now it is trading at a premium to its embedded value, and slowly and steadily it will settle down somewhere in the 1.5 to 2 times the embedded value. That is my guess on the LIC stock. Per se, yesterday in the Parliament committee, there was a recommendation that on general insurance, particularly health insurance, the GST rate should be rationalized from about 18% to a lower rate. So that was the real reason why all of these stocks were really rallying out. That rationalization of GST on these insurers would be there. And also the Parliament committee has also recommended that Ayushman Bharat should be extended to a lot more people in this country. So that was the whole criteria that health insurance penetration will start to move up in this country. However, these are very long-term stories and will not happen in the shortest period of time. But health insurance and general insurance, both of them are sunrise industries and must have in the portfolio.
Understood. I'm going to quickly go over to another one which is in focus today, Paytm. We had the RBI monetary policy, and I had very little doubt that the governor would be quizzed on everything that's happening around Paytm. The stock now at flatline, lower circuit. Now, I want to try and bring out a few points which the governor and the deputy governor Swaminathan put across. What they said was this was supervisory action for persistent non-compliance. They also suggested on a no-name basis that generally action which is taken in this regard is post years of bilateral engagement, and the emphasis is always on keeping engagement on. But if deficiencies are not repaired despite time given, they said that they have to continue to take into account the best interest of systemic stability and protection of customers, and due to which they've had to take some of these actions with regard to Paytm as well. Now, they've suggested that generally they take their time to engage with entities before, really acting upon it in this fashion. But they're going to issue some FAQs which will hopefully clear the air, especially from a customer and consumer standpoint for Paytm users. While we await that, and also what they clarified was that they are not against fintechs. So I want to go straight to Aditya because I know he has certain views with regard to Paytm. And Aditya, I'll try to play devil's advocate here. Paytm, roughly 30,000, maybe now sub 30,000 crore in market cap, 8,000 odd crore in terms of its current assets, cash balances, plus receivables, etc. At what point does this start looking good to you?
See, Harsh, there are a couple of things that we need to clear out first. It's not about fintech or it's not about banks. Whenever RBI sees non-compliance, RBI acts, and RBI has acted before. So what the RBI governor has clearly said today is, after engaging with Paytm for multiple number of months, they have found that the compliance standards have not improved, and that's why they have taken this regulatory action. Apart from the market cap of 30,000 crore, the important thing to really understand right now is what happens to the existing Paytm business. Does the RBI want Paytm to completely shut down its payments business, or the RBI wants the payments business to continue with some other banks, or the RBI wants some other bank to take over Paytm's payments business? These are some crucial answers that the RBI needs to come out with, and Paytm needs to really answer. On top of this, the Paytm management has also said that they are going to stop loan growth until clarity emerges. So in my opinion, a normal retail investor who does not like to take too much of risk should wait for clarity about how the Paytm's business model is going to evolve post this regulatory action. Those who are speculators, who are punters, they would start to look at a market cap of 10,000 crores or something like that. But if you were to ask me, I will not speculate right now because there is too much of non-clarity from the regulator, from the company itself about how are they going to evolve going forward. So if the business is not very clear and you are speculating on the stock price, it's just pure play gambling in my opinion. So wait it out. RBI will come out with clarity about what they want Paytm to really do. And from there on, you have to take a guess. In my opinion, you must not speculate right now at this stage. Let the stock price settle down and let the circuits get opened up so that if you want an exit, you can get an exit as well.
Right. Stay with us. In fact, here's what Deputy Governor Swaminathan J had to say about Paytm's situation at the MPC press conference. Listen to that while we take a break.
As a regulator, we have various tools in the kitty. And it's not necessary that every single tool will be deployed in every single situation. That we make our own assessment to the scale and proportionality of the issue, as well as the tool that we will have to use at different points in time. So one size fits all kind of solution may not work in such situations. So, I would like to stop there rather than, trying to elaborate on that. We may use certain tools, may not use certain tools, but it is after a due consideration that we do.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए. मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Welcome back. You're watching India Market Close, and post-policy, the market seemed to be sulking in trade. The Nifty trading at the day's low point, Bank Nifty as well, not actually looking very good in today's trade. Consumption is also seeing some selling pressure as we see it. One stock in the FMCG pack that also seems to be having a bit of a down day today is ITC. The stock trades, and that's down about at the day's low point, 4.5% cut, coming in after its largest shareholder, British American Tobacco, said it was working towards completing the regulatory process to par its stake in the diversified conglomerate. Remember, they own over 29% stake, and in the last couple of months, we've also heard from BAT, which is the largest stakeholder in ITC, saying that while they would be looking to reduce their stake, the fact remains that FDI rules for tobacco in this country are fairly tough. But we've got with us Shirish Pardeshi, Senior Analyst for the FMCG pack at Centrum Broking, joining in to talk to us about what this really means and if it really has any long-term impact on ITC. Shirish, thanks for joining us. Shirish, now this was in the news about a month ago. We saw a little bit of a stock reaction then. We moved on. For all through half of December, most of Jan, there was nothing that was talked about. Now this is back on the wires where BAT is looking to par its stake in ITC. What has suddenly led to this discovery again?
I think if you follow this question repetitively coming in the BAT on-call description, I think at this point of time, what we have to keep in mind that we really can't make it out from the news on the face of it what BAT is thinking. But the demerger of hotel business which is there, so there is a lot of value. And I think from the shareholders' perspective, still to my view, there is a lot of value which is there. On the other side, we also have to keep in mind that BAT also has a lot of debt on the book. And this investment, what they have done, to my best understanding since the beginning, they wanted to get the entire stake in the company. But that has not happened because of the regulatory conditions in India of the FDI. On the other side, if this actually happens, or if may take some speed over a period of time as that gets the approval, the entire stake will not get sold at one go. It is, I mean, there is a power to drive the stock up or down. The third factor which is there is that to getting the regulatory approval itself and then the FDI approval and the RBI approval, it's a long-term process. While I can also say that this question has been many times, BAT has said that it is one of the things the investment can pair. But I can see that there is a lot of value, and if there is a negative reaction, why would BAT sell? That's my argument. That's my purely a hunch that they would like to keep the stock going up rather than it is coming down.
So Shirish, if I have to understand this, and I'm guessing this is what investors would want to know, this, like you said, has been talked about time and again in the past, and nothing really gets done with BAT. And BAT has also said that the FDI regulation in the country is also very tough. So it's not as if, they decide to pass stake and the next thing we know is that they've exited the company. Keeping that as the backdrop, would you buy ITC even at these levels? What's the call that you have on the stock? Is the BAT stake sale an overhang for ITC at this stage, or completely unrequired at this stage?
See, I can't deny there is a news flow which is incrementally taking a full decibel noise at this time. So obviously stock will be under pressure and people will then guess when it will happen. But fundamentally, if I have to comment on the company's performance, look at the business, what they have developed in terms of FMCG, staples, foods. It's doing fundamentally well. The investors' concern 3 years before for that why the company is holding the high business, which is hotel. And now there is a way forward that companies clearly come out that there will be demerger. So there will be definitely a value. Now, the point here is that cigarette business is going to be a cash cow for the company for many years, and it will continue to do that. But if I see that on the backdrop of cash flow, company has been able to develop the business and look at the business, it is throwing a lot of positive margin front. You look at the growth, what they have been delivering over last 5-6 years. I think I would say there is definitely a value. It's an individual investor call at what price they want to buy. But certainly, I would say that this kind of sharp reaction on the stock is unwarranted.
Got your point. Harsh also joining in, Shirish. So, of course, British American Tobacco, one possible overhang. Any others that one needs to look out for where ITC is concerned, given that there's been a good run-up on the stock price over the last 2 years?
I don't think, I would say that the stock, when you compare the FMCG peers, it's that the business is little complex and not necessary that all the segments are firing at the same speed and same efficiency. So that's why when you look at the performance of the stocks, I think the commodity business is sitting there. There is a high value add paper segment is sitting there. And also there is a FMCG business. So I would say that if you strip off the all businesses value, I think it is a much more value. But since it is under one roof, I think some or the other things will happen. Something will go up, something will come down. So as a company, when you look at the consolidated numbers, you will not be able to make out that what's happening in the company. But I would say that there is a lot of value and there is a merit that one should not short the stock at this time.
Sure, understood. Thanks so much for all of that perspective, Shirish. Of course, ITC in focus on the back of that news. And Shirish, thank you for giving us all of that with regard to what you feel and Centrum feels on ITC. But I also have with us Nitin Raheja, who's the Executive Director and Head Discretionary Equities at Julius Baer. Nitin, if I can take the question to you. What do you make of what's happening with ITC, and how do you look at valuations in ITC at this point, given the kind of run-up it's had?
So we really do not get into stock specifics and comment on that. But clearly, I think one of the key elements that has driven this company over the last few years has been this whole endeavor towards value unlocking. Whether it's through the hotel business, whether it's through distribution of dividends, because this is a cash flow machine. And it's been using cash flows to generate, newer businesses from the traditional, the cigarette business. So we think that, longer term, I think any correction is a positive sign because there is clearly value that sits there.
Understood. Thanks for that, Nitin. I'm going to quickly move across. Lupin, we spoke with the management earlier, and, they've guided with regard to how their margins will shape up in coming quarters. Let's go in and listen into a slice of that conversation. Of course, the numbers itself were a beat on all fronts. Listen into a slice of that.
If you look at the US markets, so you have risk, both Spiriva and Albuterol, that's really helped. And essentially, if you look at EU also, it's we have Foster and the like as well. But more importantly, there has been secular growth across all our markets, including India, where the productivity has really paid off. We added about 1,000 odd people in the last quarter of the last fiscal. So that's really paid off. So from our perspective, whilst there is a lot of room for optimism, given the current trajectory and the like, and there are, of course, other, all of this will certainly continue from our perspective. But there are also negatives in terms of potentially disruptions because of Red Sea related issues, because of air freight going up and the like. So you'd like to play conservative in that sense, right? And I would say anything between 19.5% to 20.5% in the quarters to come would look pretty good for us.
Right. Nitin, Lupin, fantastic set of earnings. They've managed to outperform quarter on quarter in terms of beating street expectations. The stock is looking flat to slightly positive on a down market. Would you look at adding Lupin tactically to your portfolio?
Like I mentioned, I'm not going to comment in terms of what we will add to our portfolio or not, to be honest. But look, I can just give you a broad perspective. I think the generics pharma space is looking good. There is a short supply in the US, and prices have bottomed out in terms of whether you take generic drugs out there. So I think clearly it's looking good for generic pharma in the next year as we look at it. They're also using, some of them have had this big blockbuster drug Revlimid from cash flows have been generated very strongly, and they've been shoring up their balance sheets because of that. So overall, we have a positive view on generic pharma, and we think it is a good tactical play.
Good tactical play, and that's what we've seen for Lupin, which has been leading amongst most of its other pharma players. We'll take a break, we'll come back, but on the other side, we'll take you to the top buy today, sell tomorrow picks from our markets analyst.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day.
Right, welcome back. You're watching India Market Close here on NDTV Profit. I'm going to quickly take it back across to Nitin and cover one of the pieces that we spoke of earlier on the show. Nitin, we spoke about ITC. You suggested how valuations were comfortable there in comparison to some of the other stocks. Now, Trent came out with a very solid set of numbers earlier this week. Stock was up and away. And we also had the likes of a Tata Consumer, decent set, in fact, slightly better, but the stock doing nothing in trade today. How should one look at FMCG and how do you view valuations?
So I think, look, FMCG stocks are not cheap, but they've traditionally been looked upon as defensives, and defensives in a market which traditionally, would be volatile or is bear market. Given that scenario, I mean, currently we are in a market which is focusing and rewarding growth, which is also seeing a lot of sectoral rotation that seems to be taking place from one sector to the other. I think it's not, unless and until there is a clear trigger, like we've seen in the case of a couple of FMCG players, where the results, otherwise most of these FMCG players are seeing a slowdown as far as the rural market is concerned. And hence, really we believe that from a stock price and value perspective and the growth perspective, they really do not present great opportunities in the short term.
Your top trades right now, anything that looks tempting to go short on? Jay, that was for you.
Oh, okay. FMCG, I'm sure you're not talking about the whole market. When it comes to bearish setup, I'm liking Wipro at this level. Wipro clocked a high on January 15th, and a couple of sessions ago, it's clocked a lower top and it started to move lower. This is looking like start of a down move for me for Wipro. So place a stop above 505 and look for a drop towards 440 to 410. There is a slightly higher risk shorting opportunity in Adani ports. You're better off looking at it through puts, so that way your risks are controlled. So I'm looking at Adani not crossing 1292, hence that might be the stop. And a target about 1089 is what I'm seeing as a short-term corrective move for Adani. These are the stocks that are looking short for me.
Nitin, what we saw with today's policy, it wasn't disappointing, because I think our expectations are also very controlled going into this policy. But very soon after the policy happened, you saw a whole bunch of banks actually sell off. Now, barring SBI and maybe PNB, the rest of the banking pack was looking weak. How do you feel about banks at this stage? Are you constructive on banks? And if yes, between private and PSU, where would you put your bets?
So, I think if you look at banks, they're really seeing more of a liquidity driven sell-off. Because FPIs have actually been big sellers, and if you see the FPI holding in banks, it's come down dramatically from over 30% that they were holding. So I think liquidity pressure continues to exert itself in terms of selling that we see in the sector. But that's not the case with PSUs, and PSUs, by the way, were under-owned in the FPI basket. So hence you probably saw they've continued to do well. So I think banking is a case where we are positive on the sector. We think valuations on the sector are very attractive. There is a short-term challenge which most banks are facing, because we have seen peak margins for the banks in the last 1 year, and now as liquidity has been tight in the system, what are we seeing? We are seeing a scenario where the public sector banks, which are sitting on surplus liquidity, and also have an ability to sort of garner deposits, and the whole credit deposit ratio is far better for public sector banks. So in the short term, we see the PSU banks doing well. I think in the longer term, I think the private sector banks are going to come back, because the more they're getting sold into from a valuation perspective, they're becoming even more attractive.
Got your point there, Nitin. It's that time of the show where we get you all the FNOQs that have come through the day, as well as how we're looking at some of the futures and options data. And I have Agam standing by. Agam, talk to us about what you're looking at.
Right, so a very, very interesting day being panned out today, and certainly a very choppy first half of the session. After that, we've had a relative quiet, as far as the markets go. But the Nifty has come off by nearly 1%. Currently around the mark of 21,700. Remember, this is a little bit of an important point. At least in the last 3 or 4 odd sessions, it's 21,700, which have now become a little bit of a base, at least in the near term. We're still seeing an increase in open interest towards what potentially looks like shorts at the moment, up around 3.6%. The bank Nifty, of course, is the other space where we have seen even more weakness, down around 1.7%. And this is, remember, despite the fact that we have seen that PSU rally. Of course, there are not a lot of PSU banks in the Nifty banking index as a whole, which is why we're seeing that weakness come through. A lot of this is on account of Kotak Mahindra, which is also declining substantially in trade today. Now near 7% added in open interest as far as shorts go in the bank Nifty. Now let's talk about the options market. And as I was mentioning earlier, we were seeing a lot of writing around 21,700 puts as far as that particular strike goes. Well, we've really seen the markets test that. It's very unlikely that we will close below this mark. Of course, we have 15 more minutes left, and highly likely that we will close somewhere around 21,800 and 21,700 in today's day of trade. That's where the expiry is most likely to end. Of course, in terms of change in open interest, as one might expect, a little more writing as far as calls go. In fact, a lot of traders took the opportunity to go and sell the 22,000 calls very earlier on in the trade. And earlier on in the day, this was before the RBI monetary policy, and they have been paid handsomely well. On the other hand, all the put writers, well, they had to a certain extent, run for cover, especially after the speech had ended. Let's take a look at stocks then and see how things are panning out there. And we are looking at Lupin, PI Industries, and Power Grid. All of them are looking at longs building in. And in terms of all the stocks which are seeing unwinding, well, we have a bout of longs unwinding in Maruti Suzuki, Delta Corp, SAIL, as well as Balrampur Chini. So keep an eye on that. And of course, now that the big event is behind us, there is a contraction in option premiums as far as the index is concerned as well. So that is something that we need to keep in mind. That said, tomorrow is the final trading day of this week, and which has been a very volatile one as well. But we likely could see a little more traction tomorrow too.
Or you could see a market that may be missing and lacking cues, so may actually turn out to be fairly sideways. But Zomato reported numbers just a few minutes ago. We will get our research to cover that for you in a minute. Numbers are actually looking really good. The stock is up 5% on back of that, but we'll come back to that in a minute. Aditya, have you been tracking Trent? I mean, this one is probably one of the best stock performers in our time. Last year as well, outstanding. Earnings were fantastic. And now the stock, only in the last 2 to 3 days, is up 30%. Even at these levels, do you think there's enough value in Trent?
So Trent is undergoing a massive transformation. We've always known Trent as the West Sides of the world. But now they have got a separate brand, which is called Zudio, where you can value buy in a very organized manner. So Zudio is really driving the 50% growth that Trent has really reported. We've been tracking this stock for the last 1.5 years, and we are seeing how Zudio is being ramped up by Trent. So my perspective is this growth should continue for Trent. However, the stock is extremely expensive, and one should be really very careful if they want to take a new entry on this stock. If somebody has this stock, then you should continue to ride this up move that Trent is really making. But for new entry, the stock remains really very expensive.
Sure, got your point, Aditya. We also have Zomato's numbers, if we can quickly have that on our screens. But let's have a look at the stock price. That's up and away. There you go. Your EBITDA number has come in at 51 crore versus a loss of 101 crore. That is slightly above, or rather quite a bit above what the street was anticipating. Even in terms of the profit after tax, the consensus suggested 86 crore profit after tax. It's come in sharply higher, 138 crore. So definitely it's done quite well. Even the revenue number is slightly better than most were expecting. 3,200 crore, we were expecting a number of around 3,100 crore. So around 3 to 4% better even on that revenue count. And Zomato doing well on the back of that. Let me come across to Nitin with regard to Zomato as well as Paytm. If I can club the two, of course, apples and oranges. But Nitin, talk to us about some of these fintech plays. Any ones that interest you in particular?
So, I think if you look at fintechs, what are we seeing in the last 1 year? A lot of them have gone back to the drawing board, worked on their business models and come back. Now, among one of the key elements that, however, the episodes that we have seen in the last few weeks and before have shown is that in a lot of these companies, corporate governance is yet an evolving issue. So you have this evolving business model, evolving corporate governance, which is not at the peak. So, we don't see too much of value, although some of these business models might succeed going ahead, but then you have to be ready for the kind of volatility that we saw associated with a fintech name last week. So I think we are sort of cautious towards that. We like the sector from a perspective of, we think these are new business models which are evolving, which are here to stay, which are going to be disruptive. However, we don't think some of the names which are listed necessarily present value.
Right, Nitin, great having you on the show today, sharing your perspective on the markets and sectors that are of your preference. Thank you. Aditya, what did you make of Power Grid? Pretty good quarter in terms of earnings. The stock is also trading higher. What is the view on Power Grid at these levels?
Unfortunately, I was not able to look at the numbers, so could not be able to comment right now.
You have a technical view on Power Grid, the stock at 276. It's off the day's high point, but still holding steady.
Yeah, that's right. Power Grid, in my opinion, hasn't completed its up move that started from, somewhere about early last year. Probably got one more sequence of higher highs to complete. Most of the PSU names, barring the banks, they look like they still have further upsides to work with. In fact, I'm bullish on bullish on Bharat Electronics, BEL, and I'm having a price objective of 210 out there. I think if the stock were to close above 187, that will convince me that the short-term correction is over and is heading towards 210.
All right, thanks for that, Jay. I want to also try and cover Zomato with Aditya. Aditya, your views with regard to Zomato. I know we've spoken about, Paytm. What's your quick view on Zomato, if you can quickly help us understand?
Zomato, I would be looking out for Blinkit's numbers. Blinkit is the one which is really a drag on Zomato's numbers, the first point. And the second point is how the average order number has improved. I believe in the number it would have improved. So we need to check that and how Zomato Gold is really shaping up. Again, I am very cautious. The stock is not really very cheap, even though they have now swung into profitability. But I will need to wait and watch how Blinkit really behaves and how the losses in Blinkit are really controlled by Zomato.
Right. Well, that is Zomato. The stock trading flat. It's off the day's high point, interestingly, but it's been a really good quarter from Zomato, at least on the face of it. They've swung into a profit after a loss that they reported in the same quarter last year. Mahima, what do you have? What are those numbers looking like?
Right, Samina. So they've clearly beaten the street estimates. The revenue is up over 15%. EBITDA has literally grown to 51 crores. The margins have been at 1.55%, and net profits has literally grown fourfold, which is at 138 crores. The street estimates suggested that the profits will be around 86 crores. However, they've reported a consolidated net profit of 138 crores. So overall, the numbers look very good. The press release is yet to come out, so we'll be getting the numbers of Blinkit losses, how they've worked out very soon.
Right, that's Zomato for you. On the charts, Jay, do you have a trade?
No, Zomato is definitely an avoid. It's going up on, precipitously losing momentum. And so it's an avoid for me completely. And probably we could have seen a short-term top around 149, 150. So a little bit. So and I'm a bit careful about such names. So that's the reason why it's an avoid for me rather than being a short. So so I'll be very careful there.
Sure. Right in the thick of earnings, you have Power Finance Corp also declaring its numbers, flashing at the bottom of your screen. Stock up just about 0.5%. We'll come to that. But, Jay, let me stick with you. Your calls for the day, BTST?
So I would look at, Bharat Electronics as a BTST and place a stop at about 179 and look for the stock to scale 190 tomorrow.
Aditya, do you like anything that you've seen that you want to recommend to our viewers?
Nothing as such. The only recommendation is we are in a roaring bull market, and in a roaring bull market, everything really moves up. You need to do a quality check and a fundamental check on the stocks that you are owning, and please make sure that the stocks you are owning have good fundamentals, so that if the market corrects as well, you don't get wiped out.
Right. Be wary and careful in this market. That's the advice coming from Aditya. Aditya, another one that I want to ask you is in terms of spotting trends. We've seen fertilizer and chemical names not doing too well, even in terms of earnings. How many quarters out do you think is a recovery for these sectors?
We've been tracking the chemical sector very, very closely, and we feel that 24, by the end of 24 is somewhere that green shoots start to get observed on all the chemical makers. It's not a short-term play. However, valuations is significantly corrected, and you have seen the only sector trading at the 52-week low across all stocks would be the chemical sector per se. So what you need to really do is, it is a very heterogeneous sector. You need to really observe the companies, the commentary of all of these companies, and then come to a view about which stocks you want to really invest in. However, in the short term, do not expect any good returns from the chemical companies. Only in 25, in my opinion, calendar year 25 is where some bit of growth could start to come back to all of these chemical players.
Sure, got your point. Aditya, I also want to try and talk to you about, some of the realty names. We've had a stellar run in realty. Is this kind of, maybe not the same return, but is the uptrend sustainable?
So, in our view, real estate sector is also a cyclical sector. We are now in a real estate upcycle where builders are getting the price that they are asking for. So in our opinion, this cycle will continue for the next 1.5, 2 years. However, the stocks across the sector, be it the developer in Delhi, be it the developer in Bombay, they are not really very cheap. They are really very expensive now. So those who have got these stocks, they can continue to hold on to these stocks. But in our opinion, now the real estate developer stocks per se are really very expensive. What you need to really do is, you need to look at the real estate ancillary stocks now. That is where some of the stocks have not rallied on the tile side of it, or some bit on the paint side of it. The smaller companies per se is what you should be really looking on, or the cement stocks as well, where we are very bullish on as the infrastructure cycle continues to really move on. So positive on real estate. However, stocks are really very expensive.
Yeah, Aarti Industries is facing some heat ahead of its earnings. Is there an opportunity to further short the counter after a 5% cut we are seeing?
See, the counter is a little bit illiquid, so otherwise I would have said yes. So it is looking negative, but considerable amount of caution there, and if you can short it with some amount of risk management in place, yes, in that sense, yes, it can go a little bit lower, somewhere close to 575 to 560. So yeah, there is still downside potential there.
Sure. If you look at Surya Roshni very quickly, those numbers pouring in, but the stock is taking a beating all of a sudden post the numbers, 5.5% lower. That's a crack that we are seeing. Also, with regard to, if I can ask Aditya, with regard to Nifty as well as IT, Aditya, do you prefer the larger cap IT, or do you prefer ER&D now that that's another space that's opened up and quite a few options there as well? Or do you prefer the mid to smaller rung IT counters?
The mid-cap IT space is a very, very large, vast space where companies do different things. ER&D is one of them. So in our view, we are bullish on the IT sector. Mind you, the valuations across mid-cap ITs are really very, very expensive. Not expensive, very, very expensive. However, we remain bullish on the mid-cap IT space. Companies engaged in the ER&D space, companies are engaged in products where they are supplying systems to the electric vehicles per se. Companies like L&T Technology or companies like Coforge. These are the companies that you should be looking for. However, these stocks are really very expensive, and you need to be very, very careful when you add them.
Jay, if I can come to you with regard to some of these IT names, we've seen good, decent run up with regard to where TCS, Infosys, some of the frontline IT names are concerned. What are you looking at now on charts? What are viewers supposed to do? What would you advise them?
See, I've been bullish on Nifty midcap IT since October 2022, and persistent has been my top pick. And so, my opinion, even the mid-cap IT names, they have done about 90% of their move. But the only frontline name I've been bullish on is HCL Technologies. And even with TCS's new all-time high, the move within the frontline IT names, the components of Nifty IT index look a little bit suspect for me. So, while TCS could have a little more upsides to work with, say something like 4,300, I'm looking at the other frontline IT names, Infosys, Wipro, and Tech Mahindra with a lot of caution. So, as long as the Nifty IT index can hold above 36,100, we can still try to be, slightly positive. But once you start seeing the index trade below 36,100, you want to be abundantly cautious. And the trend change for the sector occurs below 34,200. But until that point, you can still be positive even on the frontline name, but more positive on the mid cap rather than the frontline.
Well, that's the word coming in. Apollo Hospital also posted its earnings. Numbers aren't looking too bad. I think there's a 57% rise that we've seen in their profits. Few stocks that are not doing too badly, but the rest of the market is actually down and out. Aditya, one last question before I let you go. Have you seen Cummins India? The numbers were good. I mean, it's really, the conversation today has largely been about earnings, but what are you doing with Cummins?
Unfortunately, we've not been able to look at the numbers, so we'll not be able to comment.
Right. Jay, do you track this one?
Yeah, absolutely. A stellar stock and still got a lot of steam. That's what the charts are saying. Probably, it'll, see a correction only after crossing 3,000. So, but, in the very short term, it's extended. If you're already holding, there is, potential to trail this. But, fresh positions, I'm not so convinced because the risk reward is quite, skewed. And the risks are quite higher. The stop loss placement is quite low, somewhere about 1,900. So that doesn't, look good for fresh long positions. But as current holders of the stock, I think this got higher levels to come through.
Sure. So we'll let both Jay as well as Aditya go on that note. Thank you so much for all of your views on India market close. But as we come very close to close, let's have a look at where we are settling off for the day. We're down around 0.4%. 21,750 is where we seem to be settling, just towards close. Let's quickly have the heat map as well. There you go on the Nifty Bank as well, a 1.6% cut, just about able to stay above the 45K mark at the moment, the Nifty Bank. And that's largely because you look at the bottom rung of that, you'll see plenty of private sector banks there. Kotak Mahindra, Axis, you also have the likes of an IndusInd and ICICI among the top 10, 11 losers on the Nifty. Let's also look at some of the other sectors like FMCG. You see Britannia, Nestle. You also have the likes of an Oyster Motors, Tata Consumer among the FMCG space looking weak in trade today. You have also the likes of an Asian Paints. Among the gainers, well, PSU, bellwether, SBI seems to be the top gainer there on the Nifty 50 today, which is a positive. You also have the likes of a Power Grid, good set of numbers. Coal India, which was trading largely flat, is closing well in the green, closing strong. You're seeing good support coming in from IT. There we have it. Markets have closed. And we're getting good support from IT, TCS, HCL Tech. Let's quickly pull up the sectoral charts so that we understand which sectors have done well. There you go, Nifty Media, PSU Bank, no surprise there. Largely led by SBI, I would suppose. Nifty IT closing in the green, 0.25% higher. But Nifty FMCG, there you go. And Nifty Fin is down around 2% thereabouts. Nifty Bank also down 1.5+% at close. Also, if I can quickly look at the Nifty PSU Bank, we'll have a look at the constituents there. There you go, SBI 3.5%, Bob also up there. So the larger ones seem to be pulling the weight at least today. Canara Bank as well, 3% higher, and the likes of a UCO, IOB, where the free float is pretty low, seems to have taken a knock. So that's where we are at. If we can also have the constituents of the Nifty Pharma to kind of cap it off, there you go, the Nifty Pharma, the index was absolutely flat, but you're seeing some traction in Alchem Labs, Zydus Life on the back of earnings, of course. Lupin also up 1% on the back of earnings. But that's what we have for you today on India Market Close. We'll wrap for the day. We'll see you tomorrow. From Samina, myself, everyone who puts the show together, thanks so much for watching.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment.
all you have to do
Hello and welcome. You're watching NDTV Profit and a special today on the basis of the RBI's Monetary Policy Committee meet. Now, the Monetary Policy Committee, as along expected lines, voted to keep the repo rate on a status quo, and the stance has also remained unchanged. Governor Das continued to sound cautious on the inflation outlook because of a slightly elevated food inflation print, though core inflation has continued to provide a sense of comfort. We're looking at a little bit of a Goldilocks here going forward, with the inflation trajectory expected to ease, while the forecast for growth for FY25 remains buoyant and optimistic at a solid 7%. Now, that's according to the RBI's projection. Now, to share more of their insights and takeaways on today's policy, I'm joined by Radhika Rao and Tanvi Gupta Jain. Thank you so very much to both of you for taking time out for us today.
Thanks, Valerie.
Tanvi, I would like to begin with you. What were your quick takeaways? Is it safe to say that the policy was broadly along expected lines, or did you expect more measures like a lot of market participants on liquidity?
Sure. So, thank you. If you look at the policy, I will say largely on the rates and even on the stance, it was largely on expected lines. So there was definitely no surprises. What is interesting is that if you look into details, one, the RBI governor clearly said that the stance of withdrawal of accommodation should be seen in terms of two things. One is the incomplete transmission, and second is inflation ruling well above that 4% medium-term target. Other interesting thing was to look at that the real GDP growth projections. They are projecting at 7% plus 7% GDP growth for FY25. At UBS, we are somewhere between 6.5%. And if you look at the headline CPI inflation, I think that is largely where the consensus is right now at 4.5% because of assuming normal monsoons. But I think the biggest focus of today's policy was clearly on liquidity, because we were all hoping to hear more from the RBI on how the liquidity management is going to be. So, the couple of things which I, kind of infer from today's meeting. One, clearly, MPC is acknowledging that the system-wide liquidity, which has turned into deficit largely from September, because this is the first time since May of 2019 that we are seeing that liquidity in the system has been negative. And we also try to adjust this with government cash balances. So potential system liquidity is in surplus, but we adjust for that. But the problem is that if the government cash balances still remains elevated, it will lead to frictional liquidity mismatch in the Indian economy. So while RBI is saying that I remain nimble with regard to liquidity, I would say we do expect liquidity conditions to remain tight in the March quarter, largely because, one, there are advanced tax outflow which are due in March. And at the same time, we have normally seen, going back in history, that the currency in circulation generally picks up ahead of the general elections. But yes, I think if you ask my view going forward, I would say going into FY25, we do expect a change in policy stance towards neutral, likely in the June quarter. And at the same time, we do expect a shallow easing cycle by the RBI, possibly in the September quarter.
All right. Coming to you, Radhika, what were your quick takeaways?
Certainly, I think the statement as well as the stance, the stance extension, which is withdrawal of accommodation, I think largely were on expected lines in terms of the policy decision. I think the markets were looking for a couple of things, as were we. While they might not change the stance, we were waiting to see if their language would change, essentially that they would sound less hawkish. And I think what you saw from the governor is that essentially he's still very much inflation focused, that while he sees good things happening around the horizon in terms of Rabi crop being better than last year's levels, oil prices being choppy, but again, they haven't really gone up to the 90 kind of mark. It's still been around the $80 and usually below it, gives them some kind of comfort. But nonetheless, I think it still sounds a lot more hawkish than we would have anticipated, which essentially tells you that the market will basically reprice rate easing, policy easing expectations. And I think on the growth front, certainly we are around the 6.5 mark ourselves as well. So I think that 7% for fiscal 25 is certainly on the higher end of the consensus at this point. But I think when you read the subscript, the central bank is certainly counting on a few things. They're counting on the farm sector, farm output also faring better, in the coming year than the year that's gone by. They expect the other domestic demand indicators as well to continue firing. Essentially, the private capex continues to do well. The public capex does well, so private capex can be drawn in, as well as consumption does better. While they are also sounding a lot more positive on external trade, we would personally be a bit more cautious on that because global growth outcome this year might be weaker than it was in the past couple of years. So in all, I think the growth outcome, they're positive on the growth outcome. They're still quite cautious on how inflation is going. So given this mix, there is very little need to make a dovish turn
at this point. And I think that is what showed through the comments. And on the currency, finally, they did mention that it's still quite market driven. And despite that, the volatility is very low. And if you see the price action, has been about the 80 to 80, 83, 20 kind of range in January and Feb so fast. And on the liquidity front, I think there was, the switch between what happened in January and what happened in February caught, I guess, markets, a bit surprised, essentially because when you saw them infusing money, you thought that that they would like to reduce the deficit and take it down to neutral. But by playing on the other side, which is to drain liquidity, they're essentially shown that it's going to be a two-way operation. And we haven't, so it is not necessary that they would take it back to neutral very fast, given their overall inflation, concern. And finally, on the transmission, I think that is quite interesting because even in the post-policy conference, the governor and his other team members also mentioned that, while the external linked benchmark rates, which is essentially, the way repo moves, those rates move as well. Those that in that gauge, the transmission had completely happened. But if I were to take MCLRs, for example, we've only seen something like 135 basis points to 165 basis points kind of change. And this is just depending on the tenor. So which is way less than what the repo has moved, which is at, 250 basis points. So they would, the indication seems to be they will stay where they are till they have very clear signs of inflation coming off. And they will use, and they hope that at this time, in this duration, policy transmission kicks in at a much faster pace. Essentially, it's a nudge to the banks as well to transmit a lot more of the policy tightening that's happened at the headline level.
Okay, that's very concise, Radhika. Thank you so much for that. Tanvi, I do want to touch upon the external outlook for FY25. We do see a little bit of a cloudy outlook on the external front, despite in the Indian economy showing fairly strong signs of resilience, and most high-frequency indicators and even the advanced estimates surprising a little bit on the upside. But I do want to understand how much can we expect the external outlook, how much of a risk can we expect the external outlook to pose, especially in the coming fiscal?
Absolutely. So if you look at our UBS estimate for global growth, we are actually seeing a 50 basis point slowdown in the global economy, largely led by China and US. Now, if I look at India's sensitivity to a slowdown in G2 GDP growth, so I would say India, Indonesia, and China, as per our analysis, are the low beta economies. And for India, the beta is less than 0.5. So it's not that India is decoupled, but if the rest of the world is slowing down, India will get affected. It's not immune, but the spillover impact will be a lot lesser than what you might see in other emerging market economies. So at this point, despite external headwinds, we were expecting Indian economy to grow at 6.5%. But in case the global economy surprises on an upside, because we are already seeing US data so far has been strong, and the rate cut expectation also in US has been getting pushed forward. In that case, I think there could be more upside to even global GDP forecast that could have some implications on India as well. But as of now, I think I really don't know what the RBI is projecting, but with their 7% headline GDP growth, definitely at the upper end of the consensus forecast, and we still at 6.5%. We really need to see, is it something more optimistic global economic outlook, which RBI seems to be have priced in. So I would say India is not immune to global slowdown, but the spillover impact is a lot lesser in India because of our lower beta to global GDP growth slowdown.
Okay, got it. All right. Radhika, coming back to you, I do want to ask you a little bit more about the economy as we're seeing now. Like all of the past year, we've seen very mixed trends, especially coming in from the rural sector. Today's commentary appeared to indicate, and that's also been the case for a while now, there has been conversation about some kind of an improvement being seen on the rural front. And today's commentary was pretty much in line with that commentary. So what's your reading of the rural sector, and can we expect that to push up consumption as well overall?
So the rural sector, I mean, we track some of the high frequency numbers for the urban demand and rural demand. And what we have seen, at least in the past 8-9 months, is that there is quite a bit of divergence still in terms of how urban demand is doing, which is doing better than how the rural counterparts are doing. And I think that has got to do with the fact that, inflation was higher there. Of course, in terms of the impact of weak weather on, and when we speak rural, of course, we have to classify whether you're talking about farm rural or non-farm rural, right? Because the non-farm rural, which makes a bigger part of rural, also has backward linkages to the urban sector. So now the farm community in particular, certainly the fallout of the bad weather conditions has been much higher. Fortunately, Rabi crop is doing well. Reservoir levels are still catching up. But I think when you look forward, there are quite a few things that one needs to wait and watch. But I think domestically, we have to watch for how the monsoon pans. We will start getting, in a couple of months, early indication of what the southwest monsoon again is going to look like. I think El Nino is expected to at least last in the first half of the year. And at the same time, you will also know how commodity prices are faring. If you pan back to the budget, the interim budget, of course, which was tabled, a week back, what you saw in the contents there was that if I were to just add a few of the relevant ministries, to get an idea of how much of money was set aside for rural development, it was not very different from what it was in fiscal 24. And certain sections obviously haven't been, are not expected to grow by much. And on the subsidy front as well, you've seen a lower allocation towards food. You've seen also lower allocation towards the subsidies, to the fertilizer subsidies as well. Now, these are all premised on the fact that global commodity prices will remain under control. Now, if that goes up, particularly gas or any of the related commodities, you would see a higher outlay required on the subsidies front as well. So net, I would think, yes, I think even when we look forward 12 months hence of the year fiscal 25, one does hope that the rural demand catches up at a much faster pace, and bridges the gap with urban demand. And for that, we need not only domestic things to fall into place, but also globally, some of the spillover risks to be under control. But insofar as, here and now is concerned, certainly that gap still remains, but it's narrower than it was in the 7-8 months previously.
Got it. All right, with that, it's time to slip into a very short break, but we'll be right back, so stay tuned.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. You're watching NDTV Profit. We're in the middle of a special show for the RBI MPC, which has concluded a very short while back. And I'm in conversation with Tanvi Gupta Jain and Radhika Rao. So coming back to you, Tanvi, so today, another interesting aspect was that we saw Jayant R. Verma vote for a rate cut, and in continuation we've also seen a descent in stance. So what are you reading into that going forward? Can we expect a slight difference in opinion to gradually increase here on, even if we do not expect a rate cut right away in the next policy?
Absolutely. I think that was a very interesting observation that one MPC member actually went ahead and asked for a rate cut. I mean, we have not been saying any of the member asking for a cut in rates, right? And it was clearly a 5-1 policy stance. So if I look at going forward, I would say this divergence amongst the MPC members could go up over the coming months. So if you look at our policy rate cut call as well as a stance call, at this point, I'm more inclined towards the June quarter stance change. And in September quarter, maybe a start of a rate cut cycle once the Fed pivot and we start seeing inflation, specifically in the September quarter, coming towards that RBI's medium-term target of 4%. And that gives it enough room to go ahead with a 50 basis point shallow easing cycle. But as you rightly mentioned, this is the first time we saw a descent, and going further in the next policy, I would expect that the descent or the divergence amongst the MPC members to only go up from the current number which you saw.
Okay, all right. So Radhika, I do want to ask you the same question. When are you penciling in a change in stance as well as a rate cut?
It's certainly interesting that at least one of the policymakers already saw room to cut rates at this point. We essentially need justification for why there would be policy easing brought forward, and I think probably the reasoning is more to do with inflation at this point, that it's come off highs, though it was largely driven by food, when we came from 7.4% back towards 5%. I think what you've seen in the global central banks as well, that they have spent a good part of the first month of 2024 essentially pushing back rate easing expectations that markets have really brought forward. They've been very dovish. You saw that in the US yields, for example. You saw that impact on dollar index as well. And since then, you've seen both actually bottom out and pick up again. So I think RBI is also in that, partly in that camp with today's comments. Seems to suggest that certainly there are no hurry to ease. And if you look at, again, looking forward-looking view on fiscal 25, with inflation forecast at about 4.5%, and the policy rate at about 6.5%, it neatly leaves about 200 basis points, more than that, gap between the policy rate and the inflation. So at that point, I think there is sufficient justification to say that this kind of real rates you could keep it at an average at about 125 basis points, and thus the room opens up to lower rates gradually. For us at this point, we do expect the Fed to move in the second half of the year, and I would think around the same time the RBI could move as well. We have about 75 basis points of cuts. And I think, again, when the room for real rates opens up, that's when they would tend to act. Because on the growth front, certainly the numbers today seem to suggest that they're very, very positive on growth. And with a 7% growth forecast, that there's no growth-driven risk which they need to respond to. So from that angle as well, I don't think there's any urgency to take a very dovish pivot in our. But of course, before they actually cut, there'll be a few more changes that will be held. We think we'll get clarity on the liquidity stance, which is whether they would like to hold it near neutral or in a small deficit. Thereafter comes the stance change. I think if markets were anticipating a stance change in April, now it looks closer to it's in June. And then thereafter you would see a change on the rate front as well. But certainly I think there is a lot more moves to be digested before we actually get to the cut per se.
Absolutely. Going by the commentary today, it's a long way before we see a rate cut per se from the RBI. But Tanvi, I also want some help in understanding. So, it's been a while since the conversation sort of shifted to when a rate cut will take place. But especially in case of India, we're not expecting a very deep rate cut cycle. It's expected to be a shallow cycle. And I kind of want to understand how you're looking at it vis-a-vis what the economy is looking like. We've seen the economy stay fairly resilient, and after today's commentary, the RBI also clearly holds that view. How much of a difference are we expecting the rate cuts to be able to make in FY25? How much of a fillip is it expected to give economic activity?
very, very valid question. In fact, if you look at the real economic activity, when RBI themselves are projecting a 7% GDP, I mean, they are projecting a very Goldilocks scenario for India, 7% GDP growth and a 4.5% CPI.
Year 24-25, as passed by Lok Sabha, be taken into consideration. Again, I also move that the bill to authorize the payment and appropriation of certain further sums from and out of the Consolidated Fund of the Union Territory of Jammu and Kashmir for the services of financial year 23-24, as passed by Lok Sabha, be taken into consideration. And finally, sir, I move that the bill to continue the existing rates of income tax for the financial year 24-25 and to provide for certain relief to taxpayers and to make amendments in certain enactments as passed by the Lok Sabha be taken into consideration. Thank you.
Motions moved. Motion for consideration of the appropriation vote on account bill 2024, the appropriation bill 2024, the Jammu and Kashmir appropriation number 2 bill 2024, the Jammu and Kashmir appropriation bill 2024 and the finance bill 2024 are now open for discussion. Any member desiring to speak may do so, after which the minister will reply. Shri Jawahar Sarkar, not present. Shri Sanjeev Arora.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
हर गड्डी इस बार SSF करके किन्नियां मौतां घट गईयां हर महीने का डाटा दिया करांगे जे 50% भी घटा लिया 3000 बंदे दी जान बच जूगी जी 3000 बंदे दी आपां पंजाब नूं सब तो सेफेस्ट स्टेट बनाउणा है
The Sensex and Nifty end 1% lower as banks drag after RBI maintains the status quo. But the Nifty PSU Bank Index closes 2% higher, ends in green for the second session. RBI Governor Shaktikanta Das says that the central bank gave Paytm enough time to respond, but it failed to do so. Adds that the RBI would also issue FAQs next week on the central bank's supervisory actions against payments firms. The RBI sticks to its stance, indicates a long wait for a rate cut. ITC's largest shareholder, British American Tobacco, looks to sell stake in the company. Stock ends 4% lower. Equity fund inflows jump 28% to a 22-month high in January, driven by investments into small and multi-cap schemes. Hello and welcome. You're watching The Reporter on NDTV Profit. Let's go straight to the markets. The Nifty and the Sensex end in the red after the RBI decides to maintain a status quo. Let's go across to Samina Nalwala for a wrap-up of the day's market action. Samina?
It was a weak day of trade on Dalal Street. The lack of dovishness from the RBI led the markets to actually decline in trade, and the markets closing at the day's low point. The Nifty had a big fall, over 200 points off on the Nifty in today's day of trade, inching closer to 21,700, which is where the markets will find some support. Bank Nifty as well felt disappointed. No commentary on liquidity, no change in stance, and no rate cut meant that bank stocks declined in today's day of trade. An 800-point cut was seen on Bank Nifty, closing at levels closer to 45,000. Broader markets performed slightly better than the benchmark. The mid-cap index did see a cut of 40-odd points. The small-cap index also declined quite sharply in the last hour of trade. Up until the last hour, remember, the small-cap index was actually trading with a positive bias, but finally going home with a cut of 0.4%. So some disappointment on the street on back of the lack of dovishness from the RBI led to broad-based selling on the street today. Also, main sectors or key sectors, like we call it, were all down over 1% in today's day of trade, with FMCG, consumption, banking leading the way down in today's trade. Well, that's of course how the breadth of the market played out. The bias clearly was on the downside, with most stocks going down as compared to going up. The top loser in today's trade was ITC. ITC was seeing some selling pressure today on back of reports that British Tobacco is looking to par its stake in ITC. Well, you also had Britannia post yesterday's earnings continues to see selling today, down over 3%. Nestle as well, for the same reason, declined about 3% in trade. Well, Kotak Mahindra Bank had a rough day, and so did Axis Bank, ICICI Bank, HDFC Bank. So private sector banks have actually looked quite weak over the last few days, continue to see selling pressure in today's day of trade as well. Well, but what is drawing everyone's attention is SBI. After a very sharp run-up yesterday, the stock added another 4% despite and ignoring the cues that the RBI gave. PSU Bank especially saw a little bit of gains between SBI and PNB Bank. OMCs did okay. Power Grid a strong run on back of solid earnings. So that was pretty much how the markets were. The big RBI meet is now behind us. Markets will go back to focusing on global cues and earnings from tomorrow.
Thanks a lot for that, Samina. Now, the RBI Governor, Shaktikanta Das, also said that the central bank has given Paytm enough time to respond, but it failed to do so. Now, let's go across to Vishwanath Nair for what the commentary coming in from the central bank on Paytm was. Vishy?
Right, Pallavi. So as you said, there was going to be some amount of discussion on Paytm when the RBI monetary policy announcement happened and then the press conference followed. So essentially, the governor said that any kind of action that the regulator takes on any entity, that is followed only, that is preceded always with a lot of bilateral discussions between the two entities, between the RBI as well as the regulated entity, and that the RBI typically gives a lot of time to the regulated entity to fix the problems that the RBI has highlighted. Now, in specifically Paytm's case, the problems were highlighted first in March of 2022. So nearly 2 years later is when the RBI has taken that action. So there is, of course, that much amount of time that has been given to Paytm. The other important factor that needs to be noticed here is the RBI specifically said that any action that it takes, it is taking with considering the appropriate size of the problem, and that's how that action follows. So it's not like there's some kind of disproportionate sort of action that the RBI takes against any entity. It only matters if the problem is big enough. That's when the restrictions also come in very strongly. The RBI specifically assured, the RBI governor assured all depositors and users of various payment firms that you will be protected and that the RBI is going to stand up for you if the service provider is not doing right by you, if they're making any mistakes or if they're committing any non-compliances, then of course the RBI will step in and take required action. As far as startups and fintechs go, the RBI was very, very clear that they want to encourage financial innovation. They do not want any kind of problems to come for the fintech industry. Having said that, if there are non-compliances, the RBI will act.
Thanks a lot for that, Vishy. Now, RBI Governor Shaktikanta Das also indicated that the restrictions imposed on Paytm Payments Bank have come in after bilateral engagements did not lead to corrective actions. So also, let's listen in to what the governor had to say about Paytm Payments Bank.
We give sufficient time, we give sufficient time to every regulated entity, every entity that is supervised by the Reserve Bank to comply with the requirements, the regulatory requirements. We give sufficient time, and sometimes, as he pointed out, sometimes it may even look more than sufficient time. And we would not like to act, we are a responsible regulator, we are a responsible supervisor. If everything had been complied, I'm talking about in a general sense, why should we act? I mean, after all, we have a responsibility. It's a responsible institution, RBI. So that's how it is, yeah.
As you know, as a matter of policy, we don't comment on individual entity or actions that we initiate in such cases. But that anyway, since this question is on the uppermost of mind of most of you, I think I would like to say 2-3 things, essentially to set the context. While we don't want to be discussing the individual details here because that will not be proper. In terms of context, as you all know, that this is a supervisory action on a regulated entity for a persistent non-compliance. Second, such supervisory actions are invariably preceded by months and at times years of bilateral engagement where we not only pointing out the deficiencies, but also provide more than adequate time for them to take corrective action. Third, of course, is in terms of, as a regulator, it's incumbent upon us to protect the interest of the ultimate consumer and thereby protecting the stability of the financial system. So these actions have to be seen in that particular context. Coming to the second part of your question, what lies ahead? As part of MPC, we don't give a forecast in these matters. So I think you will have to wait. And of course, feedback we have been getting, we'll work on And as a responsible regulator, suitable steps will be taken to ensure that the customer inconvenience, if any, is minimized. So we will take care. I think with that, we can give a rest to this question and then move on to MPC is my request.
That was a slice of the extremely interesting commentary from the governor and the deputy governor on Paytm and Paytm Payments Bank. Broadly, in today's policy, the RBI, the Monetary Policy Committee rather, continued to maintain a status quo along expected lines. It also said that the transmission of rate hikes is not complete. Mimamsa Verma has more on this. Mimamsa?
Yeah, hi Pallavi. So RBI today in the monetary policy pointed out that the transmission of interest rate hikes is not yet complete. They talked about why transmission is a problem as of now. So while rates on deposits reset much faster, on the lending side it takes a little bit of time to pass on the higher interest rates because the proportion of loans linked to external benchmark, which are the EBLR loans as popularly known as, the proportion of those loans is less than 50% in the banking system. While private banks have their loan book linked to EBLR, state-owned banks account for a larger portion of loans linked to MCLR. Now, as the cost of funds rises for a bank, that is how the MCLR loans are also repriced. The RBI has also emphasized that there has to be a need for better transmission of the 250 basis point hike in the interest rates between May 2022 and February 2023, which is why they have maintained the stance at withdrawal of accommodation. If we look at numbers on the outstanding loans, the weighted average lending rate rose 113 basis points, while the domestic term deposit rates on outstanding deposits increased 180 basis points. So the incomplete transmission of policy rates was another thing that they pointed out. So the incomplete transmission of policy rates is a function of adjustment in the bank's net interest margin to maintain market share on the incremental credit, which is what the Deputy Governor Swaminathan J has mentioned. To quote him, in the hiking cycle, banks who are in anxiety to maintain their market share in incremental credit also adjust their margin, which also impedes the complete transmission of higher interest rates by